real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts?
Fair point.
Pick Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now... You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and it's looking like an interesting morning, notwithstanding everything happening above the mountains of Lucerne right now in Switzerland, where people are wondering, are they speaking? Are they shaking hands with each other? What's happening? What's not happening?
What do you guys think?
No, I think the talks are very much on. It's more
The talks
bluster.
are on. The question is what happens between Israel and Lebanon in all of this, right? Because that's a problematic factor.
But that's going on. I think it's, frankly, I think it's more bluster. So officially, one round is done. The Iranian media seems to suggest that they walked out because, I don't know why, while J.D. Vance is in this negotiation, US President Trump would put out posts threatening Iran, who's in the talks. So then they said, hey, we're not going to talk anymore. They've refused to shake hands with J.D. Vance.
Yeah.
But remember, for the Iranians as well, they have to have an image they show to the domestic audience.
Yeah.
So I think it's bluster. I think the talks are on. I don't know. That's at least what the implied is showing. What Brent is also up to about 81.
Nothing dramatic.
Nothing dramatic.
Cross fingers, we don't need drama anymore.
I agree.
We need some resolutions.
I agree.
Yeah. So I think that's exciting, and a lot of news flow in terms of specific stocks will be in focus today.
Yeah, I think that sums it up, frankly.
Yeah, more than anything else. And in global cues as well, remember Friday US markets were shut. So the focus is more on what's happening with futures. And day one of Iran-US talks in Switzerland have ended. Iran has walked out of talks and has refused a photo op with J.D. Vance after Trump's comments. It's unclear whether talks will resume or not. Here's what President Donald J. Trump said on Truth Social. Said Iran must immediately stop their highly paid proxies in Lebanon from causing trouble. If they don't, we'll hit Iran very hard again, just like we did last week, only harder. The Iranian Foreign Minister Arakchi on X says a tireless Pakistani and Qatari mediation has delivered major progress to end the Lebanon war. Oil and petrochem exports are waived, blockade lifted, some frozen assets released, and major reconstruction and development plan launched for Iran. So they're not hearing very, very negative statements there. US futures were down, and we'll just pull up those US futures for you once again, but mildly. Oil prices did rise after Trump threatened Iran, even as talks began in Switzerland. Brent was as high as 81 at one point. Right now, back to 79. So again, that's not going to be the dominant factor, I suppose. Let's pull up Asia, the markets that are open today. And you'll see the India implied also fairly positive. Asia Nikkei is up in the green, Hang Seng and Shanghai muted today. The India implied showing a 71-point uptick. William Lee, Chief Economist, Global Economic Advisor, is joining in this morning. William, very good morning to you from where we are. Do you think that progress is happening? It may be clouded with a lot of statements which shows that there's a back and forth, but the two sides are in the room.
more importantly, the shooting has stopped. The Strait of Hormuz is supposed to be open, where we're seeing some more than a trickle of oil flow, and the markets, I think, are treating it exactly as that. It's no surprise that there's a lot of posturing, especially by the Iranian government, because the Iranian government right now is quite fragile. We don't know who is truly in charge. We don't know what sides are more powerful than other sides. I suspect the National Guard, the more radical elements of the Iranian government, are trying to assert themselves to ensure that the hard lines are being heard around the world. And I think President Trump is saying, hey, let's get serious. Lebanon is off the table. Let's get rid of the talk with Lebanon. Let's get rid of the actions with Lebanon and focus on Iran and the Strait of Hormuz. And let's try to get the reparations going. Let's try to get a reconstruction effort to rebuild Iranian society, bring it into the 21st century. And I think that's the kind of motivation I think that's going on right now in terms of the talks. And I think as much as Pakistan has done a great job in bringing both sides together, my own view is that they are themselves perhaps proxies for China, because China itself really needs that Strait of Hormuz open more than anything else. China has built up an enormous stockpile of strategic petroleum reserves, so it really can outlast a long blockade. But China's neighbors certainly cannot, and India certainly cannot. And I think one of the things that we have to remember is that China really depends upon the goodwill of Asia, because China is so dependent upon Asia now for its export markets. So I think the geopolitics of this is that the interruption in talks is a lot of posturing. And I think when the serious costs and benefits are weighed, Iran has got to realize they're better off dealing with the U.S. and accepting the kind of reconstruction that the West is offering.
William, several good points there, and we've seen the reaction in commodity, specifically in crude. I do want to ask you about increasing murmurs, though, about the artificial intelligence rush of capital, right? Because now more and more people are saying, okay, NVIDIA has to do something completely unprecedented for the street to be surprised again, or they're questioning certain valuations. Do you think that in the near term this will come to a head?
It is already coming to the head in the sense that people are asking, do we really need the very powerful NVIDIA chips in order to do the cloud computing to generate the AI results and tokens that we need to fuel artificial intelligence? Or can we do more local computing? Can we have more smaller, local, specialized models do more of the work, in which case we don't need the large data centers that a lot of money has been put into? And I think NVIDIA itself is coming back with an answer saying, oh, you want smaller computers with powerful chips? We can make those too. And I think you see that NVIDIA is actually splitting its strategy in a way that allows them to cover localized computing as well as large data center computing. And now I think the economics of tokens has to come to a rest and say, how many tokens do we need and how much do they cost, and what exactly do we need to actually show bottom line improvements in productivity? And more importantly, I think for policy, especially Fed policy, when we implement AI, is it truly going to replace people or make people more productive and enhance people's skills so that companies actually hire more improved worker productivity? Or are they going to hire more machines to get that productivity? And that's the question that still hasn't been answered.
Okay, William, one would reason that the Brent pricing is the clear giveaway of how the world thinks about what stage is this conflict in. And the fact that Brent is refusing now to really zoom higher seems to suggest that even if there are these, as my colleague Tamanna put it, blusters on, the resolution is most likely the outcome over the course of the next 1 day, 1 week, or 1 month. Would that be a fair assumption, and should portfolio positioning therefore be done with that assumption?
I think that's a great point. And in fact, that is the key point. The fact that the oil markets are showing that there's a lot of bluster, but in fact, things are improving. But let's remember, Brent was over 100 not too long ago. And the fact that it's come down and has stayed down, despite the statements by President Trump and the posturing by the walkout of the Iranian negotiators, I think the oil markets are saying this is just a lot of talk and posturing for TV, and also for Iran's internal audience. And in fact, what we really are probably going to be seeing going forward is some resolution to the blockade and some resolution to the oil supplies. Now, let's remember, there are alternative oil supplies. There are alternative avenues to avoid the Strait of Hormuz being put in place as we speak, with more pipelines and other facilities being put in place in the Middle East, and more crude and natural gas being pumped out of the United States toward Asia and European markets. So substitutes are coming online, perhaps not fast enough, but I think the markets themselves are saying, hey, we don't have that much to be afraid of in the immediate future. Because if we did, you would see over $100 in oil.
Alex spoke to you about the whole AI play, and I just wanted to reference, William, a statement made by Ashwath Damodran. He's, of course, professor of finance at NYU Stern School of Business, and his comments are looked at very, very closely. And in an interview, he says that the AI phase could be a bit of a bubble. He's saying that's the real difference between the dot-com boom and bust and the AI boom. We don't know whether there'll be a bust. History suggests there will be a bust. The dot-com boom and bust had no huge capital expenditure in that cycle. In fact, there was very little traditional capex or even R&D driving it. People started apps. They basically started going on it. That's the AI one, has been the biggest infrastructure run-up I've ever seen in business. You can go back and compare it to the automobile business 100 years ago. There's amounts of money that's being put into AI capex, which is immense, which means that when the correction comes, the pain will be more intense. I just thought it's noteworthy this morning, William. Any views on this? Because now some voices beginning to question the extent of capital expenditure in AI and what it actually does.
I'm a big fan of Ashwath's work, and I certainly think he's a very credible voice out there. But I think the real difference that he did not point out, which he knows very well, is the difference between the dot-com bubble before was that many of those companies were not making any money. In fact, they were losing money. Right now, we have the AI-related companies making money hand over fist. They are making profits, in fact, enormous profits. Now, the question that you're asking is the real one is, do we need as much capital expenditures put into data centers, or do we build more localized computing and use more smaller AI models? As I said before, that is where I think the AI trade is coming to a head. And more companies are asking, can we use smaller models with smaller computers, perhaps also made by NVIDIA, and using Broadcom chips and the chips that are made in the large data centers, but a smaller scale version of those computers for us to do localized computing that will get us most of the way there toward improving our productivity. That question, I think, is leading toward yes. And I think what you're going to see is expenditure switching, not expenditure reduction in terms of CapEx. We'll be switching for more localized computers, more localized facilities, more localized, smaller scale computers that'll be able to do a lot of these AI computations.
It's certainly something to pay very close attention to, William, and I think this is a story that's going to pan out over months and years, perhaps not necessarily days. Thanks so much for taking the time.
Thanks for having me.
All right, let's talk about what happened in Indian equities and then set you up for the day's trade. It was, by and large, a very strong week for Indian equities, and broader markets outperformed. You had the bank Nifty that underperformed, but the index that was worse was, in fact, the Nifty IT. So I actually tabulated that. The Nifty 50 gaining about 1.7% through the week, 4 days of gains, 1 day of losses. The Nifty Bank lower than that, 1.5% of gains. Look at the Nifty Next 50, is a large cap index as well, 3.3% 3% of gains, and more or less similar for the mid-cap and the small-cap indices, 3.2 and 3.7% respectively. The IT index losing ground because of that terrible Thursday, if I'm not mistaken. That was when you lost quite a bit of ground for the Nifty IT. But Friday saw a cool-off after 2 days of range-bound action for the benchmark Nifty 50. It was pretty narrow ranges on Wednesday and Thursday. And then you had the Nifty 50 that fell to its lowest intraday level around 3 p.m. and then saw a sharp recovery in the last hour. In fact, inflows on account of the rebalancing of the FTSE have aided that late up move. You had foreign institutions that net bought equity worth close to 4,859 crore rupees or thereabouts, and domestic institutions net selling to the extent of 1,160 crore rupees. The broader markets actually saw a sharper recovery from the day's low as well, and both the mid-cap and the small-cap index gained 1% from the intraday low. They ended in the green, with the mid-cap index gaining about 0.4%, small-cap index ending with gains of about 0.6%. The broader market gauges are now gained for 6 straight sessions, and that breadth at the end of the session was even Stevens, having improved from an earlier point of the day. So it bodes well that we ended at the high point of the day on Friday.
Yeah, and an interesting stat for last week, guys. For 4 consecutive sessions, a minimum of 250 stocks have ended more than 3% higher.
Wow.
For 4 consecutive sessions, which is great, right? So in some sense, by the way, when the 2 sessions before that, there are actually more than 500 stocks. But still, for 4 consecutive days, over 250 stocks ending higher is actually a pretty good stat from a market breadth perspective. And what is not a good stat is that on a day like Friday, when everything did well, right? Or in a week when everything is done well, every sector is ended in the green, but for IT, it takes something special to really end low and lower by 2% in a week that every sector has risen. So from a trading perspective, maybe IT is just out of the window. So what's the trade setup like, right? I mean, maybe the markets pause a little bit due to the Middle East uncertainty, but likely not crack, if you will. And the implied is not even showing that per se, but even if that were to be the case, very unlikely that the markets will have a crack. We are closer to pockets or points in time when markets would suggest that, oh, we are in an extremely greed zone or extreme greed zone, but I don't think we are there as yet. So maybe there is some more proof, some more upside possibilities here. And the key is this, the Nifty Small Cap 100, which has seen a breakout from key technical levels, and maybe the sector or maybe the space to watch. Frankly, between now and the Q1 FY27 results season starting, which is about 2 to 3 weeks, 3 weeks ideally, if you will, you don't have too much of damaging news flow domestically that you anticipate. The rain gods have arrived in Mumbai today with full fanfare, if you will, right? And therefore, I think things are looking okay for the next 2 or 3 weeks, save for any macro hiccup. And therefore, very likely that this small cap up moves that we're seeing and the breakouts that we're seeing could well continue. It's not a bad day, guys. It's not a bad week. It's not a bad Monday. Hopefully the activity specifics on the upside continue.
Yeah, very pleasing to wake up to thunder and lightning this morning. And even if you're stuck in traffic right now, it's okay. At least the rains are here.
Yeah.
For today, I think grin and bear it if you're in Mumbai. Okay, some of the factors today. Despite a Friday sell-off driven by the IT sector, the Nifty did manage to defend 24,000. And that's important. The Nifty needs to now defend 23,800 supports amidst likely consolidation. Below this, it can raise the possibility of a fall towards 23,700 or 23,600. Sustaining above it, which is hopefully what will happen, can drive the index towards 24,200 to 24,300, followed by 24,500 as a key resistance. For the Bank Nifty, it's snapped its 6-day winning streak in trade on Friday, but staged strong second half recovery from intraday lows and continues to trade comfortably above all major moving averages. Immediate support at 57,250, 57,440, 57,300 to 57,200 are immediate resistance zones as well. 57,780, 57,860, 57,990 are some of the levels you need to look at. Sustained move past 58,100 to 58,200 could quickly trigger a rally towards 58,600 and 59,000. Thought I'll just quickly go over this note from Rhythm Desai. the Morgan Stanley India strategy as well. He says that India is entering a strong earnings cycle with medium-term stock market returns that could reverse its trailing underperformance. He finds India's structural premium to be justified by scale, growth, domestic capital formation, macro buffers, and institution building. He believes the entrepreneurial focus on the balance sheet will remain the secret sauce for superior equity returns, and earnings could compound at more than 15% in the next 5 years, putting the overall equity market at 10x FY31. Sectors that seem to have these ingredients include financials, that's lenders, insurers, asset managers, exchanges, depositories, and wealth platforms which leverage different parts of financial deepening. Consumption, especially subsectors undergoing premiumization, industrials, energy, defense, fertilizers, semiconductors, and data centers, among others. IT services, which is currently disrupted by AI but could be resurgent when the world monetizes token spend. So, a very optimistic view coming in from Morgan Stanley this morning, which you can keep in mind. But let me go across to Puneet for the FNO setup this morning.
Well, thank you for that. It's been an interesting last week because, as you mentioned, despite the pressure, maintaining that 24,000, hopefully this week will be similar as well. But when you look at the Bank Nifty, that is where the strength has lied for the markets over the last 2 weeks, where we've comfortably, maintained that 57,000 level. 58,800 is an important level for the next leg of rally towards 60,000 yet again. But all signs will be yet again as we start the month of July, because you'll start to get those quarter one updates as well. So the Bank Nifty will continue to remain in focus as well as showing strength again at this point of time. Cash markets also, on Friday saw that almost a good buying number coming in from foreign investors, and explains that we were able to maintain the 24,000 despite sustained pressure on the IT index as well, and IT related stocks too. While we've seen some recovery in the mid-cap IT names, continue to monitor those as large caps continue to be under pressure. The other important thing to monitor has been the index long. Now, despite what we've seen in the last week or so, geopolitical certainty has come through, and then yet again not so over the weekend, but index long still not raging through close to that 13% for foreign investors. So 87% still shorts being maintained in the system, and that's very well visible across open interest distribution level that we've seen. The 24,000 continues to have both active put and call interest. 24,500 is the safe out of money call option that traders continue to plow money in. But that level will decide essentially where we go in the near term, because seems to be that we'll be at this level in the near term. So the 24,000 active open interest both for calls and puts continue to be there at this point of time. Last week has all been about benchmarks, barring IT sector specific stocks, and you saw that in Persistent as well as Muthoot Finance, which both saw a build-up of shorts, while some recovery seen in Persistent at the fag end of Friday. And in terms of open interest losers also, not too stock specific action, but Exide and Bandhan Bank were one where longs were being unwinded. So overall, a very interesting week yet again as we go into quarter one updates, but the benchmarks will continue to be in focus yet again.
Okay, let's talk about stocks in focus this morning. I'm starting off with Tata Motors CV on my watch list. They have orders for 3,400 electric commercial vehicles across segments. That's an update they've put out. Orders include 2,000 SCVs and pickups, 900 trucks and 500 buses. This is cutting across a diverse range of applications from e-commerce, logistics, FMCG and FMCD, distribution and intra-city mobility. The company already has over 17,000 Tata e-SCVs, 3,800 EVs, buses on the roads showing scale. The company has sold about 6,000 units in FY26, up from 4,291 units the year before. So it's an update, but it's a positive update. Watch out for that stock. RVNL is the other one. The order size is what's interesting. They've received an order worth 2,977 crores from NMDC for setting up buffer stockpiles and blending yard of 10 MTPA handling capacity at Vizag in Andhra Pradesh. The project aims to strengthen NMDC's ore handling and logistics infrastructure at Vizag. Order will be executed over 42 months. So right now the company order book stands at about 99,000 crores as of March 31st, 2026. And the company's order book provides robust revenue visibility for the next 3 to 4 fiscal years. The contract also expands the company's civil engineering footprint in non-rail industrial segments. The third one I'm looking at is Aurobindo Pharma. So HSBC has a note out today. It maintained a buy with a target price of 1,580, saying it's marching towards a $2 billion US sales goal. Execution of Lanet's complex generics portfolio and better capacity utilization is key to deliver deal synergies. Of course, this Lanet deal was announced late last week, and now this is a very positive outlook coming in on it from HSBC. They're talking about the US launch of another drug, Advair. It's an inhaler, which will be a key catalyst as well. So in the pharma pack, watch out maybe for Oro Pharma once again. It's already up about 4% on Friday, but
Yeah,
could be more pop there.
Yeah, and particularly towards the end of the session, it was one of those that gained quite considerably. I wonder if Good Luck India, which is a sub 5,000 crore market capitalization company, will have a good day. By the way, on Friday as well, this is a stock that gained quite considerably. The latest update is that it's gotten an order worth 255 crore rupees, and this is for long-range empty shells. Now, of course, this is an artillery order, 155 empty shells to be ready to fill. That is, this is ordnance essentially, right? And it's great that Indian companies are now involved in that supply chain that is making artillery and ordnance for the defense services. The buyer is not known for obvious reasons, but the order is set to be delivered within 10 months. The stock was up over 5% on Friday. I wonder where it goes today. Pay attention to it. Another order win from Bharat Forge. It's signed a 425 crore contract with the Ministry of Defense. This to supply gas turbine generators to the Indian Navy. The generators are for onboard power generation on Kolkata class ships, and the contract is set to be executed over the course of the next 5 years. Quite a bit has been said about Bharat Forge turning things around over the last quarter or two. This is another step in that direction from the defense perspective, or rather defense orders perspective. Texmaco Rail and Engineering, this is also a letter of intent for an order worth 253 crore rupees. This from JSW South Rail Logistics. The order is for manufacture of rakes as well as wagons to be completed over 13.5 months from the commencement of the work order. But it's good to see quite a few companies winning orders. I think the next thing to watch, and we've got mostly order wins, etc., that we've been talking about, guys, but I think the business updates will come soon enough, perhaps next week.
Yeah, 1st July onwards, right, in some sense. So, I think should be interesting. By the way, adding to that order win, one more. Power bank.
Yeah, it's a big one.
It's not an RVNL, but it is good enough, right? Let's put it that way. So Power Mech has won an order worth 1,008.9 crores to be precise from JSW Thermal Energy. Now, why this is important, Alex was referring to that maybe, is that the FY26 revenues for Power Mech were 6,100 crores and the FY26 order inflow as a year was 7,210 crores. So the fact that a single order is 1,000 crores is, from their order book perspective, a large one for Power Mech for sure. Let's see if there's a bit of a reaction here. Remember, a couple of them which got the order wins moved up a bit on Friday. This one hasn't. So let's wait and watch if it does. On the flip side though, for stocks like LG, Whirlpool, maybe some of the others, Xiaomi is entering the Indian home appliances market meaningfully, and that could heighten the competitive intensity. I don't think this is the, in the 2000 to 2010 decades, Reliance, if it entered a business, people used to say, oh, could it become a problem for the incumbents? I don't think it is that here, because Xiaomi is not quite as powerful as the domestics, if you will, and the existing incumbents are a very formidable lot in the Indian markets. Well-entrenched distribution setup, brands recognized, people like them, and the price intensity is pretty stiff as is. So I don't think it is that kind of a moment, but still, it'll be interesting to see if LG, Whirlpool and the likes have a bit of a reaction today. And guys, I thought this GS note on auto was very interesting for the fact that they pointed out very interesting points on the two stocks that they mentioned. This is on account of the monsoon. So they are saying they're of course maintaining a buy on monsoons and fuel. So they're maintaining a buy on iShare. They have hiked the target price to 9,100 from 8,400. Why? Because they said during periods of cooling fuel prices, and they've gone back in history, demand came back fastest in scooters, entry-level cars, premium motorcycles and premium hatchbacks, and therefore they highlight that TVS Motors, Eicher and Maruti are best positioned to see an added leg of volume growth because fuel prices have cooled off. Now that is the positive. On the negatives, they are highlighting M&M. They maintained the buy, but they've cut the target price to 3650 from 4,000. It's higher than 33,000 currently. But what they say is that rainfall across India has been 38% below the long-term averages. The last time monsoon was this deficient, M&M saw tractor volume decline of 7% this year. And M&M's guidance, by the way, is for mid-teens growth for FY27. Also keep in mind FY26 was a pretty, if not a banner year, a pretty good year. So both the base effect and the fact that monsoon is not good might impact tractor volume growth that will have an impact on M&M's fortunes as well. So, and the share price sentiment too. So keep that in mind. I thought it was really well done by GS, the data points.
If I just had to add one more stock, I would say look out for Voltas. The update they put out was quite interesting.
AC sales.
10 lakh AC is in 3 months, and they did it in about 81 days. Earlier it was 88 days. I know we're now talking about monsoon starting, but this has been a record-breaking heat wave-laden summer. So all of those makers, RAC and the whole play behind it as well, a PG, Electroplastics, etc., could be maybe in focus this time.
That's a good point.
Yeah, but let's talk about Amber Enterprises. They formally entered the smartphone manufacturing business through a manufacturing agreement with Oppo. There was a conference call over the weekend. We'll play out what the management is saying as well. But Puneet, why is this looking interesting?
Well, thank you for that. One is, of course, the very important, the seasonality factor, because they have majority of the revenues coming from the AC business. That's, of course, seasonal in Q1 as well as Q4 of each year. But post-electronics and railway, this is the fourth major vertical that the company is looking at and going into Dixon Tech's territory. So that is something to watch. They also highlighted that the reason for going into the business was that it's asset light in nature, higher volumes, but lower margin compared to its traditional business. And they highlighted 4 key points in the conference call. One was that this does not require a PN3 approval, which you must have known that Dixon Tech requires for a joint venture with Vivo. So that has been sidestepped. Very importantly, they won't be putting in too much capex at this point of time because they are subleasing the current factory from OnePlus, from Oppo itself, and they'll be having brands like Realme as well as OnePlus also in their foray. So that's point number 2. The third key one is about milestones. 8 million units expected by FY28. This will ramp up to 13 to 15 million units by FY29. And most importantly, that margins are expected to be at the current industry level of 1.5% to almost 2%, excluding the PLI income. Finally, what they've also said that the current EMS contracts that Oppo might have might not be hampered. So any kind of pressure on Dixon Tech shouldn't be expected, is what the summation has come through as well. And finally, in terms of brokerages, they've maintained a positive view. CLSA has continued to maintain an outperform rating with a target price of 8,100. Maintains that value addition via components will be a very specific focus for the company and something to watch. But they are already seeing a 21% positive EPS impact by FY29 in the mobile foray for Amber Enterprises. And JP Morgan also mentioned that the sublease agreement with Oppo requires minimal capex at the start and feel that the component manufacturing will be important for the company.
Puneet, thanks so much for that. In fact, there was a conference call by the company over the weekend and a lot of people tuned into it. We've also listened to it. Here are some of the most important points that Executive Chairman and Chief Executive Officer Jasbir Singh made during that con call. Listen in.
On the scope, this agreement covers 3 brands, which is Oppo, OnePlus and Realme. Facility side, the manufacturing will be carried out at an existing facility under an sublease arrangement with Oppo, India. This structure does not require any Press Note 3 approval. On the capital outlay, consistent with the asset-light nature of this collaboration, capex requirements are very, very minimal. On the timeline, we expect trial production to commence in Q4 of FY27, with commercial production to start by Q1 of FY28. On the scale side, we expect to begin with around 8 million units in year 1, followed by a calibrated phase-wise ramp-up. If everything goes as scheduled, we expect to touch the volumes of around 13 to 15 million in second year of operations. On value addition side, we will commence with assembly first and SMT operations with clear roadmap to progressively deepen our value addition into components such as high density interconnect printed circuit boards, and then gradually increase local value addition over next 5 years. On the margin side, returns will be in line with the industry standards at the commencement, with margin improvement anticipated as operating scale and local value addition increases.
Well, lots of businesses in focus, as we said, and as we hit that break, you'll get to see the watch list from NDTV Profit, as also an exclusive conversation coming up a bit later on in the show with the Aurobindo top tech as FTC's cleared the Aurobindo Lanet deal. Swami Iyer, CEO of the Aurobindo Pharma US business, and S. Subramaniam, CFO of the company, join in. Stay tuned to NDTV Profit. We'll be right back.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this.
The biggest stage. Floodlights. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market
Welcome. You're watching India Market Open. Implied is going to show you a bit of an uptick. It seems all is well largely in Switzerland as well as it can go. And things are chugging along. But enough of a reason to start celebrating here in India, apart from the rains in Mumbai, which is a huge relief. Good morning, Kush. Good morning, Parag Bhai. Kush, let's start with you.
आज तो मार्केट ग्रीन ही रहने वाला है.
Why? Because of clothes?
Two guesses.
ठीक है, okay.
Why? And this is the kind of analysis we did when we were back in college, right?
नहीं.
Thank God we've graduated
Made
from
money
that.
like that, then kudos to you.
But there is a good possibility कि आज मार्केट ग्रीन रहने वाला है. ठीक है?
It's as Alex's style.
That's what I said. Two reasons.
Your outfit, my goodness. It's like
Nifty
hey,
bank
you've got
nifty.
something in your eye.
So Nifty, Bank Nifty, दोनों ही, right? Yeah.
Good way.
So,
Yeah, good
see,
way to
we've
put it.
seen the buy on dips strategy work, and we've been talking about that buy on dips strategy for a while now. कि Nifty आप 24,000 के आसपास buy कर सकते हो. Bank Nifty maybe closer to 57,000, but वो नहीं मिलेगा शायद because there is enough strength, and the Bank Nifty is respecting that 200-day moving average near 57,000. But the challenge is the upsides from here. Right now, Nifty seems to be trading in the range 23,800 on the downside, about 24,250, 300 on the upside. And at least in the near future, this is unlikely to be broken. One, from a technical perspective, that there are resistances. Also from a derivatives perspective. If you will recall, we spoke of how HDFC Bank has a massive call option open interest at the 800 mark, right? And see what HDFC Bank did. By the way, a similar call option, open interest position is built on the 1350 strike price for Reliance Industries. So yes, there are positive triggers, for Reliance, but if it is not able to take this level out, which is 1350, then you might see limited upsides on Nifty and Bank Nifty both. So there is a 1:1 kind of a risk-reward ratio on Nifty, a ratio for a long trade on Nifty and Bank Nifty. So agar आप उससे okay हो, so maybe you can take that trade, or you can at least have a biased, a positive bias trades on them. I wouldn't really suggest a big, positive up move. Maybe at least until this expiry is over and these, resistances are taken out.
Quick comment on the VIX at sub 13 as things stand right now, despite the slight 2.4% pop on Friday. And what individual stocks are you liking?
I'll also throw in, a quick word on the mid and the small cap indices, which have already been discussed by Neeraj, but I have a very different view on those. So VIX is, this is a non-sinister kind of a zone, right? But I would hope and expect the VIX to respect this 12 level. One, because, not everything is well with geopolitics, at least from the narrative perspective. There might not be too much action, thankfully, on the war front, but the narrative is still back and forth. So 12 and that level should be respected for the market to have enough and more volatility, correct? So I think this range is fine for VIX. While the VIX remains here, the indices could at least consolidate with a positive bias, stocks could go higher. My concern is on the Nifty mid cap and the small cap indices. Now, Neeraj, I think a while back just mentioned that, there is a breakout on the small cap index and, this could move higher from here. In all likelihood, it can. However, there is a small, twist there also. There are very early signs of exhaustion on the Nifty mid-cap index 100 and the Nifty small-cap index 100. Now, typically RSI divergences, so for fans of technical analysis, you can go and check that. I will assign 3 scenarios to what could perhaps happen with the mid and the small-cap space. The first one is a reversal. बहुत अच्छा हो गया, 19% in the last 3 months on the small cap, about 14% on the mid cap in the last 3 months. बहुत चल गया, अब यहाँ से reverse होगा. Unlikely. The second one is that you now see a shift from this mid space to the large cap space. Likely, but I would assign a relatively smaller possibility. And the third one is that there could be a profit booking dip at these levels, make a base here and then move to higher levels. My bet is on the third one. But nevertheless, if you're a very active trader, this insight is important कि अगर आपके किसी stock या sector में बहुत ज़्यादा पैसे बने हो, like defense, it's a good idea to at least take money off the table right now and buy at lower levels. Or if you're not such an active trader, at least have trailing stop losses or stop losses in place.
What about stocks this morning?
Yes, going with all three longs Monday morning. The weekly pick today is a big ticket item, which is ZF Commercials. ZF CV. We've seen a good run up on this. The only hitch was, like I said, a big ticket item. So not too many retail participants might want to enter. But nevertheless, the charts are looking strong. Weekly performance and volume action very healthy. 16,500, 17,250 are your targets. 15,150 is where you keep that stop loss. The other two are Jamna Auto and Action Construction. Jamna Auto, by the way, we discussed last week for the first target of 134. That was hit, consolidating now. So for targets of 136, 140 and a stop loss at 128 can still be considered as a fresh long. And Action Construction, Friday ka call, didn't do much, consolidated, mild downtick, on close. So we'll take that. The setup remains positive. 995, 1020 targets, 955 is where you keep the stop loss.
Parag bhai, what are you finding interesting today? I know a lot of buzz more about the primary markets right now, but in terms of listed entities and secondary markets, where are you finding that potential?
So basically, if you remember, we discussed about Aadhar housing a couple of times. Aadhar housing did very well on Friday. It was up 6%. So that particular space, affordable housing space, Aadhar housing, Home First, Canfin Homes, that space in the, I would say, small cap space looks interesting. And this is purely on intrinsic value calculation also from long-term perspective, that they are available at 2 times book with 4% ROA and growing at 20%. So one is that. And second is, of course, large caps, I see huge value, whether it is Bajaj Auto, whether it is Adani Ports, whether it is Reliance Industries, Grasim, all these stocks continue to do well. Bajaj Auto, in fact, has a fantastic combination of exports crossing 2 lakh vehicles per month. I think touching 2,50,000 now, led by Latin America and Africa. And electric three-wheelers and Chetak two-wheelers, all firing. So 65% of the Bajaj Auto's portfolio is growing at more than, I would say, double digits, and which is highly profitable also. Electric three-wheeler is highly profitable for Bajaj Auto.
So Goldman Sachs, Parag bhai, pointed out that during periods of cooling fuel prices, demand came back fastest in scooters, entry-level cars and premium motorcycles. So Bajaj kind of fits that bill too.
Yes, perfect.
So between Bajaj and Eicher, you would...
So Eicher is also looking very good. There is no problem. But I prefer Bajaj because of valuation, 21 times FY28 earnings and buyback, which I am very excited about.
What did you make of the Tata Motors CV updates that have come?
So Tata Motors CV, see right now, as Kush also very rightly pointed, his first two picks, ZF commercial vehicle and the other one, Jamna Auto, both are related to commercial vehicles. Right. So now that Brent has cooled off and the chances of diesel price hikes are less, I think Tata Motors CV, all these commercial vehicle plays will come back.
Okay, time for an NDTV Profit exclusive. The RBI is likely to issue the updated list of upper layer NBFCs very soon. Piyush joining in with more details. Good morning, Piyush.
Yes, that is correct. The RBI is likely to come out with the updated list of upper layer NBFC very, very soon. The list is likely to remain unchanged, and the RBI is yet to take a decision on Tata Sons deregistration plea, so it will likely remain in the upper layer list, and the RBI could also add certain government-backed NBFCs in the upper layer list. We are aware earlier this year the RBI had come out with classification norms for upper layer NBFC, and there they had said explicitly mentioned that NBFCs with over 1 lakh crore AUM and those who are backed by the government can also now enter the upper layer list. So the list is likely to remain unchanged, and we can see government-backed NBFCs coming in the upper layer list soon. And just a bit of context, Tata Sons had applied for a deregistration as a CIC with the RBI in March 2024. The RBI is yet to take a final call on this, and hence they will likely remain in the upper layer list. Back to you.
Okay, thank you for that, Piyush. So that was the NDTV Profit news break this morning. In terms of the entire financials pack, Parag bhai, if you look at what the rhythm this I note this morning, and that's going across the financial spectrum, but also talks about exchanges as an exciting play. Now that we know that the NSE IPO will be coming in, would you be looking at that space more interestingly, and how are you seeing the NSE IPO?
Yeah, absolutely. Because it's I would say it's a platform business where you have infinite ROC. People want to speculate, invest, trade, and you are providing a platform for it. And so it's a great space to be in from long-term perspective. What you have to just careful is about valuations you are paying, and second is whether the market is looking good. Because capital, it is generally associated with capital market, right? So capital market has to do well, and from that perspective, after this West Asia war conflict cooling off, Brent below 80, I think I am more constructive on market. So I would be looking to buy into capital market plays if there is an opportunity.
Okay, so that's the first time I've heard you saying that in a while.
Yeah.
What has changed?
Outlook on markets.
And what within that ecosystem? Because there are brokers, exchanges, asset managers.
So I would now say that any good capital market participant, whether it is exchanges like NSE, whether it is like AMC companies like ICICI Pro AMC, HDFC AMC, UTI, Nippon, whether it is broking houses, broking like Grow or Motilal Oswal, or I think I'm more constructive on capital marketplace now.
Specifically BSE, what is your opinion? Because it has gained 50% in 2026.
So there, the valuations are the only problem.
So Kush, do you want to weigh in on BSE specifically? Because we don't necessarily know the exact timelines, but one expects that NSE will come sooner rather than later. And once that comes through, pressure on BSE?
maybe not. I'm not really in the camp कि नहीं NSE आएगा तो BSE में बहुत ज़्यादा selling देखने मिलेगी, हो सकता है. But there are only 2 or 3 plays, right? So you might want to take an exposure to both. So why not? I just want to ask a quick question to Parag bhai, I think conversation में miss हो गया when he said, then you asked कि अभी क्या change हुआ, and he said my outlook on markets.
Yeah.
तो अब क्या है आपका outlook on markets?
So my view is that simple. One is, I'll tell you, frankly speaking, there are 2-3 issues, right? One was this West Asia war conflict, so oil was going up, so nobody was looking at India. And second is there were too many exciting things outside India, right? Korea and Taiwan and semiconductor chips and all those stocks were going up. I see some of them will change in the next 2 to 3 months. I think India is a 15% growth market in good companies, large cap, I would say sizable, where you can actually invest. Companies. For example, if you see Adani Ports, said 15% volume growth, 15 to 18%, right? Reliance 15% EBITDA CAGR. So I would say ICICI Bank will grow at 15 to 17%. So this is a boring market with 15-17% growth, and now at a valuation which is very compelling, and the major macro worry is now easing off. So my case for India is that. And now everybody has made big money in those markets, right? And whether if the memory chips prices actually fall, then those growth expectations might not come in.
Yeah, the Indian markets are right now humming the Gully Boy tune. Apna time aayega.
Not bad.
I hope.
Yeah, I hope. Okay, one of the big exclusives today, and that is Aurobindo Pharma. Remember, it's in focus after receiving the US FTC clearance for its $250 billion Lannett acquisition. To talk about it in detail, we are now joined by Swami Iyer, CEO of Aurobindo Pharma USA, and S. Subramanian, CFO of Aurobindo Pharma. This is the big NDTV Profit exclusive. Swami, can I start with you? Aurobindo already does about $1.6 billion in US revenues. You are not a small player by any stretch. So when you look at this $250 million bet on Lannett, what were you really buying? Is it a product basket? Is it the customer relationships, the manufacturing footprint? Or is it something that Lannett could do, which Aurobindo simply couldn't build faster on its own?
Thank you, Nirav. Thank you for the opportunity. I really appreciate this. And to answer your question, a very short answer would be all of the above except the last one. Now, just to go back to what we said, we are the number 1 company in the US in terms of prescription volumes. And Lannett is a perfect, nice addition in strengthening our non-opioid controlled substance portfolio. And this, you can say, is a push from Aurobindo's side towards this therapeutic segment. And in addition to this, Lanet has a large manufacturing facility, which would increase our footprint in the US. And this would help us in, establishing a better market share in the US, and for domestic manufacture, which is a priority for the present government, and possibly look at some CDMO business. Incidentally, I also want to mention that we have made some progress in getting some awards from a leading customer in the CDMO side, and we are very upbeat on this. So this is, like I said, to answer your question, very simply, it's all of the above.
Okay. Swami, some numbers, please, here. I mean, do you have clarity around whether last year's EBITDA numbers can be surpassed easily?
It's a little early for us to go into the exact number, but like I said, we are very upbeat about what we have seen so far, and we think we can expand our EBITDA substantially, including the margin, because we are acquiring certain niche products. And don't forget that it's not just what we are acquiring now. They got an excellent portfolio, mostly with the partnership. And I also want to tell you that one of the DPI product, which is the dry powder inhalation, which is Advair, we'll be launching that sometime soon through Lanet partnership. And this helps us enter this business of inhalation. You also may be aware that we have got a manufacturing, R&D and manufacturing facility in North Carolina, and we expect to launch some product from there. This would be our first entry into inhalation business, but I can tell you this is not the last, and we will strengthen our presence there.
Sure, you will. But, just on this deal, one more question, Swami, and then I'll come to you, Subbu. The FTC's cleared the deal, but not without a cost, right? While you've not cited this in your exchange filings, there are reports that 4 products had to be divested to Quadrant Pharmaceuticals, right? And including multiple names out there, out of the 4, right? So when you signed the original deal, was this level of regulatory friction expected? And honestly, giving up these 4 products, how much does it change the return profile for you?
I want to just take a step back and then tell you, we talked about the viability, how soon we can get it. We are talking about 250 million. But you should remember one fact, that this comes with working capital of about north of 100 million. So when we paid 250 million, we're already getting certain working capital in terms of inventory, in terms of receivables and whatnot. Net of that is a significant amount. So that's the first thing I want to clarify. So we had factored in certain amount of divestiture, and I think we are quite happy. We are quite pleased, I would say, with the outcome, because we had taken the worst case scenario and we have modeled it. So even in the worst case scenario, this was a very good model that we came to. And right now, what we are divesting is 4 products. And the top line on these 4 products would be probably in the low single digit to mid single digit. And this would be partly from Aurobindo side, partly from Lanet side. So we are very pleased overall with the divestiture, the way the process has gone through. It has been a hard battle. We have taken almost 11 months, but we are very pleased with the outcome.
Subbu, you as a management have been clear that 2029 is when biosimilars start contributing meaningfully, right? A lot of products are very expensive to develop, but you just committed $250 million to Lanet. Now, how is Aurobindo as an entity funding both simultaneously without one crowding out the other?
First thing, Lanet, how we are going to fund it. So it will be funded exactly out of our own internal accruals. We are having a cash of more than 300 million, and it will be funded out of that. So there is no debt or anything going to come. Going forward, we should be able to generate a cash flow of anywhere between 300 to 350 million year on year. and funding the biosimilars or any other project, is not a major problem. If there is a strategic acquisition, etc., only we need to go for the debt. Otherwise, mostly we will be able to service it or pay it out of our own cash generation.
Well, that is good to know. Well, gentlemen, all the best for the consummation of this integration and more. It's a large one. Hope it pays you back multiple times. Thanks so much for speaking to us at NDTV Profit today. That's the Aurobindo Pharma top deck on the $250 million Lannett acquisition at a point of time when, US is doing what it is doing. Aurobindo is only increasing its reach in the US, which is actually an interesting thing. Parag bhai, any thoughts here on Aurobindo Pharma and the acquisition that they've done?
So I liked it around 1150, 1200. If you remember, we discussed.
Yeah.
Now at this price, I don't find it too attractive. For the growth rate it offers, the trailing P of 24x, I'm not too excited at this price.
Okay, Kush, on the charts, Aurobindo?
Not a bad setup. It had a very sharp uptick, from February onwards in a very sharp upward sloping channel. Gave that out, but now for the last 3 weeks, it's continuing to gain ground. Last week also the close was near the high points of the day, so could well continue this move. Levels of 1540 and about 1575 very much likely on the cards.
Okay, it could be one of the active stocks in trade today, Auro Pharma, for all of the reasons we've just spoken about. But what are the other counters that you should pay attention to? We're just a minute away from the start of trade. Let's bring Mahima in to give you that list. Mahima?
Right, so Alex, I'll start with Som Distilleries, a negative news flow coming in for this one because the excise department has rejected its FY27 license for the Bhopal plant. Of course, the company has submitted, detailed replies supporting the submissions, but we'll have to wait and watch out for as to how that pans out. The next one is Sun Pharma. It's set to acquire around 100% stake in Innovcare Life Sciences. It's a Mumbai-based pharma distribution company. The transaction is expected to close before 31st of July, and the deal size of around 271 crore. The next one is John Cockrell. Now, this one has secured an order of around 90 crore from JSW JFE Electrical Steel, and this is for tunnel furnace package, and this order is to be executed in the next 15 months. And the last one on my list is Pace Digitech, where the company has announced to set up a research center in Pune, that they've approved basically an acquisition of an entire stake in ARM Inso Pace, and this will increase, it will have a capacity addition of around 7.5 gigawatt, and the capex for this that they'll do is going to be around 200 odd crores. So all of these counters will remain in focus on the back of news flow.
Thank you for that, Mahima. I think watch out for sugar stocks as well. A bit of the monsoon trend will start playing out in the next few days. And Parag bhai, I know you're saying you're now constructive on Indian markets for several reasons, but the delayed monsoons is going to become a sore point. I'm talking about sugar stocks because if you don't have sowing on time, etc., more ethanol use, that's going to be one pain point. And across the board as well, this is one thing which you think is a bit of a dark cloud on the optimism that you're seeing over the next 2 to 3 months?
So, see, I'll tell you, now sugar companies, for example, they depend, of course, on the sugar prices and the supply side also. But I would say that ethanol is very important thing for them. And ethanol prices have not been increased since long. And that is a major overhang there, in my view. And of course, Balrampur Chini, as we keep discussing, that new biodegradable plastic project where they have invested 3,000 crores is coming on stream in FY27. So I would say that any big dip, I would be buyer on Balrampur Chini.
Interesting. The first few ticks on the markets are in, by the way, and you have gains of just about 0.4% for the Nifty 50 at this point. It will settle in a bit. But a couple of stocks that stood out, right? Amber Enterprises, because of the Oppo deal, it's up about 0.75%. Keep one eye on this one. Auro Pharma is just about flat. I wonder if it'll get some velocity in the rest of the session. Good Luck India was a stock that we highlighted for you, just over 200 crore order, but in the artillery space, building on those gains from Friday. And Power Mech, a 1,000+ crore order when it got orders worth 7,000 crore rupees, if I remember correctly, from what Neeraj pointed out earlier today, all of last year. So a sizable order from that. Yes. Kush, anything from this list that I've highlighted? And there will be more, of course, that are reacting, but between Good Luck and Power Mech?
I think good luck seems to be better placed. There's already a run-up that you saw, like you rightly said, on Friday, but not too disturbed by that because this is now bringing it close to that breakout level of 1460. So if it goes to those levels, gives you a breakout above that, then I think this uptrend could continue, and this long consolidation of 2.5 months could well see an uptick. Power mech has run up quite a bit. Volumes were thin on the way up, so that's the only concern. Otherwise, structure per se from a medium-term perspective looks positive.
Look at RVNL as well, since we're talking about all of those with your order wins. So RVNL also has a decent sized one, that's about 2.5% up. Sobha Developers looking interesting, and you've seen the real estate pack move almost in tandem with what's happening with markets, and today seems like a positive day. So you're seeing Sobha Developers also doing well. Garden Reach will be also in focus today. That entire space is in focus, but Garden Reach specifically. And of course, you have a Maharashtra Seamless, etc., which is doing well. Just wanted to get your take on the whole Amber Oppo deal and the kind of value unlock you see over there, Parag bhai.
So the deal is very positive. It is asset light. It is very high ROC deal and a great opportunity, I would say. But looking at the valuations of the company, I don't find it very exciting, frankly speaking, because I think the deal is already factored in the stock price from near-term perspective, from 6 months to 1 year perspective.
Yeah, but it's interesting because it kind of reduces this whole summer seasonality for them, right? And which could be actually a pretty good thing. But speaking of that summer seasonality, speaking of everything else, Voltas, Parag bhai, did a really good season. I mean, they beat their last year numbers by 7-8 days. And we know that the preceding 3 months were not that great.
Correct.
But Q1 likely to start off with a bang for the company. Is it constructive for Voltas and the other cooling solutions?
Absolutely.
Stock?
So Voltas, Blue Star, LG Electronics, I think, and that's why we saw a big rally in LG Electronics stock also, right? Blue Star also did well. Because this summer has been very good for the AC companies. The problem remains around margins. That also, in one of the conferences we met LG, and they said that they were confident about margins of this quarter. So I don't know about Voltas and Blue Star, but LG Electronics, I think margins will also remain good.
Okay, but what about, and again, Neeraj was pointing this out earlier today about the Xiaomi entry into the electronics goods space, right? And maybe these are entrenched players and they don't get disturbed too much. I'm talking about LG, etc., etc. But on the fringes?
No, I completely agree with you. See, for example, AC is one such industry where the penetration level, say 6-7 years ago, was just 4% in India. And we have hot summers, right? But still, and so that attracted so many players that actually AC industry never made money for investors. Because the opportunity was so huge that everybody plunged in. And then there were no margins left. So
too much competition.
Yeah, crowding out. So that can very well happen in this space. It can continue to happen because when your opportunity seems to be very, very big, I think everybody wants to jump in.
I'm excited as a consumer to see what comes on board.
It's always good, right?
From Xiaomi. Okay, so much to unpack. We have Milan Vaishnav with us. We have Sharad standing by with the big brokerage call. I'm going to go to Sharad first. Sharad, what do you have for us on the big brokerage call this morning?
For the big brokerage call, we have Dr. Reddy's. Nomura has come out with its report, and there has been an increase in the target price also from 1600 to 1740 rupees. They have given a maintained buy rating, but a little bit of bullishness coming from the broking house. There's a strategic pivot happening in favor of the branded business, and our street is expecting a muted risk-reward ratio, which will be favorable, and they are constructive on the company, and they see the upside risks to consensus earnings and valuations. And I expect this growth in the branded profit to lift the profit margins overall on a consolidated basis, but remember the revenue mix should support this sustainable earnings growth going ahead. This in turn would drive the re-rating for the stock's valuation multiple, and the name is biosimilar Abatacept. If it's launched, it can present 30% plus upside to the FY28 and 29 estimates.
Laboratories up about 2%. Sharad, thanks so much for that. Milan Vaishnav, he's founder and tech analyst at Gemstone Equity Research, joining us this morning. Milan, good morning to you. And what is the prospect at the start of the week? Because it's been a great few days for the benchmark, and particularly in the broader markets as well, there's strength. What are you seeing?
Good morning.
if we look at the markets, then it's almost, I think, 7 to 8 months, 7 to 8 weeks that Nifty has remained in a state where it is devoid of any directional bias. Even as of now, we continue to trade in a very little bit of a wider trading range, which has 23,000, 23,200 as a major support, and resistance that comes in at 24,200. So it's a 1,000 point trading range where we have found the Nifty oscillate and stay devoid of any directional bias. I feel that we still have a major resistance to cross between 24,200 and 24,400, 350 to 400. So until and unless markets are not meaningfully above this zone, we will continue to see a tentative state of affair in the Nifty as such, and the markets would continue to remain more stock specific in nature, and we may not see the index trending in a linear way as long as we are well below this zone. So I think 24,200 to 350 is what we need to to keep a very tight watch on. We need Nifty above that to adopt any sustained directional bias.
Picks this morning, Milan?
Yeah, I have 2 picks this morning. They again remain stock specific. I have a long view on ICICI Bank. One can consider buying it above 1345 with a target of 1390. We can keep a protective stop at 1325. Another stock is Geo Financial. One can buy above 245 with a target of 257 and a protective stop at 239.
Okay, well, interesting ideas both. Now that 908 has happened, the idea is to try and figure out which of those businesses which came out with some good order, news flow or otherwise are doing well. So Power Mech, RVNL, good luck, and even Divgi Torque, which the number is not out, but has announced a supply order for 5 years for an all-wheel drive system. So let's bring those names up. Divgi is up 4. Good luck, RVNL and Power Mech, the others. Power Mech is up 4%. Good luck, which is already up, is up another 4%. Pretty interesting. And RVNL is up 2%. Now, Kush, my question is, I know we just spoke about good luck, but you mentioned about it close to that breakout level of 1460 or thereabouts. Now at 1489, but has rallied already. So what do? Because it's broken out, you take further position, or you book profits because it's rallied?
Hold with a trailing stop loss.
What if you don't have a position?
You don't have a position, you wait for the dip. You wait for the dip closer to those support levels and then go fresh long. But I am quite excited about the name that you mentioned. You know, we usually don't discuss this. Divgi. Yeah. I mean, it was on my radar, but just that it's such a relatively low volume and less discussed stock that I didn't actually put it out. But yeah, it's been actually making all the right noises from a technical standpoint also.
What is the update here, Neeraj?
So they've won an annual supply order for 5 years for an all-wheel drive system from an existing Indian OEM. They haven't given the name of the OEM. They haven't given the size of the order, but it's an annual order for 5 years.
Very nice. Very interesting. By the way, Volta's doing well. I mean, pre-open is closed, but it's up 3%. On the charts, I see Kush already shaking his head in anticipation of the question.
1.5-2 साल से पैसे नहीं बनाए ऊपर आता है सेलिंग प्रेशर आता है देयर इज ऑलवेज रेजिस्टेंस दैट इट मीट्स राइट नाउ इट्स ओपनिंग एग्जैक्टली एट द 200-day मूविंग एवरेज गिव और टेक अ फ्यू पॉइंट्स हियर और देयर तो मीडियम टर्म में लॉन्ग टर्म में हो सकता है नियर टर्म में मेरे को इतना नहीं लगा बहुत ज्यादा चलेगा इफ यू हैव अ पोजीशन कंटिन्यू होल्डिंग विद अ ट्रेलिंग स्टॉप लॉस द मोमेंट इट्स हिट यू आर बेटर ऑफ एग्जिटिंग आई वुडंट रियली सजेस्ट फ्रेश लॉन्ग पोजीशंस ऑन दिस वन आइदर टेक ब्लू स्टार और वोल्टास फॉर दैट मैटर both of them very similar structures haven't done too much for the last year and a half.
Cooling बहुत efficient है ना तो गर्म नहीं होता.
Nice.
Okay, look at Kirloskar Oil. Check out Kirloskar Oil and what's happening there. So interesting news update from Kirloskar Oil where they have got an order of 192 megawatt capacity from a company called Hypernext for an AI-enabled data center. So I think it's, you are at that time and anything where you add AI and data center, it's very, very exciting. And this is a huge jump up also in terms of the space that Kirloskar Oil is going into. Fundamentally on the company, Parag bhai, any views?
So basically, see, these Kirloskar group companies are always genuine businesses, old businesses, doing right things.
So there's pedigree there.
Yeah, there's pedigree there. There's no doubt about it. The stock has rallied too much. That is the only problem. Otherwise, and Cummins benefited significantly from this data center narrative. And now it is time for Kirloskar Oil to do that.
But to be fair, I know the stock is run up, but if you have this kind of an entry coming in, then it's a bit of a reset. You need to really look at the company entirely.
So if you have the stock, then hold on. That's what.
But not a fresh buy.
Fresh, I cannot buy at this price.
Milan, Kirloskar Oil, Voltas, Amber, these three on charts?
Because for two different reasons, Voltas and Amber, they're all opening near their resistance point. So no point in taking a fresh entry. One can continue to hold with the trailing stop losses. And so far as Kirloskar Oil is concerned, it's in a very strong uptrend. It is now opening quite high if it opens at this point, and it stays highly overextended and much deviated from the mean. So one should wait for dips to take a fresh entry. But as of now, one can just hold, or if you are not owning the stock, then one should better stay away from it and wait for some consolidation or minor dips.
Okay, well, 9:12, and if we can therefore, before we ask further questions, talk about the top idea for the day today, instead of crunching it out to the last minute. Kush Bora, let me ask you, if you had to bet on one stock for the morning on the back of the pre-open rates that are there now and not Friday's closing prices, which one would that be?
So that will be Jamna Auto, and the reason I say that is because you rightly pointed कि अभी opening के हिसाब से क्या करें? ZF Commercial, the weekly pick is already opening more than 2% higher from its close, right? तो यहाँ पे risk reward ratio just goes for a toss completely. So if you do see a dip on the stock closer to the closing price, of Friday, then that still remains, a valid buy, risk reward ratio favorable, or you can buy here and bump up the stop losses. But if not, I think Jamna Auto, 0.5% opening, in the green, we'll take that. The targets on this one continue to be 136 and 140, stop loss around 128.
Okay. All right. Milan, just about a minute to go. You've already commented on a few stocks from the pre-open session, though. Are you spotting anything that looks good?
Yes, I have my eyes on Suzlon. I expect around 62 to 63.50 on it. One can enter with a stop loss of 57.
Okay, quickly want to highlight Aavas Financiers. I know it's the last 50 seconds before we go into trade. The reason why that stock is seeing a dive in the pre-open session and will probably have a tough morning is because the National Housing Bank is probing into a loan classification irregularity. I'm talking about Aavas Financiers. Yeah, there you have it, 7.5% down. What's the finding? That concessional refinances were available to non-SC/ST borrowers but were wrongly classified. 500 crores of refinancing support has been recalled by the regulator, that's NHB. So watch out for that one. That might be one in focus this morning.
Well, interesting spot there, 7.5% down on a morning like this. So keep an eye out for that as well. Here come the markets. This Monday morning, we are likely to start off close to 100 points or thereabouts higher. The question is, can we build on from there, or do we become sluggish post that? Let's figure that out. For now though, 117 points in the green. So like we said, about 100 points, give or take, just cooling off a little bit from those highs, but still about 0.33%, not bad. Banks are not participating. Is it IT which is bouncing back? Let's see what Nifty IT is doing. Yes, indeed, bouncing back, up about nearly 1%, but the market breadth is positive, which is actually a good sign. 1448 advances to 400 declines. Let's get the heat map up on the screen, see what is moving and what's not. The bounce back, okay, slightly different looking heat map today, but the bounce back of the IT boys is interesting after getting pummeled the whole of last week, up about 1%. Cipla has a 1.8% uptick. I wonder if I'm missing a piece of news here, but that's up 1.8%, which is good going. Eternal is up. BEL is up, HDFC Bank marginally so, but it's essentially the bounce back in IT which is helping the index today, with a little bit of Cipla thrown in there. The fact that HDFC Bank is doing okay is not bad, and maybe Reliance is not losing out too much, so which is also a positive. What is not doing well? Power Grid, Titan, ONGC, Adani Enterprises, NTPC, but very muted losses, if you will. So not that the gainers are very stiff, but we have IT doing well, Cipla doing okay, so that's actually a good thing. Maybe just quickly get the point contribution before I get Tamanna in, but just the point contribution here, and HDFC Bank and Reliance are contributing positively, but as you can see, they were not the big movers, so therefore it is a fairly sluggish morning if you will, but we're in the green and that's what counts.
Yeah, well, recovery in Reliance after how it reacted once the IPO, the Jio IPO was announced in Friday's trade. So maybe you will see some build up on strength there through the morning as well. Let's pull up the small cap and the mid cap indices, look at what the broader markets are doing. And there the situation is definitely better, about 0.5% up on the mid cap, over 0.5% up on the Nifty small cap 250. The advanced decline ratio looking robust this morning, 1800 to 500 odd is what the advance is to the declines. Let's pull up the sectoral heat maps for you this Monday morning, and are we seeing enough green on the screen? Yes, we are. It's all green. I have chosen well this morning in what I've decided to wear. Nifty IT over 1% up. And really ruling the roost. Maybe this Ashwath Damodaran quote is being taken more seriously. I mean, he's had that capability of spotting trends way in advance. India Defence doing well, and a lot of that is because of a garden reach, and we'll pull up that individual stock in just a bit, but they've got this Navratna status which is helping. Consumer durables could be the Voltas effect, but even auto stocks are doing well, and crude coming off is definitely helpful. India VIX is also okay, just a little over 13. It's up in the green, so volatility index is actually positive, which is not necessarily a great thing. I'm talking about India VIX, if you could just pull that up very quickly, but it's fine. It's 13.08, nothing to worry about over there. Let's go to individual stocks and look at what's happening. We've got Amber Enterprises on watch. So this news had come out, but there was a detailed conference call with the management over the weekend where they clarified that this partnership with Oppo doesn't need a press note 3 clearance from the government. So that is possibly what's helping. That's about 2.5% up. A lot of order wins have come in. We're just putting them all together, whether it's an RVNL, a Good Luck, a Power Mech, all of them are doing well. And you have that Power Mech stock up about 4%. The others are also in the 2.5% range. Garden Reach has got Navratna status. Watch out for that one among the defense pack, about 4% up right now. Voltas has sold 10 lakh ACs in 3 months. It's been a sizzling summer and it's showing on the stock finally, 4.5% up. Kirloskar Oil has been in focus because of that order win for an AI data center, 15% up. And I wonder what Aavas financiers are doing. We highlighted it, Alex, before the market open, and that rap on the knuckles from the regulator in action, actually, not just rap on the knuckles, will be negative for an Aavas finance, one presumes.
Yeah, it certainly is, Tamanna. And in fact, it is lower, but it's recovered from those levels that you saw in the pre-open session, now down just about 3% or thereabouts. A few other stocks losing ground today. Craftsman Auto is down about 2.5%. Cummins India, Welspun Corp, GTND, some of these counters gaining quite considerably on Friday. So just an element of profit taking coming through for some of these names. From the gainers, though, a few stand out. You have New India Assurance, that's up about 6% at this point. So the insurance company is coming to the fore. So too is PB Fintech, Policy Bazaar, essentially, which is up about 3.5 to 4% or thereabouts, doing well for itself. Shipping Corporation of India, Schneider Electric, both gaining close to 3% each. Chennai Petro, Aegis Logistics are some of the counters from the broader markets that are doing well. Sectorally, though, there's one that stands out, and it's purely because it's been such a rank underperformer in the recent past, but it is gaining ground. In fact, it's the best performing sector in trade today. It's holding out with gains of 1%. Which one, you ask? It is the Nifty IT. And for various reasons, much criticized for various reasons. The stock is, or rather the counter as a whole, or the index as a whole, is up 1%. The question is, do you build on that? Kush, what's your opinion?
So I think, we've heard enough and more times that the risk reward ratio in IT is favorable, and it can move higher from here. At the risk of repetition, I'm going to repeat that. Right? I'll just say that again. There are technical reasons for it. If you look at it, the index itself is close to 4-month lows. If you 4-year, beg your pardon. If you see June of 2021, in fact, 5-year lows, right? And it's rebounding from exactly those 27,300 odd levels. On the weekly setup, there are multiple legs of positive divergence, which means there have been multiple lower lows formed by the index, but the RSI really hasn't gone on to hit, lower lows. So it's suggesting that yes, there is some strength which is waning off on the downside. So there could be a possibility possibility of a rebound. Again, I don't play this, or I wouldn't play this for a big upswing, especially through the large cap names. I still prefer the small cap names. So Persistent, Coforge, Emphasis, these are your stocks that you want to play from a positional standpoint, but keep your stop losses tight.
Parag bhai, we've spoken to a number of people over the course of the last few days about IT, and even someone like Prashant Jain was unclear. He said that he was not really sure about which direction the IT pack would go on the earnings front. Nilesh Shah from Envision, who has been a big proponent in the past of IT, is someone who said he has practically no exposure at this point, which in itself is a big statement. What would you do with this pack?
So I have 10% weight. I have all publicly said that 10% total weight in the portfolio. So I am equal weight actually. So in a way, to put it very bluntly, I am also confused, right? So it's a confusion, right? If when you are equal weight, you are not taking any bold call. But I would say these are great companies. Kabhi na kabhi to unka time aayega. So I am keeping this 10% weight, and as I said, Coforge, TCS, Emphasis, Tech Mahindra, and so these are my stocks where I have bought a basket. 2.5% each.
Okay.
This.
Okay.
Interesting.
Milan, you want to weigh in, because we've spoken at length at this point about IT, but are you also of the opinion that on the balance you can find a few names to invest in at this point, or to put money in right now?
I would rather take a different route. There are two things involved here in IT that, yes, I still maintain my point is that it is in a very massive, huge bottoming out process. But the thing is that the process is not yet complete. It is in the process of bottoming out, number one. So I would now start very gradually increasing my exposure, my portfolio level exposure into IT. But I think this time I would take an passive index route through Nifty IT ETFs rather than taking a stock specific view. But yes, I would very gradually increase my IT exposure, but as I just said, via ETFs.
Okay, want to look at a couple of stocks as well. I want to look at what Blue Cloud Softech is doing. They're exploring an AI deal with SpaceX International. They're exploring a deal right now, but then let's look at what's happening with Blue Cloud. That's enough to get the stock going up about 9%. There are some companies, and we'll cull them out for you, which actually have orders from the broader SpaceX kind of companies and allied companies as well. So this is definitely one to watch out for. But let me go across to Sharath now. We're talking about Aavas Financiers and what's happening there. The stock is down this morning after news that the National Housing Board is probing them for loan misclassification. Some recovery from the lowest point of the morning as well. Sharath, what's the case all about?
Well, this case is, the media report suggests that National Housing Bank is probing into loan classification irregularities, and if you get the details about it, the investigation finding has suggested three important announcements. The concessional refinances were availed to non-SC/ST borrowers, and the loans were wrongly classified as dispersed in hilly areas. Also, the non-home loans, they have been also seeing a misclassification happening. Now, the regulatory action, what's happening from NHB is they have recalled around 500 crores worth of the refinancing support back to the books, and the action is taken due to this ineligible scheme usage. This overall NHB inspection is still underway, and the company has also come out with its statement. They have stated that this is an ordinary course of business, and these inspections do happen for both the industry as well as the company. And currently they have confirmed that the inspection is there, but they haven't acknowledged any findings yet, and company has stated that they have not received any direction yet from NHB as well. So this is why the stock is in focus. And recently there was a management change also in this stock. On April 20th, MD and CEO Sachinder Bhinder stepped down from the post, and Ashutosh Atre, the chief risk officer, also did a resignation here. But there were some new announcements also, like Ghanshyam Gupta coming in as interim CFO and Puneet Agarwal as interim chief risk officer. So definitely there is some management churn at play, and some kind of a regulatory overhang comes on the stock.
I think the regulatory overhang is what is reflecting today in this space more than anything. But Milan, I wonder if Blue Cloud is something that you've been tracking and how you're looking at it on the charts. The company we spoke about that is exploring orders from SpaceX. Blue Cloud Softech.
No, I'm not tracking it. I think it is BSC listed, and no, I'm not tracking that company.
Looking at, this whole sort of figuring out where you are as a company in the ecosystem of the AI data center bit. And you saw that this morning we've seen with Kirloskar Oil. I mean, people are looking at which are some of the companies which could be supplying even on the periphery to a giant like SpaceX. Sandhar Tech's name comes up, Sona Comstar, some of those players, even a Bharat Forge for that matter. Will that be an important play to look at closely? Because instead of just wringing our hands and saying, oh no, we don't have an AI play, these are giant companies right now.
So I will tell you, Thermax got re-rated from 2,800 to 4,800. Right, because Thermax also has some offerings for data center. I know of one other stock or airflow system or something like that. I saw it at 180, it is now 500. Right, so there are many stocks to play that particular thing, as you rightly pointed out. So Cummins, Kirloskar Oil, all this play falls into that category.
For Thermax as well, it's also on the earnings front, right, Parag Bhai? Because in conversations that we've had with the management, there was this piece on certain orders, older orders, lower margin orders,
that
which were getting over. And essentially the trajectory for earnings looks better going forward as well.
Yeah, correct, completely. Yeah, it's a play on power sector also. We need a lot of thermal power capacity also. So Thermax is a good play on that also, as well as this data center theme.
At these levels,
No, at this levels, I'm not recommending at all. It has gone up so much, I cannot buy.
Kirloskar Oil.
Yeah, 20%.
On fire, right? It's literally on fire. And by the way, I mean it in a good way. And the stock price move will suggest that in a good way too. 18.6% higher. And if I'm not wrong, it actually did reasonably okay last week too. So in some sense, some buying started on Friday. And now it's really on a roll. So pretty good going for this one. I'm sure you tracked this one, Parag, right? It's one of those old age companies.
He's saying not too expensive.
Too expensive.
Right now, no, it has gone up too much. It has gone up too much. Otherwise, it's a good group to own. Yeah.
Okay. We have an auto ancillary company coming up, if you will, Parag Bhai, soon. Now, I remember a conversation about 10-15 days back with an auto anks company. I think it was maybe Sansera or maybe one of those who was saying that the best year in history, etc.
It was Sandhar Tech. I was on the studio.
You were in the studio. Perfect. So now my question is this, Parag Bhai. You've mentioned this in the past. Now that the monsoons are starting off, etc., and stuff like that, exports are a real opportunity. Which auto ancillary, do you like that pack, and which auto ancillary would you buy?
Yeah, of course I like the pack. So Samvardhana and Motherson I have been very vocal about because it's a large cap. There are many small caps like Rolex Rings and Minda Corps and various other things. Generally I like to play a content per vehicle theme in auto anks because there you get a disproportionate growth. If industry grows at 10%, these companies can grow at 15, 17, 18% like what happened with Minda Corp. Right? If you have a content per vehicle increasing, like Samvardhana Motherson also, right? That you need 50% more wiring harness in an electric car. Right? So that is a theme which I want to pay. Premiumization and increase in content per vehicle because then you are growing above the system level growth.
What are your top picks in that auto ank space?
So Samvardhana Motherson remains. Minda Corp has rallied too hard, I would say. Rolex Ring kind of stock and many others. So
what about an Endurance Tech?
It is also a great company in my view and doing well. I don't have it in the portfolio, but definitely will consider sometime. There's no doubt about it.
Yeah.
Again, great companies.
So then we hope you also tune into the next conversation. Thank you so much for joining in, Parag Bhai, Kushpora and Milan for joining in because we're talking to Endurance Tech. Endurance Tech is charging up its EV ambitions. The company has started commercial production of lithium-ion battery packs for two-wheelers and entered the four-wheeler battery pack segment as well. Before we speak with the company's management, Puneet joining in for more details. Puneet.
Well, thank you for that. As you rightly mentioned, there are two key news updates in terms of the battery pack segments for Endurance Tech. One is for the two-wheeler side of things, where they've already began the production on 17 June this year, this month actually. 26,000 units is what the current per month capacity is, and they want to increase the utilization to about 70% by October. In terms of the four-wheeler space, they've announced manufacturing of the same, and the current capacity they will be investing investing almost 60 odd crores for going to almost 3,600 battery packs per month for the four-wheeler space, and this is expected to come in by Q3 of FY27. So the key question being that what is the current battery pack revenue coming in for the company, because they've also gotten a 300 crore letter of intent from one customer. So that what is the timeline of the letter to intent? That's question number one. And question number two largely being that is this coming in from its largest customer Bajaj Auto, which is almost 35% of the company's revenue. And the third and the final question is on margin, specifically what they are currently seeing from the battery packs. These are some of the key aspects from this conversation.
Absolutely, Puneet. Thank you for that. R.S. Rajagopal Sastry is with us on the show. He is Group Chief Financial Officer, Endurance Technologies. Mr. Sastry, thank you so much for joining in. I'm hoping I'm getting the pronunciation correct. So exciting things happening for the company. Tell us about this foray into the two-wheeler battery packs, the commencement of production. What is the client base looking like? Is it your largest client?
This is not our largest client. This definitely is a very important client in the industry for us, and we have been growing with that client rapidly in the past 3-4 years. And when you talk about foray into the battery packs, we did start it quite some time ago when we acquired Maxwell, and the battery management systems which we used to supply was already in the battery area. Now we have started as a forward integration. We now make the battery packs using the Maxwell's battery management system and some patented technologies which we have put into the battery packs, and that's how we are now in the battery pack area.
It's not your biggest client, so it's not Bajaj Auto.
We will be coming out with a name very soon, and you will know exactly.
No, because you said it's not our biggest client, but a client that we've been growing with. But it's one client. What is the space and scope looking like? Because it is also a bit of a crowded area, isn't it?
So when it comes to battery pack management, battery pack assemblies, quite a lot of OEMs do it themselves today. And this, because this is more like an initial setup and it is in its nascent stages. And as we see that the industry matures, we will look for specializations in the battery pack assemblies because it calls for a lot of technology. There is a bit of battery management systems in it, and there is the way you put your battery packs, the cells together to make intelligent batteries, and also the overall supply chain management, the quality standards, maintaining the warranty of it. All this they become differentiators. So it is pretty big space, and where we are today, this has got a potential to grow to 600 crores per annum business. This one order, one variant, which we have just started with, that's a two-wheeler cells.
Potential to get, very good morning, Mr. Shastri, this is Alex here. So it has potential to get to 600 crore. That was exactly what I was going to come to, which is that 17th of June is when you commissioned the facility. I understand that you want to take it up to 70% utilization by October, which means that you're ramping up very quickly. And in the July to September quarter itself, you'll have a sizable contribution. What can that per quarter contribution look like?
In terms of contribution, we will be reaching at least 50% of our aspired 600 crore run rate for this model within the first quarter, because the demand is huge. And we have done, because we made the first announcement in 2025 June, if you remember. So there have been a lot of preparatory work which went in to get all the certifications from all the relevant agencies, get the design right, get our testing right, so that we can supply. So we are well poised to get at least half of that peak rate in the first quarter itself.
Talking about 600 crore annualized, right? So I'll have to apportion that. Okay. And when you're talking about the four-wheeler battery packs, for which you're making an investment right now, what are the timelines and what is the kind of contribution that you anticipate from that?
So the actual numbers in terms of contribution, we will disclose soon, but we are in discussions with at least 2 OEMs because the moment they could see that there is a proof of concept in the two-wheelers, there's a lot of interest in the four-wheeler manufacturers too. So it needs a different kind of batteries, like these are lithium-ion LFP cylindrical batteries for two-wheelers, and for four-wheelers and the battery energy storage systems, we need prismatic. So we are just starting the investments, and we are working towards getting this nominations and also start off business for the other businesses. So that would be, we should give ourselves at least 2 or 3 quarters before they become mature, and we are able to supply them full time, because there's always also this certification and homologation in between.
Mr. Sastry, good morning. Neeraj here. When one goes through what you said in the con call, like there are various line items on which you are doing capacity expansions, right? I would love to know, as FY27 moves ahead, when do some of these capacities, or FY27 or 28, when do capacities come on stream, and do any new capacity additions add meaningfully to your ability to have top line or EBITDA growth?
Yeah, 4 prominent expansions which we did. One is the alloy wheel for two-wheelers that will see peak production, that is 600 crores per annum in October. The run rate will start in October of peak production. And the other one is the battery pack, which we just announced, that this also will reach its peak production, let us say in Q3, Q4. It will reach its peak production capacity. And of course, the additionals, but there there is no roof as to how much we can grow, because there's a lot of business which we are working on, and that would grow much more. And next one was our plant in Shendra, Aurangabad, which would cater for specialist aluminum die casting for the 4-wheeler electric vehicles and for the export market. That we are anticipating in the coming quarter. We should see a start of production. And there too, at least in the first year, we see 250 to 300 crores of revenue, and following which we have a lot of ramp up in those businesses too. And the fourth foray is into the braking systems plant, which we are having in Chennai. And that will see its peak start of production in October. So this is how we have the phase.
So then 2 questions really. For FY27-28, seems from what you've told me, a lot of this will have a meaningful impact in FY28, I presume. And in your con call, you had mentioned that while Q1 might have some volatility due to all that's happening in geopolitics, if everything normalizes, Q2 onwards, things will be good. It seems that things are normalizing. Are we expecting a tough Q1 and a good Q2 performance Q2 onwards? And does FY28 see a meaningful bump up in revenues because of all these capacities coming on stream?
Definitely, yes. We are very positive. All kinds of modeling which we have done and the calculations of the past orders, one new RFQs which we are seeing a very strong revenue growth. And from a profitability perspective, yes, we are right. The Q1 is a tough quarter with all the commodities going in. Aluminum went up by 120 rupees per kilo. So we will have some catch up to do there, either in the form of a lag in terms of getting our pass-throughs, or the percentage in terms of EBITDA percentage looking bad initially optically. But going forward, we see that a lot of stability coming in, and all the initiatives which are taking in multiple areas will aid our top line and also the bottom line and growth across multiple sectors. It's a very balanced approach we have right now.
Would you qualify that with some numbers? I know that PAT growth was impacted due to those accounting issues, accounting standard changes. But are there some numbers that you're giving for FY27-28, revenue, EBITDA growth?
Generally, we do not give the numbers, but I can definitely say it's very strong.
Okay, just one question, Mr. Shastri. When you're talking about battery packs and growing into that space, 2-wheelers and of course 4-wheelers as well, versus the other EV ancillary business that you do, what is the margin profile comparison like?
See, the way we plan our new businesses is that while there could be an initial ramp-up stage, but overall we plan it to be accretive to our original margin. So this will be accretive. And it calls for a lot of initiatives in terms of managing the supply chain, localizing some of the key components. So we have a approach when we get into a new product. It happened with the ABS. We started with a lot of import content. Today, almost everything is made in-house, which improved the margin profile. And so is the case with our new ventures too. We will soon see that they are margin accretive as these initiatives kick in and as the volumes mature.
When you say margin accretive, to what extent and by when, sir?
We should say we generally have a timeline of 3 to 4 quarters by March for the margins to settle. And yes, not very dramatic, because these are products which are heavy in terms of their raw material content, but clearly they will be better than our average.
Mr. Sastry, I just want to ask you a follow-up, since you seem to be making a lot of moves in electric vehicle space as well. If you broadly judge content per vehicle at the end of FY26, and you move because of all of the various product lines that you're starting at the end of FY27 and perhaps at 28, where do you see this number moving?
The content per vehicle, it's again a subject of, if you look at our traditional products, we are improving on our content per vehicle by getting more businesses with the existing customers. So if we have in one program with one customers, we are getting more programs, and that's where we are seeing an increase in content. And we are also seeing increase in content because we, from the traditional shock absorbers, we are going into, let us say, an inverted shock absorber. We are adding the ABS, we're adding the hydraulic braking system. So we are seeing that there is a good improvement in the content per vehicle with our business as usual. Now with the battery packs coming, so anything like, if you want to make a guess, a kilowatt hour could be anything like $100 to $110 per vehicle, and these are typically 3 to 4 kilowatt vehicles which are there. So as we see more penetration, our content per vehicle on an average will also grow significantly. But we have to wait for the actual ramp up from the customers also.
Okay, so then we'll wait for maybe the end of next quarter to get a number from you, Mr. Sastry. Thanks so much for taking the time. Pleasure speaking with you. Wish you all the best.
Thank you. Thanks a lot.
All right, well, as crude oil prices have fallen, they're currently below $80 to the barrel, and the hope for a deal between the US and Iran, Bikaji Foods in particular is likely a beneficiary as the fall in input costs also comes through. We're going to speak to the management about a variety of factors, including those input costs and the path ahead on revenue. But Mahima joining in to give us some quick perspective on how the company is placed and how it will benefit. Mahima?
Right, so Alex, for all of these snacking companies, right, almost 50% of their raw materials is edible oil and palm oil, and easing of crude prices definitely is positive for snacking names. Now, overall, between Feb and March, edible oil inflation went up by around 12 to 14% and packaging material also went up by 25 to 30%. They've taken around 3% price hikes in April, that is Bikaji, and family packs also saw increases, but impulse packs is where they reduce grammages. So going forward, now that crude prices are easing, the important factor to understand here would be as to how and when this price hike is absorbed entirely and volumes pick up from here on. So this is the entire perspective on what we want to know from Bikaji.
Okay. In fact, let's get a view from Rishabh Jain. He's a CFO of Bikaji Foods International joining in. Mr. Jain, just explain to us the correlation between crude prices and what it's doing for your raw material costs in a little detail, please.
Yeah, so thank you very much. So crude oil largely, we have seen big increase in edible oil, and edible oil contribute close to 28% of overall sales percentage. So it has impacted us, and we have taken one price rise in April, and now we have seen some softening of price, but yeah, the major impact will come in second quarter overall.
So edible oil is going up. Why? Because transportation costs have gone up because of crude, or other fundamental reasons? What is the linkage?
So edible oil largely took palm oil and all the wheat, cottonseed. We normally use cottonseed and other oils in overall our namkeen segment, but overall all the oil rise in the same way when palm oil drive the overall sector. And we've seen palm oil rise to close to 15-20% compared to pre-war. And of course,
I think you've gone on mute, or maybe I've lost your audio.
Yeah, no, I couldn't hear him either.
Can you hear me, Mr. Jain? No, I think some of that audio connection is gone off. But important to see, because packaging was a big pain point for a lot of these companies, including for Bikaji, but not just restricted to Bikaji. For the entire FMCG pack, there will now be a relief now that those crude prices have come off.
Yeah, and I mean, we keep on hearing about how palm oil could be a major feedstock for biodiesel. I'm not 100% sure of that exact correlation, but suffice to say, because these prices tend to move in tandem, we are at least seeing that as a very basic thing. I think the other thing to figure out from Rishabh Jain would be that, okay, I'm told Rishabh Jain is back, so before I ask my question, let me ask him to finish his point that he was making. Rishabh, I'm sorry, but we lost you midway. Could you finish your point?
Yeah, so largely this crude largely has impacted overall palm oil and overall oil segment largely. But we're seeing good increase in edible oil price of 15-20% overall. And but yeah, now we're at softening of crude oil, palm oil is also softening, but the major impact will come in second quarter of this.
So the reason why I was asking about the correlation between crude oil and palm oil is why? Because of the transportation costs, and do you expect palm oil prices also to come off as sharply as crude oil prices? Crude oil prices movement is generally more volatile.
Yeah, so of course the transportation cost is big, but overall what we've seen, we're not seeing much downward trend in palm oil as of now. But yeah, in second quarter we'll see some downward trend in palm oil. Currently it's stable as of now.
Okay. Mr. Jain, the distributor checks and the kind of interactions that my colleagues are having in the broader space seem to suggest that companies like yourself have a certain amount of inventory. So even if raw material prices from this point cool off, there is an anticipation that it'll be a while before you'll be able to completely pass that on to customers. Is it fair to say that in all probability in Q2 as well, you're going to have to take some price increases?
No, so largely we've taken one price rise, and we don't see any major price rise in coming quarter. This will manage our overall P&L.
Can you give us a sense, Mr. Jain, of what is the quantum of the price increases you've taken in Q1? And this is so while you're not going to see any price increases, would you see a price reduction?
So we have taken one price rise in April, which was close to 3.5%.
Okay.
And largely in second quarter we're seeing some softening of prices in key raw material, edible oil, and packing material. In fact, because packing material contribute big to our overall P&L, and we're seeing big increase in packing material during post-war time, and currently it's softened. So it has helped us in overall managing P&L.
Okay, and so therefore, are you going to pass that on? Do you anticipate that prices will fall?
So it depends largely. So currently we're not seeing any passing on the prices. We'll try to maintain this prices.
Okay, Rishabh, I just wonder how has the demand situation been in the last 3 or 4 odd months? Usually this is the consumer type which doesn't have so much of a blinking during such times, I presume, but I may be wrong. So I'd love to know if there was an impact that you saw on demand, and do you believe that if there was an impact, is that changing now?
So largely in last 7-8 months, we've seen good demand scenario overall in overall segment of snacking segment, what we're seeing in bakery foods. So in this quarter also, we've seen reasonably good demand overall demand outlook as of now. And of course, inflation has been higher this year, but from demand perspective, we've not seen major impact on demand scenario as of now.
Okay. Yeah. Now, the other piece is about exports that you and a lot of your competing firms are doing. It was maybe about 100 crores in FY26, so a bit of a milestone reached. Is there a J-curve effect into play into exports going ahead? What do you guess, FY27 or FY28?
So of course, export is a big focus area. But yeah, this year Diwali has been shifted to November compared to last year. It was in October. So first quarter will be dull, but overall, from yearly lens, next 2 years will be big for export perspective. We will see at least 25-30% growth year on year in export for next 2-3 years.
Okay. Rishabh, thank you so much for speaking with us. That's the management of BKG Foods, the CFO Rishabh Jain speaking to us about the outlook there. Stock not doing much today, but there is, of course, a relief from crude oil prices cooling off. Is there some relief coming in from Switzerland? That's the question, isn't it? So several key understandings seem to have been reached between US and Iran in their first high-level talks in Switzerland. NDTV's Vishnu Shom joining us live from Lucerne. Vishnu, you were one of, I think, the only Indian journalist who actually made it to the resort where those talks were going on. First of all, did anyone shake anyone's hands? Because all we're seeing on our social media feeds is how everyone ignored each other. There were no photo ops, but it seems like the talks actually went through in first round.
And that's what the surprising part of all of this is, Tamanna. I certainly didn't expect. I thought by this time today, the entire process would have ended without any progress. The Iranians would have walked out as they almost threatened to do yesterday. And that would be the end of this. But overnight, things actually picked up steam. But when I was there at the Bergenstock Resort yesterday, there was this one situation, one scenario where JD Vance walked into the room. There was supposed to be a photo op. The Qatari leader was there. The Pakistanis were there as well, Shahbaz Sharif and Asim Munir. And then the Iranian foreign minister, Mr. Araghchi, just left. So they didn't want any photograph at all with the Americans. For them, that would not be correct at this stage, given the tensions that do exist. But since then, there has been an 80-minute conversation, I believe, between the Speaker of Iran, Mr. Bagher Ghalibaf, and the Foreign Minister, who met J.D. Vance, Jared Kushner, and Steve Witkoff, the American representatives, in these talks. And so that's a very big step forward. And now you've got the broad terms of this agreement. Just very briefly, Tamanna, there are two parts of this which strike me as being important. Firstly, that there is communication between the two parties to prevent miscommunication, right? So they've agreed upon a way in which they can communicate much better. And they've also want a deconfliction cell to deal with the Lebanon issue. Because unless Israel and Hezbollah stop fighting, then I dare say the rest of this entire MOU would be a non-starter.
Vishnu, how critical is that second part? Because sitting from the outside and seemingly that is what everyone's tracking, whether there's a continuation of aggression from one side to the other on that Lebanon front for Israel. And Israel seems to not have been party to this. Of course, they're not there. But what is the buzz on the ground? What are you sensing with regard to Israel and Lebanon?
There's a statement which Qatar has released a short while back, and it refers to this. And I think it's important that I just briefly read out this sentence. The parties agreed on the creation of a deconfliction cell between the parties, the Lebanese Republic, and facilitated by the mediators to ensure the adherence of the termination of military operations in Lebanon as per the MOU. Technical talks will continue for the remainder of the week at the Bergenstock Resort on all issues. Now, this is really important because Iran is also a player in this. The way it's often been reported is that, Israel keeps attacking Hezbollah. Israel doesn't need to attack Hezbollah. Israel is not actually withdrawing from the south of Lebanon. But in fact, Hezbollah's association with Iran is something which is time-tested. It's been there for decades. And therefore, Iran is an equal player in this. And that's something which Trump has also said in the last 48 odd hours. So therefore, if you're talking about a deconfliction cell which has been created, it does in a sense put the onus on Iran and Israel, Iran and the United States, to ensure that they can work with Israel directly or indirectly to ensure that the Lebanon issue, the Hezbollah issue, doesn't stall the entire process.
Vishnu, thank you so much for joining in this early in the morning. But I must say, you are way more senior than me, but a senior journalist delight to see how you waded in, asked Donald Trump those two questions. Everybody out here was cheering the fact that you did it so well. So kudos on that. And I don't need to tell this to you, but keep up the great work.
All right. Thank you very much. Thanks, my friend.
Yeah. Okay. Well, that's Vishnu Shroman. It was really interesting, right? Vishnu is immensely experienced, but out there with that young reporter's energy out there asking Donald Trump those two questions.
We're very
not one, but two.
For using young reporters' energy.
No,
reporter is a reporter when you're out there, I suppose.
Yeah, but no, at least to me, I think the enthusiasm for going out there and getting all going is different right now for me than when it was when I was maybe 20 years ago or thereabouts. So that's just my personal view. But it was amazing to see Vishnu do what he did.
Yeah. For somebody who, I think, wasn't he skydiving into the Alps for Davos?
Yes,
so that energy seems to be quite palpable. Right? It was in evidence in the interaction as well. But let's move on and talk about TruAlt Bioenergy. It is in focus after the company's sustainable aviation fuel project has received 150 crore financial support or aid from the government under the PM Jeevan Yojana. And there are prospects going forward as well. Let's set the context before we speak to the Managing Director, Vijay Nirani, to understand what the potential for SAF is and what the timelines are as India moves up the ladder with regard to higher share of SAF. Sharad joining in with some of those details. Sharad?
Well, it's a very interesting take. SAF means a sustainable aviation fuel, and the government has actually allowed this 150 crore financial assistance to be given to the company, and of course the expectation is that this incentive would give almost 7 to 10% of the project's capital expenditure, and the commercialization which is happening for the advancing biofuels, that will aid the company as well. Company itself is having a very big project in Andhra Pradesh, and of course we're expecting that to kick in over the next 24 to 36 months.
Okay, thanks so much, Sharat, for that. Vijay, thanks so much for taking the time. Vijay Nirani, of course, Managing Director of TrueAlt Bioenergy, joining us this morning. Alex here. So we spoke about the prospects a little while back when that announcement came through, India aligning with the targets that I think Europe has, and that 1% blending target, which moves up to 2% and subsequently to 5%. What are the numbers, though? If you're talking about your own production, what are the timelines?
Thank you so much, Alex, for having me on your show. And SAF is a big opportunity. So the last we met, I think about 6-7 months ago, we were gung-ho about it because the target that you just mentioned for India to start blending 1% of SAF is going to start next year, that is 2027. And unfortunately, we don't have any plants in the country that can actually give out the SAF other than the one in Indian Oil, that is in Panipat, using the HEFA route. So the demand is quite large. The demand is for 70 crore liters in the next 3 odd years, that is by 2030. And we don't have not even close to 3 crore liters as of today. So TrueAlt, what we are doing here is trying to set up a 10 crore liter per annum of alcohol to jet based SAF. And we have already in an advanced stage to begin construction works. Hopefully by August, we should be able to start constructions on ground. We have already engaged with the front-end engineering for technology. All of that is happening. One interesting take, Alex, is when we began our thoughts for SAF, that's about 2 odd years ago when we were just in the drawing room, we were wondering that the price of SAF could be a little higher than the conventional air turbine fuel. Will there be acceptance to the consumer? But looking at this geopolitical issue, of course, it could be a stopgap issue, but the price of air turbine fuel is as high as almost 225 to 250 rupees a liter in the domestic use case. Whereas the air turbine fuel just a few months ago was about 110 rupees. But so today, if you consider the price of SAF is going to be cheaper than air turbine fuel.
At least for now, with the way that Brent has moved, right, Vijay? And one assumes that and one hopes as well that the geopolitical tensions dissipate and you once again have crude oil prices that will move towards that $70 per barrel mark. But specifically on the numbers, 150 crore worth of aid, can you give us a sense of what the numbers are with regard to the capex of this plant that you've mentioned? What is your own contribution to that?
So we are estimating the project costs to be somewhere about 2,000 to 2,200 odd crores, give or take. But it could be much lower. So that's the upper end of the band. So if we do our cost rationalizing once the feed is out, we hope to complete it in much lesser than 2,000 crores. So this PMG1 benefit that Government of India came out in 2019 was for the first 11 or 12 commercial plants that will take concept to commercial scale, these new age biofuel options, that's 2G ethanol or sustainable aviation fuel and stuff like those. So TrueAlt is very happy to be one amongst those 11 projects that have been sanctioned this benefit. So let's say if the project cost ends up being about 2,000 crores, 150 crores of grant, hopefully within, as soon as we commission the plant, we will have that benefit, which will go down to ease the debt burden or the capex burden. That's a big achievement. I'll also add to this, Alex, we are also in discussion with the state governments for additional incentives and benefits, because this is the first of a kind plant and we will need to ring fence the whatever economics that we can to the best of possibility.
All right, that sounds good. This 2,000 to so I'm saying in a range, right, Vijay? 2,000 to 2,200 crore. Is this only for the 10 crore amount that you're planning?
That's right. So this is for the 10 crore liters per annum of capacity. So what this will do also, Alex, for our company is we have one of the largest ethanol manufacturing capacity. So close to 30-35% of our gross production ability can be sold to the SAF business or can be diverted to the SAF business, wherein we get a higher value for product. So it is going to have a double benefit to the company.
Now, this 2,200, what is the quantum that you will have to fund through debt and how much through internal accruals? What's the breakup?
So we're still working on that bit because right now, earlier we thought it could be under a joint venture with a large oil and gas player, or it could be a joint venture with a large airline carrier, because in the end, these guys are the ones that will dissipate or consume the molecules that we make. But now, considering the benefits and considering the global push for aviation fuel, we are thinking of going solo. And in that case, the debt to equity could be somewhere about 65 to 35 or 70-30 sort of a range, because there is a lot of good incentives for the debt that we carry. So currently the structure is between 65 to 35 or 70-30.
And would that require, Vijay, additional infusion by the promoter group into TrueAlt at some point? What is the plan on the equity side?
So if we go ahead on the earlier plans on a JV, then we do not need to do any more infusion. Sure. But if we go solo onto this, the promoter will have to bring in a little of the cash, because the next 2 years we will not have enough free cash flow coming in from the business, because we also have about 24 compressed biogas plants being constructed in TrueAlt. So 24 CBG plants and SAF, we won't have enough free cash flows. So if we do it all by ourselves, then we will need to infuse. The promoter group will need to infuse. And we are thinking about doing that.
Okay. Let me ask a few more questions on that, right, Vijay? Because you're talking about 2,000 crore rupees in this particular SAF facility. And you also mentioned the other facilities that you're building. If you put a comprehensive number for FY 27-28 CapEx, what would it be across all of these facilities?
So let's break it down to the compressed biogas business. So we've got 4 business verticals. First one is ethanol, no capex there. We have already spent close to 2,500 crores of capex. Second business is CBG. We have 2 joint ventures with GAIL and Sumitomo. In this JV, in the next 2 years, we have plans to do about 1,400 crores of capex. So 1,400 crores is first set of capex that is already happening in phases as we speak. And the third business vertical is aviation fuel, where we plan to infuse about 2,000 or 2,200 crores of capex within the next 2 years. So gross, if you say additional capex, we would have about 3,600 odd crores that will be coming in with a mix of both debt and equity.
Can you give me a number for the overall equity required, though? If you talk about just the 2,000 crore for the SAF facility, you're talking about upwards of 600 crore, right? Based on the share that you've just described. What about the rest? There are some joint ventures there. So the total number.
Yeah. So just in plain equity numbers, it could be somewhere about 425 odd crores for the CBG business. And it will be somewhere about 600 crores for the ethanol business. And company has the cash being generated. So we will use the cash that is generated out of operations, as well as there could be an infusion if we go solo for the aviation fuel business. Otherwise, we can do it with using the free cash itself.
Okay. And so therefore, the last question, Vijay, which is to do with the equity infusion that you're contemplating, do you have a number in mind based on what you've just described to me?
Not really, Alex. So I think that's still in the works. So maybe in the next few weeks, we would be able to come out with that.
Okay. And very lastly, on the SAF facility, what are the completion timelines that you're anticipating and contribution to revenue?
So we should be able to see revenues kicking in from FY 29 onwards. And groundbreaking, we're targeting to start from, let's say, August of this year. So 18 to 24 months should be an ideal time for us to start, or rather get to some level of completion for the project.
Exciting times, Vijay. Thanks so much for taking the time and explaining to us. Look forward to speaking to you real soon.
Thank you so much.
Very interesting. And it's an interesting space. Why? Because for them in particular, it's not just a dependence on sugar cane, because they have multiple sources and they can actually move it based on what the best available feedstock is. So it's an interesting play and one to watch out for, certainly.
I just wonder how much SAF adoption will take place, actually take place for airlines ultimately, because the kind of changes that aviation industry has to make is another whole question mark.
Yeah, the targets are interesting though. It's small. 1% in 27, 2% in 28, and then 5% in 2030. Right? So the numbers are small. The number that he's speaking about is 70 crore of requirements, of which these guys have only 3 crores, right? So which is not very much. It's time for a very quick break. We've got more conversations lined up on the other side. In fact, we've got Harish Krishnan, the CIO equity at Aditya Birla Sun Life AMC on the other side. So stay tuned for that. We'll be back before you know it.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the...
Back with India Market Open right here on NDTV Profit. It's been a while, but it's great to have Harish Krishnan, CIO of Equity of Aditya Birla Sun Life AMC, on a day when the markets are not doing too bad, following up after last week's move. Harish, great having you. Thanks for joining in. It's been a while, like I said. Neeraj here, good morning. You know, start off by something that you put out a few days back, 10 days back to be precise, when you're talking about how a very few number of stocks outperforming is a rare event, and then you pointed out that this is similar to the Ritik episode of India in 2018. Could you explain what you meant when you posted that?
Sure. Morning, Neeraj. Always good to have to be on your show. So essentially what we are seeing now is a vengeance trade of the larger or the mega caps as far as the global markets are concerned. So the data that I posted was for this year or over the last 12 months, close to about 15% of the constituents of MSCI emerging markets are only outperforming MSCI emerging markets. So these kind of peculiarities happen when the heavyweights do all the heavy lifting and everything else, is kind of underperforming that. The closest parallel that we have had in India was in 2018, wherein, I'm sure many of us will remember how polarized the market was, wherein the so-called Ritik trade, which was the HDFC banks, the Kotaks, the Reliance, the heavyweights at that point of time, outperformed massively. And that year particularly, only about 18% of constituents kind of outperformed NSE 500. So the primary hypothesis is that these kind of narrow markets don't last for very long. They do tend to broad base over a period of time, as we've seen in India as well. And therefore, while it's hard to time these kind of scenarios as to how long these heavyweights will kind of do all the heavy lifting and continue to kind of outperform, we believe that this is something that can reverse. And on the other side of the reversal, India stands to be a very big beneficiary, because today, clearly, as I'm sure you know, among the top 10 heavyweights of MSCI emerging markets, India doesn't even feature in. And therefore, we've kind of got sold out to accommodate a lot of these heavyweights in the emerging market kind of index.
Right. Harish, if that were to indeed happen, right, what is a playbook? Till now, we're not seeing the Nifty 50 participants do too much, right? Precious little, if you will, select few, but the broader end has actually gained both preference as well as is showing earnings growth. And maybe the newer themes are not there in the Nifty 50 as yet. So would you also kind of have a slight skew in that your preference will lie more at the non-Nifty 50 end currently? It could be large names, Nifty 51 to 100 maybe, or maybe the SMIDs.
So, I think it's better to let the funds do the talking. So maybe that will give a better sense as to how we've kind of navigated during this period, right? So in 24, when there was a lot, all pervasive talk of multi-baggers, etc. For example, in our flexi cap fund, we used to have about 20% exposure to the mid and small caps. As it stands today, we have got about 47% exposure to mid and small caps. So we've used this kind of correction and the froth going away from the mid and small caps to kind of increase our allocation to mid and small caps. But that is just one way of looking at it. I think the more important way to look at it is a sectoral. Which are the sectors and what is the right to win in various segments. So if you look at, say, the banking space, I genuinely do think that the larger banks have a significant advantage, be it on technology, be it on customer acquisition cost, over these smaller banks, and therefore our preferences for the larger banks out there, which are primarily in Nifty, so to speak. If I look at, say, the metal pack, again, it's the big boys playbook out there, not so many as far as the mid cap or the small cap is concerned. If I look at sectors like insurance, which has not really set the stage on fire over the course of the last 5 years or so, again, the larger names are consolidating in the industry and gaining market share compared to the smaller ones. So again, our preference over there is for the larger names. If I look at sectors like, say, on the other hand, chemicals, that would be primarily in the mid and small cap space, not so much in the large space. If I look at, say, the new age companies, I would say there is a lot of excitement in the mid cap space out there where we've got a reasonably large exposure out there. If I look at auto AMs, which can be a very large beneficiary, again, our preference is on the mid and small cap. Within that, of course, these are all, large market share companies globally that we want to kind of look at, which have got very good margins. So that's again in the mid and small cap space that we've got exposure in. If I look at, say, consumer retailing or discretionary, again, our preference is for the mids and the small cap space. So I think it is sector by sector. It is not just a blanket that, we like only the mids or we like only the large cap companies. And clearly, given the fact that over the course of the last 2 years, we've seen some amount of consolidation in the markets, we think that there is a relative margin of safety appearing in many of these names. The last point I want to kind of leave you with is that, the last 3 months, especially with the West Asian crisis, what we've seen is the availability has become a challenge as far as raw materials is concerned. This is in some sense similar to the post-COVID playbook that we've seen, where the organized space took massive share gains from the unorganized space. And we do think that, something similar can happen even this time. Of course, it's not going to be as, pervasive as what it was post-COVID, where everything was shut down and you had revenge spending and everything coming through at the same time. But we do think that there is going to be share gains away from the unorganized space to the organized space, which can also act as a tailwind for overall earnings growth.
Harish, hi, good morning. Tamanna here. Just wondering how exciting you're finding the surround sound opportunities around AI and data center. We were talking earlier this morning about a company called Blue Cloud, which has put out an exchange filing saying they're in conversation with SpaceX for a possible deal. There's another company today that we talked about, Kirloskar Oil, which is entering the data center energy side of things. So not asking you to comment on these two specific stocks, but just as a theme, how exciting are the nuts and bolts and the plumbing or pipeline companies for the whole AI data center space in the Indian equity firmament right now?
So the picks and shovel strategy, as you rightly called out, the nuts and bolts, is something that's found a lot of favor, especially when one can't do such a huge amount of capex as the hyperscalers are doing. But having said that, I think Indian companies are really at the fringes of supply chain as far as the AI hyperscalers are concerned. While there will always be few companies that can potentially gain, I would rather focus on companies where the customer, which is the Indian customer, stands to benefit significantly from AI. So the way we are thinking about AI is that there are a whole range of new age businesses for which there's a lot of cost of, say, engineering workforce, which is there, which can come down significantly. A lot of new age businesses, as you're aware, are not optimized yet for profitability. And we think that, given the fact that they have a head start in terms of competition, of customer acquisition, the lower cost that can come through can be a very, very big opportunity for many of these new age businesses, which own anywhere between, say, 40 to 50%.
Like which ones? For example, again, not specific, but when you say new age business, is it sort of like a Nykaa coming in and saying in its investor presentation that we're going to be using AI? Is that what you mean? AI to reach the consumer or AI to reduce costs?
So I think, what we have seen over the course of the last 4-5 years is that we've got established leadership by a few companies where, in many cases, there's no number two also in that space. So if you think of insurance, there is clear number one. If you think of, say, something like, say, value retailing on the online space, you've just one player left standing, who are the last entrants to get into the space, but they're the only ones left standing. Now, for all of these players, and again, the scale of the opportunity is quite quite humongous, right? So for example, for the value retailer that we're speaking about, they've got a 25 crore user base. Now, think about it. I think there are maybe about 4 or 5 brands in India which have got such a huge user base. It could be maybe the telcos, maybe some of the large 2 banks that is there, and maybe the postal services in India. And so when you've got such a huge amount of customers that you've already acquired with no number 2, number 3 competition, and you've got a large engineering cost of anywhere between say 750 to 1,000 crores to service the next set of customers that you're going to onboard, and how you're going to further improve the unit economics. I think a lot of AI can go in reducing this cost quite significantly to service the next 10 crore user base for these kind of opportunities. So what we really fancy in new age businesses are those businesses where the customer habits have become so entrenched, and there is a value proposition where they are the number 1 player in that particular category. And now you've got AI which can actually optimize a lot of their cost and improve the customer journeys which are there in ways that we could not have thought maybe 2 years back. And that really is the opportunity that we think is far more exciting than identifying companies which supply maybe one part to a SpaceX or something else, which we don't even know whether how long that trade is going to last. We don't know the criticality of the part that the Indian company is supplying to the global value chain. So we don't want to be so far away from that trade, the epicenter of the trade. We would rather be where there is greater control of the destiny, so to speak, by these businesses.
All right. Harish, quick last question, and this is perhaps asking you to sum up quite a bit of what you've spoken about, Alex, here. A lot of foreign investors primarily focused on AI, but already you have murmurs that say that maybe this is a little overblown. And there is a tendency when you have such a large theme that you ignore practically everything else. You've already described the sectors that you like. But do you think that gains for the Indian equity markets could be capped till such time as this AI theme is roaring globally?
I think it's a fair characterization that, more than anything else, I think we've got a lot of supply of paper that's likely to come to the markets. And that's also going to kind of put a ceiling to the overall action which is there. But I think, the reality is that we are positively biased towards equities at this point of time. Competitively, from a currency point of view, our competitiveness has further gone up. That typically acts as a tailwind. Yes, at this point of time, other markets look far more interesting from an earnings growth point of view. But eventually, I think as the dust settles down, people will come back to the structural story that is India. Till then, maybe, yes, gains are kind of capped more because of the supply of paper. But would definitely do think that, it makes for an interesting time to allocate to Indian equities.
Got it. All right. Harish, thanks so much for taking the time. Always a pleasure speaking with you, and look forward to the next one. I just want to draw your attention to an interesting note. Citi on Cipla, it's a tactical buy that they have on Cipla. They've maintained a buy with a target price of 1,700. That implies an upside of 26%, at least at the time of writing of the note. The stock is up as much as 3.6%, top gain on the Nifty 50. What are they saying though? They've initiated a 90-day positive catalyst watch on Cipla. Near-term US triggers are there. G-Flovent approval is positive, as well as G-Ventolin. That's a launch that they've done, and a strong 50% share in the Nintedanib formulation, essentially. These should support a rebound in US revenues going forward. India business is tracking well as well, aided by a recovery in the respiratory segment. Indore plant re-inspection is due any time and could provide an additional catalyst upon US FDA clearance. Easing geopolitical pressures are further reducing the risks around input costs and margins, and earnings are likely having bottomed post the Revlimid decline. The risk reward looks attractive at this point. Cipla also offers a strong domestic proxy amid elevated valuations of India heavy peers. So that's an interesting note on Cipla. It's reacting sharply.
Yeah, and one of the reasons why Cipla is up and about. Markets overall doing well. We'll just take a quick look at the Nifty before we wrap up. Comfortably above the 24,100 mark this morning, 138 points up, and of course IT firing on all cylinders. Interesting that there's so many voices, whether it's an IBM chief or an Aswad Damodaran, there's Krishna Damodaran saying that, is the whole bubble a little frothy right now? Is AI and the data center spend a little frothy? Well, that's some food for thought before we wrap up here. But from everyone here and everyone producing the show, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to NDTV Profit. You are tuned in to the Crypto Minutes powered by CoinSwitch, your daily dose of news from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. For Bitcoin, range-bound trade persists between $64,000 to $65,000. Argentina eases crypto taxes. El Salvador stacks Bitcoin. SEC Commissioner calls for self-protective crypto rules. And Japan pension fund eyes 1% crypto allocation. Bitcoin market shows stagnancy and range-bound moves between the 64,000 to 65,000 levels, and the technicals are oversold, with the derivatives data suggesting long positions being liquidated as the US spot Bitcoin ETFs, they have shed roughly $6.35 to $6.4 billion over the last 30 trading days. Now this marks, of course, 6 straight weeks of net outflows and cutting cumulative inflows to roughly $53.4 billion. Argentina issues tax exemption to WASPs. WASP is nothing but a virtual asset service provider, and El Salvador is keeping on adding the Bitcoin to the country's reserves. Now that stands at roughly 6,687 Bitcoins, which is valued more than $510 million. SEC Commissioner Hester Pierce says future US crypto rules should protect self-custody, financial privacy, and the freedom to publish code without permission. Pierce framed these foundational guardrails for how lawmakers and regulators approach tokenized securities, perpetual contracts, and other asset products. Japan's nationwide business corporate pension fund may allocate 1% of its assets to crypto by 2026. That's roughly $21.3 billion, or you could say billion yen, and 130 million fund planning to use a passive investment product which is managed by a top hedge fund. Now, of course, the shift reflects the ongoing crypto legislation efforts in Japan, which aim to align digital assets with the traditional financial rules. Well, here's a quick check on the changes to the crypto prices over the last 24 hours. And largely, if you look at the numbers, they have been slightly positive, but in a very thin range. And of course, for Bitcoin, important support resistance level stands between $64,000 to $68,000. Well, now it's time to take a look at the crypto strategy for the day on Crypto Decoded. Here's what's there to keep in mind today. Now, overall, looking at the numbers and the charts, there's a risk aversion strategy at play. Remember, oversold solutions or the conditions can precede a bounce going ahead, and there is an ongoing liquidation also of the leveraged longs, indicating a little bit of pressure. If you take positions, take only when the prices stabilize. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Puneet Zaveri, and this is a show that gets all your stock related queries answered. For viewers who are tuning in, you can either give us a call or send us your stock related queries on the WhatsApp numbers that are flashing on your screen up there. While you guys do that, let's take a quick look as to how the markets are doing. The Nifty 50 is holding up above the 24,100 levels, up 0.5%. Let's try to pull up the heat map and see as to what are the counters that are contributing to that up move. You have Cipla, which is topping that charts. You've followed by something like Tata Motors, Reliance also doing fairly well. So heavyweights are contributing to that. Reliance up 2%. Bajaj Auto, Tech Mahindra, Eicher Motors are also some of the names that are doing fairly well. But on the flip side, you have Max Health, which is down by about 1%. Something like a Titan, which is also seeing a downtick of around 0.8%, and Interglobe today seeing some profit booking coming in. Let's try to pull up the Bank Nifty as well. Slightly underperforming the Nifty 50, but still above the 57,800 levels for the Bank Nifty. Let's try to pull up the sectoral heat map to see as to what sectors are contributing positively. You have the oil and gas, which is up almost 1%, followed by auto and IT, which are doing fairly well. Media, pharma also, following that up move coming in. It's only the FMCG, which is slightly in the red, down by about 0.09%. Let's try to pull up the advance decline ratio as well to see as to how the broader end of spectrum is looking like. You have right now around 1900 odd advances versus that of 600 odd decline. So clearly it's the bulls market today. But a large part of that, Puneet, is coming in from the small cap index instead of the mid cap index, and that's been the story so far.
And most certainly it has been a positive one, to say the least. Last week we ended above the 24,000 mark again. When you look at the BSE mid cap and the small cap index as well, those have been very positive. Showing resilience across the board. So, let's pull up the mid cap 150 and the small cap 250 first before we move to these individual names, because while we started off in the green, we've continued to maintain that with a 0.3% uptake in terms of the mid cap 150. The small cap 250 though is seeing the real action today, up 0.6%. And when you look at the BSE 500, there you've seen stocks like Craftsman Automation over Thursday and Fridays when they closed the QIP as well, raising almost 2,000 odd crores, seeing some profit booking today. Aavas Finance, we've discussed in India Market Open, down also 3.5% at this point of time. Rosari Biotech, Brigade Enterprise, or some of the other ones. But you've seen some gainers today, and that's been across the board, led by NoSil, up 18%, Lakshmi Organics up almost 9%, and Clean Science up 6.5% as well. Let's also pull up Kirloskar Oil, because that's arguably one of the biggest movers of today, locked in upper circuit, continues to gain, as you've seen, in terms of order wins in the data center side of things. And on the other side, you're seeing some fag end of impact on Cummins. You've also seen that all of these stocks continue to be in focus in terms of data center wins and localization of that in India, but continuing to see a very large momentum as we are seeing on the gainers in the BSE 500 as well. But the markets continue to be in green, and also let's welcome in a guest who will be solving your stock related queries. Saurabh Jain, Equity Head Research at SMC Global Securities, and Gaurav Sharma, Associate Vice President and Head of Research at Globe Capital. Gentlemen, both of you, thanks so much for joining in this morning. Let's start taking the first stock related query now, and viewers, you can also call us on the landline number that's flashing on the top of your screen. The first query coming in from Padma from Bengaluru on Karur Vysya Bank. She's holding shares at almost 295 rupees per share, and asking Gaurav what could be a key short-term target to look at. So she's purchased very recently. Anything that you're looking at the charts, Gaurav? Very good morning to you.
Hi, Puneet. Very good morning to you. Morning, Saurabh. Stock is looking good. It is just consolidating near its highs. A break above 300 will quickly take it towards 330 plus levels. Hold is what I'm suggesting to the viewer.
The next one that we have is from Vinod. It's an open-ended question that we have, Saurabh. He's writing us from Bangalore. He says he's looking to invest around 10 lakh rupees for a period of 3 years, and he wants to know as to how can he distribute this 10 lakhs into different stocks. What would your picks look like?
Hi, good morning. Good morning, Puneet, and good morning, Gaurav. See, in my opinion, he can divide his 10 lakh rupees into 3-4 sectors. For example, what we like is maybe capital goods. He can invest in capital goods, utilities, banking, and maybe some hotels. Like that. Likewise, he can distribute his money. In the banking pack, we like ICICI Bank, Indian Bank, and maybe Canara Bank. In the capital goods space, he can go with the company like Larsen & Toubro. He can also buy Reliance Industry. In the utilities, he can go with the company like JSW Energy or NLC India.
That's a whole big list that Saurabh has given us just right off the bat this morning on Ask Profit. But let's go across, take the next question as well. And this is from Murthy from Vizag. Now, he wants to know about Tenneco Clean Air India and if it's a good buy at the current market price. Would you recommend that, Saurabh? It's been a good bet for all those who bought it in the IPO just sub 400 odd rupees. Does it still continue to be on your radar?
Yes, the company is placed wonderfully, and the outlook looks quite optimistic. In this short span, yes, the stock has run up, and we have seen such many cases in, for instance, in the last 1-2 months. So from the long-term perspective, she can continue to buy in a staggered manner.
Okay, all right. So that's the view coming on Tenneco Air. The next one that we have is on Birlasoft. This is from Ravi Jadhav, who is bought it at the levels of 245. He wants to know whether he can continue to hold or sell, and he's got 200 odd units. So from a slightly long-term perspective, Gaurav, what are the charts indicating?
It is underperforming stock, Mahima. First of all, very good. Good morning to you. Just like other IT stock, it is also reeling under pressure, not performing at the moment. From a long-term perspective too, I don't see real comfort in it. Better to utilize any bounce towards, say, 350 odd levels to offload your position.
Got that view, Gaurav. And let's go across to Hyderabad now. That's the first caller coming in today. And Krishna is dialing in for a stock-related query. Krishna, very good morning to you. Welcome to the show. What's your query?
Yeah, hi, good morning. Good morning to all. I'm holding Natco Pharma shares at 915. I'm just would like to know whether I can add more at the current price or I should wait. I just need to know the fundamentals.
Got it. So you've recently bought into it and you want to hold for more than a year. Is that right, Krishna?
Yes.
Okay, got it. Let me go across to Saurabh then. Saurabh, on Natco Pharma, it has been news, has done well for investors as well. Should Krishna, who's recently bought it, continue to hold for more than a year?
In my previous interactions also, I have said that this company is not worth buying in your portfolio. The company has disappointed on many fronts in the I think in December 2024, when the quarterly earnings were released, the stock got tanked, and it didn't came up to the market expectation. And from then only the stock is trading sideways and has done nothing. In the recent quarterly earnings, again, the disappointments came to the front. The only thing is that it is the valuation which looks quite attractive. But here people pay for growth, not for the valuation only. So on the valuation side, yes, it is quite looks like a value. But in my opinion, I think it is not worth keeping it. My sense is better to get out.
Okay, all right. So that's the view coming on Natco Pharma. The next one that we have is from Annapurna, who's writing us from Hyderabad, asking about Yatharth Hospital. She's got 50 shares bought at the levels of 825. From a 15 days perspective, she wants to know whether to hold or sell. Gaurav, your view on the charts? It's a really short-term perspective that she wants to have. So 15 days on the charts.
Firstly, the stock is in a strong uptrend. It is consolidating at higher levels. She should hold on to her position. A new high beyond 880 will lead to a further uptick of 930, 940 odd zones. Hold with a stop at 820.
Got that view, Gaurav. But let's go across yet again to Hyderabad. Murli, who's a regular viewer of the show, joining us for a stock-related query. Murli, good morning. Welcome back to the show. What's your query?
Yeah, good morning. Good morning to all the team panelists and you and Mahima ma'am. My query is on Ashok Leyland. I have 60 shares at an average of 92.
Okay.
So it has been falling down for the last one quarter. That's what I observed. Should I hold it for another 2 quarters or should I execute it?
And Murli, since you bought it at a very attractive price of 92, how long have you been holding this counter?
Almost about 2 years.
2 years, got it. So very interesting time, Murli, most certainly. But Saurabh, we've seen crude oil have an impact on the stock. Now it's starting to recede yet again. Does it give enough conviction for you to give Murli a hold recommendation on Ashok Leyland, or what would you recommend since he's bought it at 92 rupees per share?
Of course, yes, Puneet. The crude has receded. In fact, metal prices are also cooling off, which thereby indicates that lower pressure will be there in terms of material cost. On the sales front, I think there is no problem with the Ashok Leyland. They have good order books and the monthly numbers are quite okay. The stock has already corrected. And in my opinion, I think the conditions are quite conducive. I think stock should resume its uptrend and it should be a good hold for the long term.
Okay, all right. So that's the view coming on Ashok later. I think we've got Shweta waiting by. Shweta, very good morning to you. Go ahead, ask your question.
Hi, good morning, Mahima. At first, I would like to say a few words about you two. You both are so amazing. So you are keeping the show very engaged and entertaining.
Thank you.
Kudos to you both.
Thank you so much.
My query is regarding Cupid.
Okay.
I have 70 shares at 120 rupees. I already booked partially some profit in this share. Now I am holding few shares. So I just want to know whether it's good to add more because it is consolidating at 170 to 178 range. So is it good to add more or should I exit completely? Or should I hold?
Okay. You're looking at the charts, I believe, Shweta.
Yeah.
Okay. All right. Got your question. And thank you so much for your kind words, Shweta. Really means a lot coming from you. I'll take this up with Gaurav then. Gaurav, what would you recommend for Cupid? Do you think averaging at the current level makes sense? Because her buying price is 120.
I think it is better to wait for a dip. The stock has not corrected at all. She should hold on to the position as of now. Wait for a dip towards, say, a 150 odd levels to add up. Do not add here. Just maintain your position with a trailing stop. The stop loss as of now should be 145, 145 on closing basis.
Got that view, Gaurav. And the amount of queries we've gotten on Cupid just in this year also, I think in the last 3 to 4 months, consistently on our viewers' radar and on our technical guests as well. But the next question coming in, and Gaurav, let me stick with you on Insulation Energy. Now this one, had the blockbuster IPO as well. Stocks trading at Kishore from Bengaluru actually bought these shares at 135 and wants to know if it's a good hold for the next, a slightly more longer term picture. Gaurav, if you can, what would you recommend to Kishore? Should he keep holding at 135?
Yes, post-listing, the stock went up sharply to 160 odd levels. As of now, it is consolidating around 120 odd zone. First of all, it is at very attractive valuations. The results are coming in fine. The March quarter numbers were very good, in fact, both from a top line and from the bottom line front. I think they should maintain his position. In the next 1 to 2 quarters, the stock is likely to cross the 150 plus levels.
Okay, all right. So that's the view coming on Insulation Energy. The next one that we have is, I think we've got Jigar who's calling us from Mumbai. Jigar, a very good morning to you. Go ahead, ask your question.
Hi, good morning. My question is on CI Automotive India. I have 100 shares at around 330 or something, and I bought it 3-4 years back. I don't really recollect why I bought it. I just have it and now I'm making little profits. I want to know what to do with it. Should I sell it or is there any juice left in it?
Fair. Jigar, got your question. I think I'll take this up with Gaurav. Gaurav, because he's been waiting patiently for the past 3 to 4 years, sitting on minor profits right now. Do you think in the near future there could be some upside or should he book his profits?
No, I think he should hold on to his position. The stock is under a long consolidation here. I do not see much of a downside from here, rather an uptick towards 510, 525 odd levels in the immediate near term is very much possible. And once those levels are taken out, the stock has potential to rise up to even 560, 580 zone. Better to hold on to your position. Take a stop at a very tight stop at 430.
So that's the view coming in on CIE Automotive India. It's time for a rapid fire round. Gaurav as well as Saurabh, you both know the drill. Try to keep your answers as short as possible. The first one that we have is from Anil Bhalla, who's writing us from Jalandhar, asking about IDBI Bank. He's got 10,000 shares at the levels of 75. Should he continue to hold, exit? Gaurav, your view?
Hold with a stop at 75.
Okay, the next one is from Murli, who's writing us from Hyderabad, asking about Vedanta Power, Vedanta Oil and Gas. He wants to know if does it make sense to enter any of these right now, Saurabh?
I would recommend him to go for a JSW Energy.
Okay, the next one is on Engineers India, bought at the levels of 216. Reenu from Bengaluru wants to know if she should hold, exit from a 1 year point of view, and what should be the target. Gaurav?
Hold with a stop at 248. Look for targets close to 285 in the immediate near term.
Okay, the next one is on Anant Raj, 250 shares bought at levels of 547. Uma from Bengaluru wants to know as to what is the target based on the charts right now. Gaurav?
600, a clear target. Take a stop at 510.
Okay, the next one is on MCX. Our viewer Narendra Babu is holding 100 shares, I think at the levels of 3194. So elevated levels is what he's bought it at. But Saurabh, would you recommend him to continue to hold?
It's a hold.
Okay, the next one is on Piramal Pharma. 600 shares bought at the levels of 163. Rajesh from Mumbai wants to know if he can continue to hold this from a long-term perspective. Saurabh?
You can continue to hold it.
Okay, the next one that we have is on Reliance. Our viewer says his father has been holding 800 shares, including all bonuses and corporate actions since the last 20 years. Continue to hold this one from again a long-term perspective. Saurabh?
Hold for long.
Okay, the next one that we have is on HFCL. 100 shares bought at the levels of 100 rupees, I think. Okay, he bought it at 100 rupees. So quite attractive levels is what our viewers bought it at. But Gaurav, do you think that he should continue to hold or book profits considering the up move that we've seen in this one?
Absolutely, continue to hold. Take a stop at 195.
Okay, the next one is on Alcargo Logistics. Our viewer has bought it at the levels of 43. 704 shares is what Vidinath from Mumbai has been holding. He wants to know if there is any chance of this stock going up in the future. Gaurav?
Better to exit.
Okay, the next one is on Brigade Enterprises. Ram from Chennai has bought 80 shares at the levels of 518. Hold or sell? Gaurav?
Sell.
The next one is from Naveen, who's writing us from Bengaluru. He's got TVS Supply Chain since IPO. Continue to hold or sell? Saurabh?
Hold.
The next one is on Coal India. Our viewer Vedant from Mumbai wants to know a short-term view on this particular counter. Gaurav?
Range bound. A bounce towards 485 can be expected.
Okay, Narayana Hridalaya is the next one. Our viewer Karan from Kerala is holding 62 shares, bought at the levels of 1840. Outlook for 3 to 6 odd months. Gaurav?
Hold. Hospital stocks are doing good. Stock is likely to rise up to 2100 odd levels. Take a stop at 1800.
Okay, Sterlite Tech bought at the levels of 195. Raghuram Patro from Bhubaneswar wants to know if this is a good hold. Saurabh?
It's a hold.
TCS bought today, 10th of July is what one of our viewer is asking for. A short-term perspective. Gaurav?
Look at a bounce toward 22, 60 odd levels.
Okay, PCBL, a fresh entry. Does it make sense from a long-term perspective right now, Saurabh?
Yes.
Okay, the next one is on Gland Pharma. Shiva from Muscat has bought it at the levels of 1710. Wants to know whether to go hold or exit. Gaurav?
Hold and utilize dips to add more.
Okay, Jyoti Laboratories, 250 shares bought at the levels of 235. Continue to hold, maybe add on dips. Saurabh?
Hold.
Okay, all right. That brings us to the end of this first rapid fire round. But viewers, it's time to slip into a very, very short break. But don't go anywhere. We'll be back with answering more queries on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers tuning in, you can either give us a call or send us your WhatsApp. Send us your queries on the WhatsApp number that's flashing on your screen up there. Satyan, by the way, is asking us our next question. He's asking about Som Distilleries. It bought it last year at the levels of 150. Today, of course, it's buzzing on the back of the news that the excise department has cancelled their license for FY27 onwards, and it's down 4.7%. Saurabh, something like this comes up for a company like this. What is the impact, and should he continue to hold is the key question.
I think some kind of a rebound is surely expected, but looking at the financials, the operation performance, it is not worth for hold for long.
Right, okay. So that's the view, of course, coming in on Som Distilleries. The next one that we have is coming in, and this is on data patterns. By the way, on this side of the show, we're also joined by Ajit Mishra, the SVP Research at Religare Broking, joining us now. Ajit, a very good morning to you. The next question that we have, in fact, is on data patterns, which is from a 3 months perspective. Our viewer Ronak Jain from Udaipur wants to know whether he can continue to hold this for the next 3 months. His quantity is 912. His buying price is 3310. What would you recommend?
Yeah, good morning, Mahima. So, Mahima, we are seeing that the stocks related to the defense stack, they are doing well at large, and data pattern is anyways trading at the record highs. You have bought it very lower level, making decent profit. Quantity is also decent. So I would recommend you at least to book partial profit around the current area, because the last move from 3600 to 4800 was largely very strong recovery. Having said that, the overall tone still looks positive. So one way is to look at it is he can maintain a trailing stop at 4600 and hold this position, or at least book partially around the current area and keep on trailing stop losses on rise.
Okay.
Got it. Got your view, Ajit, and very good morning to you. But let's go across, take the next question that's coming in on JK Tyre. Now, Mohammed Yusuf is holding shares at 406. And he's bought almost 1,169 shares at this point of time, asking what he should do with this counter. Now, Saurabh, you gave a view on Ashok Leyland. I think in terms of crude price as well, this was another space that got impacted. Would you recommend him to continue holding or maybe switch out to some other player in the industry, or what's your view?
In my opinion, Puneet, it is good to hold. Now the raw material cost will also come down because of the fall in the crude oil prices, and moreover, the demand for the product is quite strong. From the OEM also, they are getting good orders. So in my opinion, it is a good hold.
Okay, the next one that we have is from D. Mazmudar, who's writing us from Rourkela. He's asking about IRCTC. He's bought it at the levels of 882, and from a 3-year perspective, he wants to know whether he should average, buy on the dips or exit. What should be the next course of action? He says that he's a long-term investor generally. Saurabh, your view?
My opinion, even after the correction, the stock looks expensive to me, trading around 10 times to book value, because the growth is not coming up with the valuation it is enjoying still on the bourses. In my opinion, nothing will happen in the long term. So from that perspective, I would recommend to exit.
Exit is what Saurabh recommends on IRCTC, but viewers, you can, of course, call us on a landline number as well. You must have noticed a lot less a break this time around. So do take the advantage of that. But the next question coming in now, it's on KFin Tech. Our viewer, Shruti from Bengaluru, is holding shares, at 980 odd. So she's currently in a loss, but asking if she should continue to hold or sell out and book the loss. Ajit, Would that be a wise strategy? What's your view on KFin Tech?
Hi, Puneet. So, Puneet, it's been almost like 1.5 year of corrective phase that the stock has already experienced. We have seen the retest of the long-term averages on the weekly chart close around 800, 810 levels before this rebound. Since she have already spent decent time, I would recommend her to utilize any recovery towards her buying price to reduce the position, because close to around 960, 980 area, which is her buying price, we see multiple resistances. So short-term, rebound may continue, but upside seems capped. So around that area, she may consider reviewing her position or exiting.
Okay, all right. So that's the view, of course, coming in on KFin Tech. But the other counter that we were just talking about is Som Distilleries. Now, of course, the company is in focus because the excise department has rejected the FY27 license for Bhopal plant. Of course, the company has submitted replies. But to understand this aspect further, we're now joined by J.K. Arora, who's the chairman and MD of Som Distilleries, joining us now. Mr. Arora, thank you so much for taking out the time. My first question to you is to understand as to why this has happened. What is the reason that the excise department has given you in terms of cancelling this license for you?
Your first thing is why it has happened. It is in routine. It's as you know, it's very highly regulated business. So some checks, some thing they have found in somewhere in the Indore region, and company was not party to it in that case, but somebody who was working earlier in the company was caught in that case. So relating that case, they gave us the notice after 15 years of the case. After the case was somewhere in the 2011 or something like that.
What case? Can you elaborate on that, Mr. Arora? Just trying to understand, because generally, if it's not that big of a deal, the license does not get cancelled. So just want to understand as to what the case is about and why this has happened.
You see, the case, as I said, the case was of the transportation of liquor. Of this thing, they found something wrong in the permit was not valid or something. The case they have made. So they made the case on us, for which we were not the party in the court. They gave notice. Gave notice in 2023, and we gave the reply. So in 2026 they were not doing anything. In 26 they were. Again gave a show cause notice, and next day they have suspended the license for the clarification. We have submitted the reply, but they have rejected the reply. So we have gone to the legal, we have taken the legal remedy.
Okay.
The case is listed for tomorrow.
Okay.
And we will know exactly what is going to be the fate of
Got it. So is this the only reason, or this has some connection with regards to what happened in 2024? Because back then also your operation license did get suspended because of child labor concerns. Any connection with regards to that case?
No. The child labor was of the private limited company, which is not our listed company, which has nothing to do with that case.
Okay.
This is the listed companies. This thing. So these two things were altogether separate.
Okay, so then I want to understand the impact of this, Mr. Arora, because from what my understanding is that a major part of your production would probably come from this, and this cancelling of license could hamper. So first of all, what percentage of your production comes from this particular factory, and what will be the impact financially?
You see, this Bhopal plant has been the major plant because wherever we do not have the manufacturing facility, this plant used to fight like Delhi and most of the states like army supplies and all that. Most of the states were being supplied from here. But all those supplies from Delhi, we have shifted to our UP plant. So we will be having a double source now. So there would not be anything. So since the major sales is in the April, May, June. So the major sales have been affected in these 3 months. So in these 3 months, about 35% sales takes place. And as soon the license is restored, we will be able to recover about 10% of that. So it's still that 20-25% we will lose our top line this year.
Total top line, 25% is what you're going to lose on the back of this. So there is no alternate available for you. Is that understanding correct for manufacturing? You are going to lose that 25% of top line because of this impact?
No, last week our UP plant has been started. So our alternate has begun now. It is not that this thing, wherever we have supplies, we can supply from UP. UP also having a promotional policy for the selling outside the state. So we are shifting our major business there out of MP business what we are. But for MP, we need production here only, no?
Right.
That is the
So if you don't win this case and if your license does not get renewed, then what is the course of action? Because then temporarily that 35% of revenue will stop coming in from Bhopal.
First thing, we have not done any such thing that we will not get a license renewed. There is no question we will not get it. We will get it 200% this license renewed, because this, you know how the government functions. They of discretion at their end. They can say the half glass full or half glass empty. It is up to them. But in judiciary, it doesn't happen. You have to have the right things. You can't, on the apprehensions, you can't suspend the license and all that. So we have full faith in the system. We have full faith in the judiciary. And case is listed for tomorrow. So we will be happy to share with all our shareholders, you guys and everyone.
Mr. Arora, thank you so much. We look forward to understanding tomorrow, as as and when you get the result of the hearing that you have tomorrow, and we'll keep our viewers also updated with the same. But let's try to pull up the stock and see as to where it is trading at right now. Still trading about 4.7%. With a 4.7% of a downtick. So that's with regards to where Som Distilleries go. But I think we've got our caller waiting by Sarveshwar is, I think, Sarveshwar or Shiv Kumar? Okay, Shiv Kumar is waiting by, calling us from Dubai. Shiv Kumar, a very good morning to you. Go ahead, ask your question.
Good morning. Either way, the name is the same. Shiv Kumar and Sarveshwar is the same name.
Oh, okay. All right. Okay. Good to know. Go ahead, ask your question.
And I'm holding around 1 lakh shares of Sarveshwar Foods. And
okay,
I bought it at 6.38. I just want to know whether I should hold it or should I sell it and book the loss, or should I buy more?
Okay, got your question. And I believe that, this is a penny stock.
It's a penny stock.
It's
486 crore market cap.
486 crore market cap, and it's a penny stock that you're holding. And generally, Shiv Kumar, it's advisable to not get into such micro cap names. And he's already sitting on losses of around 2.4 lakhs. But I'll still, take up a view with Ajit. Ajit, what would you recommend on this one?
So Mahima, we don't track such stock, honestly, so I don't have any.
Yeah, I mean, exactly what I told you, Shiv Kumar, and I think even Saurabh will agree with me on this, that you should not ideally enter into penny stocks and microcap names. Saurabh, if you want to give our viewer any piece of advice.
Better to exit.
Yeah,
keeping it short
and sweet.
Keeping it sweet as possible, but go across and let's take another query from Mangalore this time. Ashok Pai is holding on to 900 shares of United Spirits, bought at 1390, wants a 2-year view on the stock. Now, Saurabh, I think you spoke about how on Som Distilleries, you of course spoke to the management as well, as they're looking at certain regulations, half glass full, half glass empty for spirits, especially United Spirits. Is the half glass supposed to be full according to you? What do you expect?
I think it is full. In fact, the latest quarter number, if I remember correctly, were above market expectation, and this is the company is the market leader. So, in my opinion, yes, it should be a good hold for next 2 years.
Got it. Well, let's take another question now, and this one's coming in from Saurabh Shah from Mumbai. He's holding on to 1,000 shares of Yatra, bought at 109. He wants to know what's the outlook of this particular counter. Saurabh, again, been a very, very volatile counter and a smaller name in the space. Would you recommend him to exit, or should he continue to hold this counter now?
See, on the valuation front, the stock looks interesting. I think downside seems to be limited. But what is happening to the travel and tourism? It is a tricky situation because Indians are not going that much to the foreign areas, and which is likely to impact the earnings. And domestic, talking about domestic, that the tourism is quite good. In my sense, I think you should hold for this quarter.
That view, Saurabh. But the next question, coming in now, and this one continues to be on a space that's doing well at this point of time, and because we've seen, of course, deceleration of crude price impact, all OMC's companies are back in focus. A viewer, Prasad from Karnataka, is holding on to Reliance Industries. Now, Friday, of course, was the big AGM for the company. Jio IPO announced, but he's holding shares at almost 1,354 rupees per share, asking what he should do with this counter. Let me stick with you, Saurabh, on this one because, announcement as expected has come through. They've also given some good guidance on EBITDA doubling in 5 years. Should he continue to hold?
Yes, I mean, it is a kind of a portfolio stock. The stock has not done nothing in the last 2-3 years, oscillating in a range. But now the company has in the AGM they have not disappointed the shareholder. Jio platform IPO is coming. They will be deleveraging, and they have talked about quite optimistic plans for the next 5 years. I think the stock should do well for the next 2-3 years.
Got that view. But let's go across and take another question now. And this one is, on JSW Infra. Ram from Hyderabad is holding on to almost 8,000 shares of the company at 250. Now, he's written to us about this query in the past as well, I think a couple of quarters ago. He wants to know what he should do with this counter now, and if he should book his profit and buy into Tata Motors commercial vehicles. Ajit, would you recommend that trade?
So Puneet, the stock has done well, especially in the recent weeks. And yes, there's a possibility that we might see a breather after this recent move. So partially you can do that, not completely, because still we may see a momentum carrying towards 320-25 area. So with, let's say, trading stop at 295, he can continue to trail his position and wait for 320-25 as a target area. Tata Motor commercial vehicle looks interesting, means after this corrective phase of roughly around 4-5 months, it seems like that the stock has been forming a buying pivot around the major averages. So possibility of a strong rebound is also there. So partially can be done, means exiting from booking profit from JSW Infra and buying Tata Motor commercial vehicle with 390 as a stop and close to around 440, 450 as a positional targets.
Got that view, Ajit. But next one is an interesting question coming in from Ram from Chennai. He wants to know a fundamental view on Action Constructions. Now, Saurabh, been sideways over the last 3 to 4 quarters, having flatter revenue growth. But I think the Chinese imports were a key concerns. Do you think all of those behind, should he, buy into this counter now?
I think after the COVID, I think in 22-23, the stock got re-rated from 100 to 100 levels. It jumped more than 1,000. And now because the valuations got expanded and the earnings are not up to the mark to justify those valuations, the stock is in correction mode. In my opinion, the company is good and the activity, Indian activity on the infrastructure side will continue to happen and the company is likely to be a good beneficiary. In my opinion, I think hold for a quarter or two, take the company's guidance. If the company delivers on the expectation, then continue to it.
Okay, all right. I think we've got Bharat who's calling us from Andhra Pradesh. Bharat, a very good morning to you. Go ahead, ask your question.
Good morning, madam. I am holding 500 shares of Kirloskar Brothers at the price of 2170. What is the target of the stock? I am waiting for 3 months.
Okay, Bharat, got your question. I'll take this up with Ajit then. Ajit, your view on Kirloskar Bros?
So Kirloskar, we have seen very sharp, up move of late, and the still momentum is continuing. Today also the stock is roughly around 11% up. We are gradually inching towards 2250, 23 marks. So he can continue to hold. Now his trailing stop should be at 2050 and around 2300 he should review his position again.
Got that view, Ajit. But Shivani from Mumbai, and hopefully, Shivani, you didn't get caught in the rains this morning as we did, but she's holding on to Exicom, and she's bought it at elevated levels of almost 466 back in July of 2024. Ajit, she wants to know if she should, average this counter or potentially just exit. Is there any momentum right now that you're seeing?
So Puneet, we have seen decent recovery, and now we are at resistance area. Means 180, 85 is the zone from where last time we saw decisive decline, and plus it coincides with the long-term averages also. So possibly is likely. So at least reduce partial position, cause possibility of profit taking is high, and at the same time do maintain a trading stop at 150 for the remaining trade. Once, say, let's say stock surpasses this hurdle of 180, 85 decisively, then probably we may see a move towards 220 to 25 area.
Got that view, Ajit. But the next question coming in now, it's on Glenmark Pharma. Viewers holding shares of this counter bought at 2,254. Currently on a slight loss right now, holding 30 odd shares. And this is Saurabh who's asking us this question. Wants to know if he should continue to hold on to this counter or possibly, look at some other name in the pharma space. Saurabh, what would you recommend?
Positive on the pharmaceuticals. The companies, many of the pharmaceutical companies are doing really good, and the pricing pressure is behind in the US and European market. I think it is a bit of correction only, which is the company is witnessing. I think long-term trajectory looks quite interesting. If he wants to switch, then he may switch to maybe Aurobindo or Sun Pharma.
Got that view. But viewers, as well as Ajit and Saurabh, now time for the second round of the rapid fire in this edition of the show. The first question coming in from Sunny. He is holding, unfortunately, Happiest Minds, but at 800 rupees. So currently he's sitting on a loss. Ajit wants to know if he, what should his strategy be now? I think we've asked you this question quite a few times, Ajit, but on Happiest Minds, what would you recommend?
So Puneet, what I recall that company shared, guidance over the AI.
527, correct.
Yeah, so that was the reason that we saw a very sharp recovery, but that move completely fizzled out. There's something wrong with the, overall positioning that the market is not buying to this theory. Let wait for a quarter or two. As of now, the downside seems capped, means close to around 330, 325 area where the last lower was made. Probably with that as a stop loss, he can continue to hold, but for any recovery, 390 is the area where the stock should pass for any fresh momentum.
Got it. Okay. The next one is from Vijay, who's writing us from Chennai, holding Gravita India. 2,000 shares bought at the levels of 295 is what he's saying. Wants to know for the next 2 years, continue to hold. Saurabh?
It's a hold.
On Tata Tech also, Saurabh, our viewers bought shares at 944. We've seen good Q4 earnings. Should she average down at 744?
Won't recommend to average. Try to get out.
Okay, EID Parry Bharat has been holding it since the levels of 530. Wants to know whether continue to hold, add more. Ajit?
Hold with stop at 680 and use recovery to reduce.
Sabita from Hyderabad is holding on to REC at 318. Saurabh, should she continue to hold or switch to PFC?
She can go either ways. It's a hold.
Okay, Vikran Engineering, 300 shares bought at the levels of 93. Our viewer Kushit from Delhi wants to know if he can continue to hold this one from a short-term perspective. Ajit?
Hold with stop at 70.
The next one, coming in, this one's on Bharti Airtel. S. Sankar Narayan wants to know if it's a good time to buy into these dips. Ajit, would you recommend that?
Yes, and expect fresh momentum above 1950.
Okay, the next one is from Suman, who's writing us from Kolkata, asking about Shriram Piston, whether this is the right time to buy from a long-term perspective. Saurabh?
Yes, you can buy.
Manpreet Singh from Hyderabad is holding on to 3,000 shares of Yes Bank, but bought at 50. I don't remember the last time the shares were there, but Ajit, what should his strategy be?
Hold above 26, we can see 31 review around that area.
Okay, Radhiko Khaitan, 10 shares bought at the levels of 3,300. Continue to hold, sell. Saurabh?
Hold.
On Aisha Motors also, Ajit, Vijay from Chennai wants to know what's a short-term target. Momentum has been good. Does it continue?
Possibly yes. 79, 8,000 target area, 7,400 stop loss.
Okay, NHPC and NMDC, which one is a better bet for the next 2 years? K Guru from Chennai is asking. Saurabh?
NHPC.
PG Electroplast bought at 450. Saurabh, we've seen a good update coming from Voltas. Should he continue to hold? Is it a good time to add more?
The management disappoints trades. No confidence. Better to exit.
Okay, the next one is on Bellrise. Murli from Hyderabad has bought 30 shares at the levels of 99. Continue to hold, Ajit?
Hold.
Next one's, sorry Ajit, did you give your view?
Yeah, it's a hold.
Hold, got it. On DCX India as well, our viewer Murari is holding shares at 305. Saurabh, should he continue to hold right now, average down?
Don't average. Wait for the June quarterly earnings and then decide.
Okay, Raymond Realty, 75 shares bought at the levels of 447. Continue to hold for the next 6 months. Enough data on the charts, Ajit, to give a view?
Yes, hold around 780-90 review.
Alright, okay, that brings us to the end of this rapid fire round as well as Ask Profit. Saurabh and Ajit, thank you so much for taking out the time and helping us answer all those stock related queries. Viewers, like I said, completely out of time in this edition of Ask Profit, but do stay tuned because Know Your Company is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You got to be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, as we decode new companies which come on the horizon, be it small cap, mid cap, and today also I've got you a very interesting company, but guess करने का कोशिश करिए. And it's a very interesting company. I've studied this. Surat-based pharma company छे. Interesting, but there are some more hints to it. It's the owner of the brand Dawa India. I must have seen it across the stores in cities and towns as well. And another hint I would like to give you is it's backed by 3P India and Singularity Fund. That is Madhu Kela and Prashant Jain, astute investors of the market. They have backed this company. The stock has also gone up 25% from March lows. Guess करने का कोशिश करिए कंपनी का नाम क्या है. The company in focus, Surat-based pharma company, is Zota Healthcare. This is the company which we are going to talk about. But why are we talking about this company? That's the big question. The questions, answers, we'll try to get it from the management. The first question is, they have achieved EBITDA positivity in FY26. पहले इन्होंने कहा था कि FY27 में करेंगे. तो execution अच्छा हुआ, तो एक साल पहले ही they have received the EBITDA positivity. But of course, the company has come out with a cautionary statement also in the fourth quarter. They have stated that the company is slowing down expansion over the next 2 quarters. Why? We need to understand that. Also, the Coco stores, they are achieving break even in 15 months versus 18 to 24 months. Coco is a very interesting story. Coco is of course company owned, company operated stores. We'll get to that. But also another question is Dawa India. What are the expansion plans? 2500 से ज़्यादा stores already जो है, we have seen that for the company. We'll try to understand a little bit more. And the question remains is margin outlook now versus the future. Remember, ये single digit वाला margin का play वाला business है. So we'll try to understand, does it change? Also the business outlook over the next 3 years, how things pan out. So we need to see things at a longer perspective for our analysis for this company. And these are the important questions which we'll be asking the management, Himanshu Muktilal Zota. He is of course one of the promoters in the company at Zota Healthcare. तो ये तो आज शो में क्या क्या होगा उस पे हम फोकस करेंगे, बट कंपनी क्या करती है, दैट्स द मोस्ट इंपॉर्टेंट क्वेश्चन. और कंपनी में फायदा कहाँ बनेगा, दैट्स व्हाई आई एम हियर एट KYC टू गिव यू दैट क्लैरिटी. इट्स अ सूरत बेस्ड फार्मा कंपनी. इट वाज इनकॉर्पोरेटेड इन द ईयर 2000. If you look at more details, it's into pharma, Ayurveda, nutraceutical and OTC products. What's the product? distribution. I'll get back to you on that in a while. Now, of course, the company sources directly from the manufacturers and sells straight to the consumers. यानी कि बड़ा retailer नहीं है, there is no big distributor. So this is where the company's dhanda business model is there. Interestingly, two large astute investors are there. 3P India's Prashant Jain is invested in the company, and Madhu Kela, promoted at NTT, which is Singularity Fund, they are backing this company. Interesting, right? Also, the marketing, export and the retail pharmacy chain, these are the main division. Of course, Dawa India is the brand. If you are, on a daily basis, if you deal with this company, it's a generic pharma chain and it has roughly 2600 stores. Generic matlab saste dawai hote hain. Of course, for the masses, so they cater to the masses, and of course, इसमें margin जो है छोटा रहता है. Also, they've started getting the brand ambassadors. जब हम masses की बात करते हैं, so look at that, Akshay Kumar, Sunil Shetty, and now MS Dhoni, all of them are there. So that's pretty interesting for a 4,500 crore market cap company as well. But let's move on to the other side of the story. What are the terms to know? जब आप ये सब companies को analyze करते हैं, तो COCO means what? COCO is company owned, company operated. Note down कर लीजिए अगर आप first time analysts हैं. Let's look at the other abbreviation, FOCO. It is franchise owned, company operated. ये थोड़ा सा asset light रहता है. So this is also pretty much there, but there's a mix of both of these type of stores when you analyze a company like Zota Healthcare. What are the store additions? This is very much important. COCO, FOFO, we have given you both the definitions. So bar I won't repeat. Around 804 store additions came in FY26. Totally 1,000 of them has come. So the company is expanding a lot, and when the company expands, there will be a little bit of pressure on the return ratios. But how does the revenue breakup look like? 77% of the revenue comes from Dawa India. But if you break it down, there are other segments also which you should be tracking. The domestic segment is roughly 13%. Exports is quite less. It's around 3%. Everyday herbal group, that's where they're trying to develop more, is just 3%. And other segments comes in at 1%. Also the product portfolio, how things happen here. This is the chronic product. The chronic product portfolio is something where the customer stickiness is very much there, and it's a repeat customer बहुत आते हैं. तो ये धंधे में repeat customer बहुत आपको दिखने मिलेगा. OTC is nothing but over the counter products होते हैं, largely generic में रहते हैं, so उतना subscription नहीं लगता है. This is how I simplify it for you for a technical company like Zota Healthcare. But what may work for the company? There are some points which I have analyzed, and I've sorted it for you. Faster than anticipated path to profitability. And this is where the market is trying to give a premium to this company. It's backed by strong, astute investors. कोई बड़े FIs नहीं है, but they also have increased their stake, so that's pretty much interesting. Also, they're improving their store level economics. SSG growth हुआ या mature stores आ रहे हैं, and when this starts happening, the numbers start showing well. Margins, path to profitability. And look at that average wallet spend. जो generic pharmacy का धंधा है, that average wallet spend per customer, that is going, and that is where a customer stickiness is also coming in. So a lot of engines are firing very positively for the company. What may not work? There is the other side of the coin also, which we get you for the company in KYC, the pressure on return ratios amidst this expansion. तो अगर expand बड़ा कर रहे हैं तो कभी-कभी balance sheet में pressure आता है, working capital ratios में pressure आता है. That's where a little bit of concern comes in. But remember, it's a low margin business at the end of the day. Company needs to show higher volumes. That is how you analyze companies like this. But to get in more perspective, we have our KYC ratings also, like income statement, balance sheet, cash flow. All these are the necessary parameters where we judge a company in KYC. This of course includes return ratio, shareholding pattern, what has moved, what hasn't, how much money has the company made for the investors. Valuations, we'll try to get it from its historical number, how things actually pan out for this company, and also the outlook. We'll try to figure out what the overall outlook suggests for the company. But let's go for the first rating, what's happening here, and that is the income statement. In our income statement, largely the top line growth is something you should be watching out for. I'll come back on the EBITDA and the profitability front. 3-year CAGR is 100%. So the growth is looking a J curve, hockey stick. But if you look at it, the path to profitability, that's the big question coming in. But company had stated that they have achieved the EBITDA profitability 1 year before the expectations. So both sides is pretty interesting to look at. Also, apart from the income statement, if you look at how the things have moved, that's been largely neutral, but balance sheet is strong. The borrowing levels, it's largely debt-free, and remember the working capital, that's very high, and because of that, they recently did a QIP also of 350 crore rupees. उससे क्या हुआ? Promoter का stake dilute हुआ, but overall working capital issues that gets sorted. So right now the balance sheet management is strong. 96 crore is in the cash balance also, and they haven't deployed everything yet, and that's why they are lowering their expansion plans at least for the next 2 quarters. It's a strong thumbs up for the balance sheet. Let's talk about the cash flow. What happens here? Cash flow largely is, we could say, it's pretty decent. There's a little bit of pressure coming in because of the expansion. That's why, there are mixed cues coming in our analysis. There seems to be a good cash flow in FY26, and remember QIP proceeds also come in. So it's better not to judge the company right now, because I feel it's still a work in progress in the change in the model and the way its path to profitability is coming in. So it's a neutral rating when it comes to the cash flow segment. Let's talk about the shareholding. What's happening here? And largely we see the shareholding that has seen a dip here. This is of course coming in because of the fundraisers which were happening. FIs, DIs were 0% in March 2024. But look at the exposure coming in. 3P India, Singularity Fund, all the large players, astute investors leading these entities have taken stakes. 8% for FIs, DIs it's 6%. So this is where we see the institutional participation coming in, giving a validation to the company's story. So it's a thumbs up when it comes to the shareholding segment. Also, apart from the shareholding, let's talk about the other key criteria. If you could get in the return ratios, which I had pointed out, that was a little bit of problem. We'll get to that as well. But from March lows, the stock is up 25%. From 2025 highs, it's still down 23%. But for 1 year, stock has given 40% return in last 5 years. It is 7x. So of course, congratulations if you are a long-term investor, and I have given this a strong thumbs up as well. Okay, so let's talk about the return ratios. I had mentioned you earlier about the return ratios, also how things actually pan out. But return ratios, look at that. FY23 it was 15, but the company started expanding. And when the company expands, higher working capital comes, and you see all of them giving a pressure. But company जिस तरह EBITDA profitability लाएगी, जिस तरह PAT profitability आएगा, then these reverse also. And during bad times, smart money also comes. So I'm going to give this on the past data a thumbs down when it comes to the ROC numbers. Valuations, let's have a look at it, what things pan out. Nirmal Bang tracks this. They are getting very bullish on this counter as well. The EV EBITDA multiple, of course, these numbers are pretty high because the company is going for that EBITDA profitability. But look at that, it's around coming at around FY28 numbers at 23 times. That is where I feel like, on a forward basis, the stock is quite cheap. That's why I'm going to give this valuations a thumbs up. But apart from valuations, what does the outlook suggest? And that is where, we try to understand the long-term vision of reaching 5,000 Dava India stores by FY29. That's the first outlook coming in. PAT level profitability, it can come by the end of FY27, or it can be pushed to the first quarter of FY28 as well. And the mature store growth, when that starts coming in, then your unit economics of your stores start increasing. Payback period भी जो है, अब कह सकते हैं कि कम हो गया है. They are moderating the pace of expansion for the next 2 quarters because there has been, a good expansion already, and there might be a little bit of pressure on the books, and that is why a conservative approach is coming in from the promoters and the company. But net, the outlook looks very strong. So I've given this a thumbs up. But let's give you the entire picture of this company, the KYC ratings for Zota Healthcare. It's a very interesting company. And let's see what has happened. Income statement has been neutral. My concern remains for the return ratio because they're expanding very heavily. Balance sheet has been managed very nicely. The long-term debt is not there so much. There was a QIP fundraise also. Let's pull out the other ratings also to give you what the picture is all about. Shareholding of good astute investors, FIs, DIs coming in. It has all made 7x returns to the investor the last 5 years. Valuations, the FY28, they look compelling, and the outlook also shows a good strength. So let's give in the entire picture for Zota Healthcare, and it comes in at 6 out of 8. One of the higher numbers of the average KYC show ratings we give for this company. So it's a pretty interesting story, but we need to understand what else is there which fuels the company, or is there any drag also in the short term? And let's get in the speakers. His Himanshu Muktilal Zota is the promoter and whole-time director. An interesting tidbit about Himanshu as well. He has been associated since the inception of the company. He has a diploma in pharmacy from Board of Technical Examinations, and also I'd like to point out almost a 3-decade experience is coming in at play. So we'll try to understand the entire story about it and how the management has moved their business models from the inception till now. And joining us, we have Himanshu Muktilal Zota. He's the promoter and whole-time director at Zota Healthcare. Good afternoon, Himanshu bhai. It's always a pleasure to have you at NDTV Profit. And there's a lot of bullishness coming in your counter. I just wanted to understand, आपकी जो profitability थी FY27 में ही आ गई, बात थी कि FY27 में आने थी, FY26 में EBITDA profitability आ गई. कैसे हुआ ये?
ये रिस्पॉन्स सिंस लास्ट 2 साल से जेनरिक अवेयरनेस काफी चेंज हुई है। हमारे माननीय प्रधानमंत्री नरेंद्र मोदी जी भी काफी मेहनत कर रहे हैं जेनरिक अवेयरनेस के लिए, और सिंस लास्ट 2 साल में जो जेनरिक का ट्रेंड बढ़ा है, लोगों को एक्सेप्टेंस और जेनरिक के लिए जो एक्सेप्टेंस बढ़ा है, उसके कारण हम जो थॉट प्रोसेस था हमारे दिमाग में कि 27 तक ये प्रॉफिटेबली आएगी, वो अर्ली आ गई। मतलब सेल्स अच्छा आ रहा है, एक्सेप्टेंस अच्छा है जेनरिक का, फुटफॉल अच्छा आ रहा है, और इसी की वजह से ये चेंजेस हुए।
राइट हिमांशु भाई, अपार्ट फ्रॉम दिस व्हाट्स द ग्रोथ आउटलुक लुकिंग लाइक फॉर FY27? मार्जिन पे आपका धंधा सिंगल डिजिट मार्जिन पे चलता है, ये कैसे चेंज होगा या ऐसा ही धंधा रहेगा, आप वॉल्यूम पे ज्यादा फोकस करेंगे? वी जस्ट वांट टू अंडरस्टैंड द एंटायर FY27 आउटलुक। ये साल अब क्या होगा?
एज सच ये साल में हम फॉर एग्जांपल लास्ट ईयर हम रफली कैश नेगेटिव पे थे, मतलब रफली 45 करोड़ समथिंग कंसोल लेवल पे कैश नेगेटिव पे थे हम। तो करंट ईयर में वी आर एक्सपेक्टिंग कि ये ऑलमोस्ट ये कैश नेगेटिव ऑलमोस्ट 0 हो जाएगा पीबीटी लेवल पे, और अगले 2-3 साल में जैसे जैसे हमारा बिजनेस बढ़ता जा रहा है, क्योंकि हमारा जो SSG है, सेम स्टोर ग्रोथ, आपने देखा होगा कि सेम स्टोर ग्रोथ काफी अच्छा है। मतलब अगर मैं मैच्योर स्टोर की बात करूं, जो 3 से 4 साल पुराना स्टोर है, वहां पे भी 20 से 25% के बीच में SSG आ रहा है। तो 2 इयर्स वाले स्टोर है, वहां पे तो 40-50% का सेम स्टोर ग्रोथ आ रहा है। सो ये प्रॉफिटेबिलिटी यहाँ से ही आई है, और ये कंटिन्यूसली ग्रोथ अगले 2-3 साल में ये काफी चेंज ओवर होगा और काफी टर्न अराउंड होगा।
ओके, ये तो हम समझ में आ गया, लेकिन हिमांशु भाई आपसे सवाल पूछना है कि 4th क्वार्टर में आपने एक बहुत इंपॉर्टेंट बात कही थी कि हमारी जो एक्सपेंशन है, आप एक्सपेंशन तो बहुत स्ट्रॉन्ग करें, लेकिन अगले 2 क्वार्टर अपनी एक्सपेंशन को आप थोड़ा सा कम करेंगे। ऐसा क्यों करेंगे, और इससे कुछ फ़ायदा आएगा क्या रिटर्न रेशियो में? क्योंकि रिटर्न रेशियोज में बहुत दबाव है, आपके ROC थोड़े नेगेटिव है, क्योंकि आप बहुत ज़्यादा एक्सपेंड शायद जल्दी कर रहे हैं। तो क्यों आप कर रहे हैं अगले 2 क्वार्टर पे हल्का क्यों रहेंगे एक्सपेंशन पे? व्हाट्स द रीज़न फॉर इट सर?
या सो मेजरली हमारा जो 2 क्वार्टर थोड़ा सा स्लो डाउन, हमको बंद नहीं करना था, थोड़ा सा स्लो डाउन करना था, और स्लो डाउन करने का थोड़ा सा ये रीजन था कि हम कंटिन्यूसली लास्ट 8 क्वार्टर से हम कंटिन्यूसली ग्रोथ कर रहे हैं, क्योंकि लास्ट ईयर भी हमने 800 स्टोर खोले और उसके अगले साल भी हमने 600 स्टोर खोले। तो ये 1400-1500 स्टोर हमने लास्ट 2 साल में खोले। समवेयर अबाउट 200 स्टोर का हम 1650 कोको स्टोर पे पहुंच गए, मतलब ऑलमोस्ट 10x स्टोर हमने बढ़ाया सिंस लास्ट 2 साल में। तो हम ये चाहते थे कि 1 या 2 क्वार्टर थोड़ा सा स्लो डाउन करें, हम बैकएंड को पूरा स्ट्रॉन्ग करें, और अगले जो माइलस्टोन है, अगला जो हमारा जो ग्रोथ स्टोरी है, उसको अगेंस्ट बैकएंड पूरा स्ट्रॉन्ग कर दे, ताकि हमारा जो भी इन प्रोसेस स्टोर था वो 0 हो जाए, थोड़ा सा प्रॉफिटेबिलिटी बिल्ड हो। क्योंकि 1 या 2 क्वार्टर में अगर स्लो डाउन कर लूंगा तो मेरा प्रॉफिटेबिलिटी बिल्ड होगा, मतलब। तो 2-3 रीजन था। एक तो मेरा बैकएंड थोड़ा सा स्ट्रॉन्ग करना था मुझे, क्योंकि मुझे सप्लाई चेन, हमने जैसे अभी सूरत में है, एक सेकंड सप्लाई चेन हमने दिल्ली में, हरियाणा में अभी रिसेंट में स्टार्ट किया। तो ये सब स्ट्रीमलाइन करने के लिए और बैकएंड को स्ट्रॉन्ग करने के लिए हम थोड़ा सा स्लो डाउन कर रहे हैं। हालांकि हम इस साल में नंबर ऑफ स्टोर तो उतना ही खोल रहे जो हमारा टारगेट था। हम क्या कर रहे हैं, पहले क्वार्टर में और 3rd और 4th क्वार्टर में खोल रहे हैं, 2nd क्वार्टर थोड़ा सा स्लो डाउन कर रहे हैं। लेकिन जो पूरे साल का जो हमारा टारगेट था समवेयर अबाउट 600 to 700 स्टोर, वो इंटैक्ट है, मतलब वो हम खोल ही देंगे इस साल।
जी बिल्कुल। तो पूरे साल का जो ग्रोथ स्टोरी है वो इंटैक्ट है, लेकिन अभी 1-2 क्वार्टर में जो है थोड़ी सी जो है स्ट्रैटेजी आप चेंज कर रहे हैं। लेकिन 350 करोड़ का एक QIP फंड रेज भी किए थे, उसका एप्लीकेशन आप कहाँ कर रहे हैं? एक्सपेंशन में ही कर रहे हैं, वर्किंग कैपिटल में कर रहे हैं, या कुछ एक्विजिशन भी सोच रहे हैं, कुछ लोकल ब्रांड खरीदें?
नहीं, ये प्योरली मेजरली इसमें से 90% जो फंड है वो एलोकेशन होगा सिर्फ और सिर्फ दवा इंडिया में, जिससे हम नया स्टोर भी खोल रहे हैं और एग्जिस्टिंग स्टोर में जो वर्किंग कैपिटल चाहिए दोनों यहाँ से फुलफिल कर रहे हैं। तो ये 350 करोड़ से रफली 1300 से 1500 स्टोर खुल जाएंगे अगले 2 साल में, करंट ईयर और नेक्स्ट फाइनेंशियल ईयर। और ये हम कंफर्टेबली करंट ईयर और नेक्स्ट फाइनेंशियल ईयर में 1300 से 1500 कोको स्टोर हम खोल देंगे।
तो 1300 से 1500 स्टोर्स जो है कोको स्टोर वो खोलेंगे। दर्शकों को बता दूं कि कोको मींस कंपनी ओन्ड, कंपनी ऑपरेटेड। लेकिन एक बार हमारे दर्शकों को आप बताइए कि कोको और फोको में क्या फ़र्क होता है, और एसेट लाइट मॉडल कौन सा रहता है, और आपकी कंपनी की स्ट्रैटेजी क्या रहेगी कोको और फोको के कहेंगे कोको और फोको की एक्सपेंशन को लेके?
सो हमने इनिशियल फर्स्ट 2017 में जब हमने दवा इंडिया स्टार्ट किया था, तो फर्स्ट 3 से 4 साल हमने सिर्फ फ्रेंचाइजी स्टोर ही खोले थे, फोफो स्टोर ही खोले थे, जो कि कंप्लीटली एसेट लाइट मॉडल है। क्योंकि फोफो में हमारा इन्वेस्टमेंट कुछ भी नहीं है, जो फ्रेंचाइजी ओनर है वही इन्वेस्ट करता है पूरा का पूरा, और हम सिर्फ सप्लाई करते हैं। और कोको स्टोर है, वहां पे पूरा कैपेक्स हमारा लगता है, इवन ऑपरेटिंग एक्सपेंसेस, रेंट वगैरह या मैन पावर कॉस्ट भी हमारी लगती है। लेकिन दोनों में डिफरेंस ये कि कोको में कंट्रोल अच्छा रहता है, हमारे कस्टमर को जो मिलना चाहिए प्रोडक्ट वो प्रॉपरली मिलती है, और प्रॉफिटेबिलिटी कोको में काफी अच्छी है। सिंस हमने 2-3 साल में देखा है कि कोको में हमारा जो ग्रॉस प्रॉफिट मार्जिन इज मोर देन 65%, जो कि फ्रेंचाइजी स्टोर में हमारा आवर मार्जिन विल बी समवेयर अबाउट 40%। और हमारा फोकस भी यही है कि हम नेक्स्ट 3 इयर्स में हम 80% कोको ही करेंगे और 20-25% हम सिर्फ फोफो करेंगे।
ठीक है, 80 और
करने का भी एक रीजन था
अच्छा।
कि फोफो में कंट्रोलिंग नहीं है, वो बाहर की प्रोडक्ट लाके बेच सकता है, वो और कोई प्रोडक्ट लाके बेच सकता है जहां मेरा ब्रांड डैमेज होता है। और ये सब देखने के बाद हमने कोको पे ही ज्यादा फोकस किया, और हमारा फोकस भी इसलिए कोको ही है।
जी बिल्कुल, तो ये फोकस तो आपने बता दिया कि अपने ब्रांड को डाइल्यूट नहीं करेंगे, लेकिन दोनों को जोड़ देते हैं, मार्जिन का क्या आउटलुक रहेगा? सवाल सब बोलते हैं कि अरे ये तो 5% से नीचे का मार्जिन का धंधा है, इस धंधे में हम एक्चुअल मार्जिन का बेनिफिट कब देखेंगे? 2-3 साल में देखेंगे, और अगर देखते हैं तो सोचिए 3 साल बाद आपकी कंपनी की मार्जिन क्या 9-10% की होगी? कैसा रहेगा ये धंधा?
नहीं, मार्जिन अगर मैं मार्जिन की बात करूं तो जो हमारे कोको स्टोर है, फॉर एग्जांपल जो भी हमारे 4 साल पुराने कोको स्टोर है, वो स्टोर लेवल EBITDA विल बी मोर देन 35%, मतलब तो ये 4-5% का गेम ही नहीं है। लेकिन इसको मैच्योर होने में जो भी 3 से 5 साल लगता है, नॉर्मली स्टोर को मैच्योर होने में 3 to 5 years लगते हैं कंप्लीट मैच्योर होने में। तो ये मैच्योर होने के बाद फॉर एग्जांपल अगर आप 27 में खड़े हैं और मैं अगर 30 और 31 की बात करूं, तो मैच्योर लेवल पे एट सारे स्टोर हमारे जब उस लेवल पे पहुंच जाएंगे, तब ये EBITDA मार्जिन विल समवेयर अबाउट मोर देन 20-25%।
बिल्कुल, एंड ऑफ कोर्स कोको का ब्रेक इवन भी आप देखें तो 15 महीना में हो रहा है, और आप पहले 24 महीना था, तो धंधा भी इवॉल्व हो रहा है, मार्जिन्स भी इवॉल्व हो रहा है, और कंपनी भी देखें तो एक इवॉल्व हो रही है कंपनी, एंड ऑफ कोर्स मार्केट विल स्लोली ट्राई टू अंडरस्टैंड दैट एज वेल। बट हिमांशु भाई, बहुत अच्छा लगा आपसे बात करके, और आपने पूरा बिजनेस मॉडल समझाया, आगे क्या होगी कंपनी में उस पर भी आपने जो है बहुत विशेष टिप्पणी दी। धन्यवाद, एंड बेस्ट ऑफ लक फॉर द फ्यूचर सर।
Thank you so much.
So that's the management speaking about the growth, the way the business model is changing, margins are there, and interestingly, smart money is already invested. Of course, the stock has given multi-bagger returns, but the valuations, the brokerages feel is still cheap right now. Interesting story, right? So for more of this, stay tuned to KYC, and yes, keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ,
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut every Friday, 3:30 p.m. only on NDTV Profit.
Hi, thanks so much for tuning in. This is Profit Insights on NDTV Profit. I'm Alex Matthew, and with me in studio is Mahima Vajrajani. We live in a world where opinion is usually polarized. And so the opinion on AI goes one of two ways. Either you believe that the technology will be massively transformative, or you believe that it is overblown. But when speakers like Ashwath Damodaran and the IBM CEO weigh in, you stop and take notice. What are we talking about, and why are we talking about it today? In an interview, Mahima, just a short while back, Ashwath Damodaran, this is now somebody who a lot of people pay attention to because of his insight into valuations and several other things. Right. He said something that was very interesting, and I'm actually going to quote from this interview that he did. He has essentially said that the big difference between the dot-com boom and bust and the AI boom, we don't know whether there'll be a bust. History suggests that there will be a bust. The dot-com boom and bust had no huge capital expenditure in that cycle. In fact, there was very little traditional capex or even R&D driving it. People started apps. They basically started going on it. This is a direct quote, so that's exactly what I'm suggesting. We should actually pull that up while I'm speaking about it. This has been the biggest infrastructure run-up I've ever seen in business. You can go back and compare it to the automobile business 100 years ago. The amount of money that's being put into AI capex is immense, which means that when the correction comes, the pain will be more intense. And what exactly is he talking about with regard to the pain? He's saying that the dot-com boom and bust was almost entirely equity funded. But the bust, when it came, those shareholders lost 60%, 70%, 80%, or 90% of their money. You felt sorry for them, but the loss was restricted to shareholders. The problem with the AI capex boom is that not only is it immense, but a big chunk of it is funded with debt. And the debt is coming from private capital rather than banks. There's a very real chance that if there's a correction and companies start having problems, that problem is going to show up as distress and default, and that really doesn't stay restricted. It spills over to the rest of society as well. So that's one aspect, Mahima. And I realize that I've been speaking for a while, but there's also something else that stood out very recently. The IBM CEO making a statement talking about the amount of capex that's required per gigawatt. He's talking about for hyperscalers, $80 billion that's required. So you say for 100 gigawatts that's required, you will have a requirement of $8 trillion.
Correct.
And just for them to pay the interest on that, they need profits of $800 billion.
Yeah.
Where is that going to come from? That is the question that we're going to ask to our guests today. In fact, we've got joining us right now Mr. Venkatraman Narayanan, who's the Managing Director and Chief Financial Officer of Happiest Minds Technology. We will also have Mr. C.P. Gurnani, who is a co-founder and vice chairman of Aonos, joining in. But first to you, Mr. Narayanan, just your initial thoughts on what I've described and what Mr. Ashwath Damodaran, who is an intellectual juggernaut in the space, right? What do you make of what he's saying?
When Ashwath Damodaran speaks, you jolly well listen to it. That's my view, because I've been following him for quite some time, including the most recent article that he wrote, a large one at that, on the valuation of SpaceX. Can you hear me?
Yes.
Yeah. So including the valuation of SpaceX, he had given a valuation of something between 1.2 to 1.4 trillion, if I'm right. But, markets seem to have a mind of its own and they think otherwise, including the way post-listing gains have accrued to that company. So, these are expressions of opinion, but one needs to really look behind those numbers to try and make sense of what Mr. Damodaran and the other industry participants are talking about. But if you look at it, AI, there are three layers. One is, the infrastructure layer. That's what seems to be driving most of the spend today. Then you have got the foundation layer. That's the Anthropics and the guys who are making software. And the third is the application, the enterprise application layer, which is essentially the companies who are building out their applications and real live software on top of the AI infrastructure. Put together, we are talking about numbers like 8 trillion, which really are mind-boggling. A return of at least 20% is give and take 20%. You should have returns of close to 1.6 trillion coming in on an annual basis. Is that kind of money being generated today? The answer is no. Is there a future for that kind of generation? If you look at it from an economic standpoint, efficiency bringing in gains, are you looking at such big numbers being thrown up? I don't think so. So where is the money going to come from? It has to come from various other adjacencies which people are talking about in terms of enterprise application efficiencies, spend on defense and so many other areas. You're talking about this money having to come up from various parts. How is it all going to add up? I'm not sure. And we are talking about investment. The number of investment that I'm talking about is the top 10 or 12 companies in the world who are putting together this kind of expenditure, whereas you've got a long tail of people who are building their house on this infrastructure and on the AI theses. What's going to happen to them? Quite a few of those questions abound. Like Mr. Damodaran said, the simplest comparison right now in front of us is the .com and maybe the telecom boom. In the 90s, people were laying fibers, which never got lit up for a very, very long time. Maybe it took 20, 25 years. And the same thing is about the .com. You had pets.com and those kind of companies coming in, claiming huge valuations. But today, that's what drives business. Amazon is a child of the .com boom. And there are a lot of internet companies which are doing very well today. So the fundamental is in place, but the financial numbers behind it don't seem to be adding up, or at least to my limited understanding, they don't seem to be stacking up right now.
Rightly put, Mr. Narayanan, that there is a fundamental aspect behind it, but the numbers are not adding up. Let me also welcome in CP Gurnani, who's the co-founder and vice chairman of ANOS, joining us now. Mr. Gurnani, thank you so much, first of all, for taking the time. We were just talking about what Ashwath Damodaran has recently gone ahead and talked about, AI and AI bubble, right? There are two aspects to it, right? One, he's saying that the kind of capex that we're doing behind it, there's a huge, gap between the revenue generation versus the capex that we're doing. And the second aspect is that the entire money that is going behind this capex is largely private funds and debt generated money, right? It's just difficult. Like Mr. Narayan just mentioned that, the math is not mathing as we speak. What is your first take on this? How do you read through what Mr. Ashwath Damodaran has, put together with regards to where AI goes?
The good news is Damodaran has also been proven to be wrong. So, Venkat just spoke to you about SpaceX. My theorem is very simple, that bulls and bears, they've always coexisted. And number two is, I don't know of any infrastructure project in my life. For a layman, think of a hotel. When you put in $1 billion to set up a hotel, you don't even recover your interest income in the first few years. Over a period of time, your revenue starts going up and the property prices start going up, and hence you start recovering. Now, my personal feeling is, one is, look at the good news for the Indian IT market. That $8 trillion will be spent in technology sector is good news, number one. Number two is if the adoption goes up to the level that it is anticipated, for example, if you were to look at the Indian market, I mean, we probably have 60 to 70 million MSMEs. I mean, if 60 to 70 million MSMEs start using AI, their productivity efficiency goes up. But the reality is every infrastructure provider would also get a return out of it. So let's strongly agree that we can expand the market. And if we expand the market, we will be able to service the $8 trillion spend. In a short run, Mr. Damodaran could be right, but I think over a period of time, this infrastructure investment is required. We have seen it in the investments in the data centers. We have seen it the way India accounts for 20% of the India data produced around the world, and we will see it as a big wave, the data centers investments coming into India. So I am more optimistic.
Mr. Gurnani, good afternoon. This is Alex. And I just want to take that point forward. You make a very strong case. Having said that, something that a lot of people have commented on is the fact that there is a lot of connectedness in the way this capital is being provided and utilized, right? So a lot of companies are providing capital to other companies. And that's perhaps what was different from earlier massive capex cycles that you have seen. So there's a high degree of interconnectedness. And if there is a survival of the fittest that comes through in the next 5 to 7 years, and there are companies ultimately that fail, is there an issue with regard to others collapsing on account of that interconnectedness?
So, Alex, keep looking at the parallels. If you are talking only about the US, who is the dominant player of the e-commerce market? It is only one, called Amazon. Has that been able to do any predatory pricing? Has they been able to monopolize the market? No. And I understand NVIDIA investing in A, Google investing in B, Meta investing in C, and all of them seem to be, investing in each other to take control of the ecosystem. As far as I am concerned, there is more as a commitment to the industry than to read it as creating monopolies. And as far as I'm concerned, you're seeing three distinct patterns out there: Microsoft, Google, and Meta. You're also seeing a distinct pattern out there that NVIDIA wants to play a role in every part of the industry, whether it is the PCs, whether it is the gaming consoles, or whether it is the data centers of the future. So I strongly believe if there is a fight between the three principal players and fourth one, once in a while, Mr. Elon Musk making his bold statements, I think there is the only reason it is happening is because the market is expanding. It is not that people are trying to control the market.
An interesting point. Venkat, do you want to come in on this? Because ultimately you've just described the various layers and you've talked about the hyperscalers as forming the base of this, right? And the infrastructure that is being provided. Is there a need to provide a distinction in the case of a worst case scenario, which a lot of people are talking about, to say that if companies do fail and those that are providing the infrastructure, putting money to work, massive amounts of money, will the guys who are sitting at the top layer of this entire chain be relatively better off, unscathed? Or is there a significant amount of capital that is also going to have to be deployed by these guys who are sitting at the top of the stack?
No, like Mr. Gurnani mentioned, this is an infrastructure project. And I believe fundamentally this technology is here to stay. And it's going to impact all of us very positively. It's only the time scales that we are really debating, whether it is a matter of 3 years. Valuation has always got to do with the time frames within which you can evaluate returns. There are three layers, like I mentioned. Each of them have their own time scale. So the infrastructure layer guys, the data center, the guys who are putting in the chips and all the other hardware behind this, they must be expecting returns in a X kind of time frame. The foundation layer guys, they are the guys who are going to be most susceptible here to obsolescence. In fact, just this is my own take. Today, everybody talks about Anthropic and OpenAI. Perplexity is not talked about as much as it used to be. So you see people only give credence to the top one or two players in that space. So the foundation layer seems to be the one which is bereft of people who can say that we'll continue forever. Whereas the application layer, which is the guys who are making software on top of this, enterprise applications, they are if you ask me, the guys who run the excavators or the shovel guys. So they are going to be here for the long term. And like Mr. Gurnani said, the Indian IT industry, we are going to we'll come out hopefully better in the longer run from the whole AI transition. The infrastructure guy has his task cut out. He needs to get his return on investment. Economically, there is going to be a lot of productivity gains. How much of that will get apportioned to the infra guys is something that we'll have to wait and see. The foundation guys are really building the rocket engines out there and the technology which runs the whole thing. How are they going to make the numbers work will be something that we'll have to see. Where SpaceX is talking about an addressable market of 28 trillion, out of which 26 trillion was on the application layer. So a lot of bets being placed on how AI will be adopted and how they will make returns. As far as the enterprises are concerned, they are really going to make maximum use of this to make sure that efficiencies are brought in from the word go. So returns for each of the layers are going to be different, Alex, to my mind. But the underlying fact is, this is one of those changes which is here to stay. Experts of yesterday need not be the experts of today, because people tend to make statements or talk about things that are happening in front of them with the wisdom of what has happened in the past may not work because the fundamental thesis itself is changing. So to that extent, like Mr. Gurnani says, there is going to be an AI boom. There is going to be AI bust also at the same point in time, but it will be in pockets. Who's going to get hurt? Who's going to benefit will be what we'll get to see the next couple of years, is what my take is.
Fair. So then, Mr. Gurnani, just to, take that point forward, because there are a lot of layers to it, right? And like he said, there's going to be a boom, there's going to be a bust, but, we'll have to kind of figure out as and when this happens as to who is going to benefit the most and who might lose the most. So then it brings us back to the question that we talked about hyperscalers as well, right? So how can India position itself in this game to probably gain the most out of it? That's one question, because Mr. Damodaran also did say that, it's not just 1 or 2 trillion. It could take around $4 trillion of revenue to kind of bridge the gap between the debt and capex that we are right now building up to build that entire AI infrastructure. So what is your entire view when you put this into perspective from an India point of view?
So one is, nobody is disputing Professor Damodaran's maths. So let's be very clear, we are none of us, and who are we to question that eminent professor of finance? What we are now questioning is our own belief that this is like any other good infrastructure project. When you build a bullet train, when you build an airport, when you build a new highway, you don't start getting returns from the day one. Usually the cycle is 5 to 15 years. So number one, does this apply to this infrastructure spending or not? Number one. Number two is that my own personal belief is that even today, IT consumption is limited to select few. Technology is being adopted to its benefit by all public services or private services or by the companies that could utilize. So the potential itself is much higher. And as this technology is now becoming more conversational AI, more language AI, more vision AI, I think the adoption will increase dramatically. And that is why my belief is that Professor Damodaran is right, but he is taking a very aggressive stand. Number two, what it means to India. I think India needs to be clear about the role we want to play for the future. In today's environment, we are playing the role in the application layer. We'll probably start playing the role in the tokenization. We have already announced that we will play a role in language adoption. My personal belief is India needs to double up or triple up their R&D spend. The fact is that Google actually makes a lot of R&D investment through DeepMinds. If you look at OpenAI, which started more as a cooperative enterprise, the money that was going in was to create a new system. I think we have not taken that aggressive stand for India. India will benefit because of the tailwinds in the technology sector, but India can leapfrog if we start investing a lot more in the deep tech and taking a story forward. And we have seen some of these announcements in space. We have seen announcements in defense, deep tech. I think it's just a matter of doubling down and making sure that our deep tech investments go up by 100x, not just linear growth.
That's an important point that you raise. And to that end, it seems like the IT space in India has been playing catch-up, Mr. Gurnani as well as Mr. Venkatraman, with regard to the spend. But you've seen some interesting headlines, right? You've seen the Sarvam deal, you've seen the fundraise, you've seen a frontline IT company step forward and say that they're going to participate in that fundraise. So there's seemingly a thought towards that end. Mr. Venkatraman, just a quick last thought, and CP, you can weigh in as well. Do you see more such deals taking place? And ultimately, the street, I think, is caught in two minds. One, they want IT companies to utilize the cash flows that they generate to be more acquisitive, to build out certain lines. But then equally, they're saying, when will the money come through? How do you think that Indian IT companies will perform that tightrope walk, in your opinion, in the near to medium term? First, Mr. Narayanan.
Yeah, like Mr. Gurnani again mentioned, we have a great role to play. We are part of this entire ecosystem of the application modernization and addressing the tech debt. With AI capabilities, we can go a lot deeper into what needed to be done, which never could be done. Just to give, the deeper you can go into a mine, the more you can excavate. It's a similar situation. There were areas of software operations, production, finance, where we never could go into given the capabilities that we had. But now with AI, all of those become accessible. So the word that people use is tech debt. There is so much of that. You can get into a modernization with a lot more gusto than what we would have been able to do earlier. So to that extent, I think there is going to be a volume increase. As far as value increase, you are now going to do a lot more of higher end value added work. So there is going to be a value increase as well. So when value and volume increase, the service ecosystem that we are talking about, the Indian IT services, we are going to do okay. We should grab it with both hands. But at the same time, we are building this on the basis that the foundation layers and the infra companies will continue to do well. So it's important that they too do well. And despite Mr. Damodaran being a little critical about the financials, we hope that this continues to build out in the US, in Europe, in India, wherever, And that helps us build the base on, build the application on top.
You know what they say about good conversations, gentlemen? Time flies when you're having good conversations. Thank you so much. We're running out of time, and I have another guest that I want to ask about this. But thank you so much for taking the time. We really appreciate that you've spent time with us.
Thank you.
It's Sandeep Agarwal, fund manager and co-founder of Sovilo Investment, joining us right now. Just to give us the last word, Sandeep, apologies for keeping you waiting. It was that kind of a conversation. But you heard these two gentlemen talk about the space emerging. Your last word on Indian IT. And if at all what Mr. Damodaran is saying comes to pass, what happens to Indian IT that is now transitioning to more AI adoption?
Hi, good afternoon, and thanks for having me on the show. So I was listening to both the gentlemen, CP I know for a long time, and even Venkat. So both had a point to make. But let me, I think the most relevant part in the whole discussion is how do we participate in this, and what is there for Indian IT services in this. So I was also listening to, Fractal Analysis CEO in another channel today morning, and I agree more with him. And I would say that, out of the three layers, right, we will have a very big plate there in the application enterprise and to some extent in the foundational layer. Because, and on hardware, I will agree with what CP and Venkat both have said. We cannot have only, the return analysis because the infrastructures are built for next 20-25 years. So, this is my thesis, which I have been saying for last 14-15 months, that hardware boom has come after 2 decades. Last we saw in 2003-04. After that, there has been no big hardware spend which has happened. So all the softwares and products which you are running on almost like 4 or 5 decade old hardware. So that needs a replacement, and that cycle has come in form of AI after 2022, and that is the reason you saw that hockey stick growth in the NVIDIAs and AMDs and all. And you also are seeing a follow-up growth in the foundational players like the Anthropic and the Microsofts and the Grok and all of them. And I think, in the third leg, which should happen in my view in next 6 to 12 months, you will see a big growth jump even in the service providers to this foundational players, which is primarily Indian IT services and the Accentures of the world. So I think this is the way it will play out. And I am very clear of one view that, you can't always calculate return on investment because infra spends. And that is the reason, most of the countries, the government has to participate in the infra part of the spend because no one wants to take that kind of risk and commit that kind of capital. So AI is one such infra based on which a lot of companies will operate and make money. And I'm sure that, there will be a lot of Amazon type of companies which will come out of this round of spend. Not necessarily the hardware players will remain big for long. Yeah.
Got it. Sandeep, thank you so much, first of all, for waiting patiently and giving us that, concluded answer that we needed to end this show perfectly. So thank you so much for taking out the time and giving us that perfect answer. But I think the debate still will remain alive, and we'll have to wait and watch out for as to how the AI race pans out, especially the Indian version. But do let us know your thoughts and comments on our YouTube channel in the comments below. What do you think as to who will win this race? And with that, completely out of time on this edition of Profit Insights, but do stay tuned. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबस शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबस शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
is Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey, who's standing at the Profit Market Pit with all the action. Sharad, good afternoon. An interesting day of trade because you are seeing a lot of positive momentum in terms of markets. The question is, how sustainable is this going to be, and what can we actually attribute this to?
Exactly. Good afternoon, Hiral. And seems like the markets are not taking that much stress when it comes to the fragility in the global peace scenario. But nevertheless, look at the technical strength. Even though we are a little bit off from the day's high, the strength is maintained. Nifty is up almost 0.5%. Nifty Bank also, let's have a look what's happening here. The technical strength, the key support levels are being maintained. So that's a very good sign. But the action is there in the small and mid cap space. We'll get back on that. But let's look at the factors to watch out for. Of course, it's a stock pickers market right now. And we are seeing a really good action, especially in the small cap and mid cap. The technicals are showing strength for both Nifty and Nifty Bank. Some larger long-only position trades can be made. The Nifty support 24,000, 2400. This is the range you're talking about. Let's pull up the Nifty Bank support range to give you the picture on the technicals, which levels you should be tracking, and these are the levels which you should be looking at. Apart from this, also the sectoral moves. If you see, there was a big sell-off in the IT space, and now we're seeing the short covering happening. So there's some up moves happening there. But nevertheless, most of the sectors are in green, but they're not expanding a lot. But definitely the strength is good. Select consumption names are seeing sell-off, especially if you look at the FMCG names. Also, the bullish sentiment continues in the broader markets, and that's a good sign. Look at that, just 0.7% there. Pressure seen in the rupee, a little bit of it, but remember, dollar is trying to strengthen. Other asset classes are volatile a little bit. Today, only one data is important. You should be tracking the May core industries output data. But nevertheless, there is a lack of news flow. But the small cap, mid cap, that's where the action is.
Okay, so that's with regards to where markets go. But look, let's look at the watch list. Cipla, Citi has maintained a tactical buy and strong moves coming in on this one. IT stocks are again back in focus. You know, you've seen that the losses that we saw in terms of the global IT counters and Indian markets, that has been recouped, a rebound that is coming in there. And the buyback buzz, I mean, the changes in terms of tender versus out-market buyback. So that's the reason why you're seeing some buzzes there as well. Eicher Motors, Goldman Sachs has maintained a buy. That stock is buzzing in trade. Blue Cloud, it's all about AI. They're eyeing an AI opportunity with SpaceX, and that's the big one. Nosil, there are curbs on rubber chemical imports, and that's the reason why that stock is buzzing in trade. And Kirloskar group of companies, strong volumes across, the volumes are up nearly 5 times versus its average. EPAC Durable is also in focus because Xiaomi is eyeing India's FMEG market, and what products they will be coming up with is anyone's guess. 2 companies where the government has granted them a Navratna status, that's GRSC and Chennai Petro, both buzzing in trade. You have a NHPC as well, where they've signed a PPA with Hexa Climate, and Endurance Technologies has begun a 2-wheeler battery pack production plant. Good Luck India is buzzing on the back of an order win along with Texmaco Rail as well. Som Distillery is under pressure where the Bhopal plant clearance has been denied, and it's a 25% revenue impact. That's what the management has indicated to NDTV Profit. Kaveri Seeds, biggest advance in 2 months is what we've seen. And likewise, Lakshmi Organics also buzzing on the back of volumes. But Sharad, over to you to take the rapid fire with Nilesh Jain of Centrum Broking.
Thanks a lot, Hiral, for that. Good afternoon, Nilesh. It's always a pleasure to have you with us at NDTV Profit. We'll start the rapid fire round and look at Nosil. The stock is doing really well. It's almost near its circuit levels. Good time to, take a little bit of profit off the books because chemical names are quite volatile. Or do you think there is a much more, long rally pending for this counter?
Very good afternoon, Sharad and Hiral. Well, see, it has already hit a upper circuit today. So I will suggest, if somebody is already holding the long position, can stay put, keeping a trailing stop loss now at 183. And I think the stock has a potential to move towards 200 plus in the near term. So stay put is the advice if somebody is already holding the long position.
Right. But today is a basket buying happening across the Kirloskar Group stocks. We had mentioned it earlier also today. And I just wanted to ask, Nilesh, the Kirloskar brothers, Kirloskar oil engines, and we are having a lot of Kirloskar group related stocks, a good basket buying. Seems like after a consolidation, there might be further up move in the entire group. How do you see these group stocks? And out of this, anything which has a better risk reward ratio right now?
Well, absolutely, Sharad. We have already seen a kind of upper circuit in Kirloskar Engineering. So there is no point taking any fresh long bets at current level. So it's an avoid. Kirloskar Brothers could be a good bet at current level. We have already seen a 10-11% uptick, but it's a kind of a buy and decline structure. If you get any dip towards 2000, 2050, that can be used as a buying opportunity. The stock has the potential to move towards 2300 to 2400 in the near term. So stop loss should be at 2000.
Right, and of course important government status also coming in for GRSE, Garden Reach Shipbuilders, as well as Chennai Petrol. Let's get both of these stocks up, both good momentum, 2 to 3% up. Technically, which should be a bet out of these two, Nilesh?
See, GRSE, we continue to remain bullish. We also recommended to our client as well. So overall, GRSE, we are expecting a move towards 3000 plus in the near term. So that's a buy call. can be added at current level, keeping a stop loss below 27.18. And Chennai Petro, yes, this particular counter is also looking positive, and we can expect a gradual uptick towards to 1150 to 1180 in the near term. So risk and reward is looking favorable in Chennai Petro at present. So keep a stop loss at 1090 and go long in Chennai Petro.
Under NHPC, of course, it was there in a consolidation. The stock is very stable stock, to be honest. But today, of course, a good up move coming on a packed announcement coming in. Is there a trade to be made here, or you'll avoid this counter?
Well, sir, it's an avoid. Reason being there are multiple resistances. So 80 is an immediate hurdle followed by 83, 85. So I'll suggest to avoid this particular counter till we see that breakout coming in.
Right. Another counter, interesting one, Good Luck Defense. Good Luck. They are getting a lot of orders in the defense space, the Good Luck India. What are the charts suggesting?
A very strong setup. In fact, a fresh breakout with a good volume attraction today. This counter is key to a fresh record highs as well. So yes, still looks strong for 1550 to 1600 on the upside. So one can keep a stop loss below 1425 and can be added on declines.
Right, and order wins also coming in from Texmaco Rail, another stock, in this entire theme. Railway stocks, there is a good volume, also momentum happening. Is there any important levels to track for this counter, Nilesh?
Well, yes, a pullback trade can be seen in Texmaco Rail, maybe towards 120 to 120 is the 200-day long-term moving average resistance. So from current level, we can expect another 5 to 6% kind of uptick. So one can keep a stop loss below 110, and yes, can be added on declines.
Right, another stock, agri-related stocks, we have Lakshmi Organic as well as Kaveri Seed also. Interesting names. Generally, volumes are not so much in these counters, but today they are seeing a good momentum. Both stocks up 7 to 8%. Do you think any alpha can be made here, either of them?
The Lakshmi Chemical, this particular counter is on the verge of a breakout. So if it breaks 170, then it will be considered as a consolidation breakout. Then probably we can expect a move towards 185 to 190. So Lakshmi Chemical could be one particular counter where we can expect a follow-up move to continue on the upside. So keep a stop loss below 157, and yes, watch out for this particular counter.
Right, all right. That's the end of the rapid fire round. And now over to Hiral. She's tracking the Google trending stocks. Hiral, what's there on your list?
Last couple of days, we had a lot of Vedanta group of companies that were trending, and that was mainly on the back of the demerger that happened and post which the listing happened. But now you have a Jio Financial Services, Reliance Industries, interesting names coming in there after the AGM. And, you have the Jio IPO details that were given out and filed as well. Tata Capital and Nestle are also good names to look at. If you have to look at Nestle and Tata Capital, I beg your pardon, Nilesh, anything that you like on the charts, because both of them, the trend is downwards today?
No doubt today we are witnessing some bit of profit taking, but if you see the broader structure for Tata Capital, which has already turned positive last week, where we have seen a fresh breakout. So I think this profit taking is giving you a good opportunity to initiate a long position. So if you get any dip towards 350, that's a good entry point, keeping a stop loss below 342. Once again, we can expect a further rebound going forward towards 372 to 380. So Tata Capital could be one particular counter where a contra bet can be taken.
Right, so contra bet coming in from Tata Capital. Thanks a lot, Nilesh, for that, giving you important views on the technicals portion. But one stock is there which is in focus, that is Cipla, which is in green, and of course Varsha is not in green, she's in red. But Varsha, what's the reason why Cipla is buzzing? Is it a report or is something else?
Well, Citi is actually bullish on Cipla, and hence they have rated buy with the target price, which implies 25% upside, and hence we are seeing Cipla is up almost 3.5% in trade. Now, what Citi is saying is that they believe that the risk reward is favorable now, and they have put Cipla on a 90-day positive catalyst, meaning the next 3 months could be a re-rating, or I would say a stock moving trigger for a company. Citi is betting on 3 major developments on the launches when it comes to US, and these are critical because US revenue has been weak for the company, and these launches can drive recovery when it comes to the US sales. Talking about India business, well, domestic business is already doing well, and the growth is supported by respiratory product portfolio, and that Indore plant US FDA FDA re-inspection could happen anytime. If that is clear, this will become a big positive driver for the company and trigger for the stock, of course. Geopolitical pressure is been easing up, and impact of Revlimid decline is actually largely behind. And overall, if you see, the risk reward is looking attractive, and hence Citi has given a 90-day catalyst and 25 to 26% of upside potential that we are seeing.
Thanks a lot, Varsha, for that. But a big upside potential. That's pretty interesting. Stock is also up 5%. The top gain in the Nifty index. Very interesting pharma space. And join us more. We are having our fundamental guest, Gaurang Shah, with us. Good afternoon, Gaurang, sir. It's always a pleasure to have you at NDTV Profit with us. And we just discussed Cipla's momentum and a Citi upgrade, or you could say a bullish note coming in. How do you see that stock and also the pharma space as a whole?
Thank you, Saraj, for having me on your show. Good afternoon to all the viewers of NDTV Profit, to you and to Hiral as well. Small disclosure, Sharad, all recommendations that I'll be sharing with you this afternoon, they're part of our fundamental search team recommendation. Our company, Jayajit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with the clients. They might have their investment interest. So Cipla, actually, if you go to see, has not done much over the last couple of years. We've been maintaining a positive stance on Cipla for a pretty long period of time. We continue to have a positive stance, and I hope all these approvals that are going to go through, as Varsha was elaborating, will transform into positivity in terms of top line and bottom line. And the overall pharma space, we are positive. I think one of the sectors which are relatively less insulated or more insulated and less vulnerable from the ongoing situation is pharma, healthcare, power generation, etc. So we are positive on Cipla, Sun Pharma, Divi's Laboratories, Dr. Reddy's, amongst the mid-cap name, Aurobindo Pharma, Natco Pharma, likewise.
Okay, so that's with regards to pharmaceutical names that you're watching out for as well. But moving on to an NDTV Profit exclusive. Sources tell NDTV Profit that 10 to 12 fertilizer vessels that were stranded near the Strait of Hormuz have resumed their journey to India. And we have Rishabh who's joining us with more details on this development. Rishabh, all of us were actually wondering as to what's happening with the fertilizer pack, which opened up, gap up in today's session. So there is some buzz coming in there. And there you get for us exclusive stories right now. What are you picking up?
Absolutely, Hiral. What we're picking up from top official sources is the fact that there are a bunch of vessels, roughly 10 to 12, that were earlier stranded near the Strait of Hormuz due to the obvious tensions that are around that area. There's the constant open and shut of that very narrow, very important for commerce Strait of Hormuz. So roughly 10 to 12 of those vessels, which are a combination of Indian flagged as well as foreign flagged vessels, but all of their destination is India, is what we're picking up. All of them are now on their way to India. They're expected to arrive over the next 2 or 3 days. I also checked almost all fertilizer stocks were up and have been up for a bit. What we have also is the details of these 10 to 12 vessels. Now, roughly 8 of them are set to carry urea-based fertilizers. India is the largest consumer of those urea-based fertilizers, and roughly 4 of them are carrying DAP or related raw materials. So that's the breakdown that we have at this point in time in terms of what is entering into India. Now, remember why stocks are up is, of course, because India is the largest importer of fertilizers. The incoming Kharif season is going to be extremely important for the agriculture-based economy here in India. That is sort of what lifts up everything in terms of sentiment as well. And that's what we're picking up in terms of the sort of fertilizer stock that is set to come into India after the sort of tensions that we've seen weighing down on the entire petrochemical chain. So this is a relief for almost everyone in the sector. All farmers should be sort of happy. The government has also been able to procure these fertilizers so far, and that seems to be continuing with these vessels coming in.
Okay, so, interesting moves there. Thank you, Rishabh, so much for joining in. It's always a pleasure to get such exclusive breaks from all of you guys as well. But clearly, Gaurang, if you have to talk to us about the fertilizer pack, this is slightly positive right now as well, because we have fertilizer vessels which are on their way to India. 15, I think, if I'm not mistaken, is the number that you're looking at that have been freed up, that were stranded in the Strait of Hormuz. How big a positive would this be, taking into consideration the rain, the monsoon impact as well?
So, Hiral, while fertilizer and urea happens to be a very important commodity, if I can say that, for our agri sector, and as we all know, Hiral, 75% plus population depends on agri-related activities. Delayed monsoon always creates a lot of turbulence for our economic growth, for our consumption, inflation, etc., etc. It is always prudent to have a steady supply line as far as our input of raw material, urea, or others are concerned. With this news, I think definitely there should be some sign of relief. We like the fertilizer sector, and of course, the government has done a lot, Hiral, to educate, upgrade, not only in terms of knowledge, but also in terms of technology to our farmers, brothers and sisters. And that is transforming well in terms of productivity and output from the farm. One company that we are positive on in the fertilizer pack is Coromandel International.
So the fertilizers, we are seeing the stocks also doing well in the trade. The volumes have picked up. But interestingly, buyback announcements, SEBI has come out with a proposal, or actually they have actually allowed the open market buyback. And of course, the benefit is for the cash-rich companies like the IT segment. But to decode that, a little bit of nitty-gritties, we are joined in by Jasmeet. Jasmeet, what's the here?
Well, Shira, thank you for that. As rightly said, the SEBI has approved the open market buybacks. While we see slight positive news coming from IT companies, given IT companies do a lot of buybacks, and earlier SEBI had banned the open market buybacks on the back of that tax arbitrage issue. But given the tax issue was solved back in the union budget, now the SEBI is back with the open market buybacks. Now, how is this positive? Is given Indian IT companies do a lot of buybacks, and given an open market too, they'll be able to do a buyback in a quicker way. How generally tender offer buyback takes roughly 6 odd months, but open market buyback takes less than 6 days. Given SEBI has a new rule where a buyback announced by a company should be done in 6 days. When we look at the past buyback history, top 5 IT companies have done nearly 17 to 18 odd buybacks in the last 10 years, and they've returned nearly 2.1 lakh crore of worth. So it's a wait and watch after this particular news, which company comes up first for the buyback.
Right. Thanks a lot for that, explaining us the entire mathematics and the impact analysis. Gaurang sir, just wanted to understand, this eases, a little bit for the IT companies and cash-rich companies as well. How do you see this development, and do you think this is a positive development for the IT?
Minus this also, Sharad, you've seen a lot of buybacks happen. A number of them, from likes of Infosys to TCS to Wipro to HCL Tech and others. So is buyback the reason why you get invested fundamentally into stock? I don't think so. I may be wrong. Correct me if I am. Fundamentally, we believe that there is a lot that will happen in the IT sector. Yes, the entire sector is going through a lot of headwinds in terms of innovation, changes, technology, products, platforms, tools, etc., etc. But they are still relevant. It is not that IT companies have become irrelevant. You are going to need the back-end support of IT companies into implementing all these things into reality. So while the buyback would be music to ears for short-term, medium-term traders who want to participate into these buybacks, but if you are fundamentally invested in IT companies, fundamentally strong companies I'm talking about, Sharad, then we still maintain a positive stance on it, and we are giving a buy stroke hold from a long-term point of view.
So interesting views in terms of IT. Gaurang, 2 names. We just have a minute. Eicher Motors, where Goldman Sachs has maintained a buy, and they've hiked the target price to 9,100. And Som Distilleries is under pressure because their excise license application for Bhopal has been rejected, and the management indicated it's a 25% revenue impact. What would you advise investors to do on both these counters?
Be careful with double-digit, single-digit stocks. Hiral, while we remain positive on alcohol beverages, if I can use that term, one of the companies that we are positive is United Spirits. On Eicher Motors, Hiral, just look at the numbers of Royal Enfield motorcycles, locally as well as exports globally. And of course, the positive traction from commercial vehicle and the JV in terms of Volvo. For a pretty long period of time, we've been positive on Eicher Motors, both not only in terms of, not only in terms of commercial vehicle, but also in terms of two-wheelers, and of course the opportunity for commercial vehicles to get exported, because that number month on month has been very, very positive.
So interesting view coming in there. But thank you, Gaurang, so much for joining in. Always a pleasure to speak to you, but completely out of time, viewers. Thank you from Sharad, the team that put the show together, and myself. We'll quickly slip into a short break, and lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news hub.
Iran and the United States have reported progress in high-level talks held in Switzerland, with mediators Qatar and Pakistan announcing a 60-day roadmap toward a broader agreement. Technical negotiations will continue this week, with discussions focused on regional tensions. An exclusive news coming in: fertilizer supply lines to India are back in motion. Around 10 to 12 vessels earlier stranded near the Strait of Hormuz amid rising tensions have now resumed their journey. Sources tell NDTV Profit that these vessels are expected to dock in India over the next 2 to 3 days. The Wall Street trades in the green. Nifty steady above 24,100. Sensex above almost 380 points. Cipla, Dr. Reddy's top the charts. Asian Paints, Shriram Finance lag behind. And most sectors are trading in the green as we speak, barring Nifty, FMCG and consumer durables. Nifty, media and IT top sectoral gainers, followed by pharma and auto. Blue Cloud Softech, meanwhile, is in focus after company announces it's exploring a potential AI partnership with SpaceX International. The company is saying that discussions are currently at a preliminary stage, with both sides evaluating possible areas of collaboration. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets in terms of what's happening there. So you do have Nifty and Sensex in good shape as we speak right now. So Nifty in good spirits with that 100 odd point uptick coming in. When you talk about Sensex as well, that shade of green is actually much darker there with that 360 odd point uptick coming across for the Sensex. When you talk about the entire sectoral picture, very, very sharply tilted in the favor of green. In fact, there's only one sector that is currently among the major sectors trading in the red as you speak. So FMCG is on the back foot. What's leading gains is IT, pharma, oil and gas, auto, financial services, realty, bank, as well as energy, exactly in that order. When you talk about some of the counters that are buzzing away in trade, something like a Kirloskar Oil, Aegis Logistics, all of those counters doing quite well for themselves. But even from within the Nifty 50 pack as well, something like a Cipla, with that 4.5% surge really coming through. Dr. Reddy's, Tata Motors, PV, and some of your IT majors also in good spirits, with IT being the top gainer, Infosys, Tech Mahindra, all of those counters doing quite well for themselves. On the flip side, something like an Asian Paints, Shriram Finance, Titan Company, Power Grid, Max Healthcare, all of those stocks faring a little bit poorly in comparison with the Wall Street that is trading firmly higher right now. But that said and done, let's quickly take a look at the entire commodities complex as well. Talk to you about what's happening there as well. So largely you do have the supply story that is very much in focus when you talk about oil prices. Let's see those on the screen as well. But you know, when you talk about the entire roadmap right now, as you can see, some bit of recovery really coming through in terms of some of those levels at least that you're tracking. But barring all of that, if you look away from WTI and just focusing on Brent as well, you're looking at that potential 80 million barrels that is going to be flooding markets, really talking to you as well in terms of those price levels that you're looking at. When you talk about gold prices on the flip side, you're seeing quite a bit of recovery really coming through, with a gain of as much as 1.6%. And in terms of factors, you do have the progress in the US-Iran talks that is actually being priced in a very different manner when you talk about gold as well. But let's also get Biren Vakil, commodity consultant, Paradigm Commodity Advisors, joining us on the show right now. Thank you so much, Mr. Vakil, for taking time out and joining us. First things first, just wanted to try and highlight what is happening with oil prices as well, and what do you think about everything that has been going on? How are you looking at it?
During recent peak around 110 Western countries, EIA almost flooded market with 4 crore barrel of reserve oils. And now almost 70 lakh barrel oil is out from Hormuz, rather from Hormuz blockade. So I think market swung from deficit story to supply glut story. So I think we may see further downside here around maybe 65, 70 in very near term.
Absolutely, and thank you so much for highlighting that as well. Just wanted to quickly try and understand what you think about gold as well in terms of the kind of move that you've seen. Gold, in fact, has managed to recover most of last week's losses. Some strength really coming through. Do you see this sustaining? First things first.
After last week Fed meeting, which was little hawkish, I don't think there is any meaningful recovery. I think gold may face resistance around 45, 46, 50. Tentative zone, trading zone could be around 42 and 45.
Absolutely, and given everything that has been happening, right, given that there's a confluence of factors that you're looking at when you talk about gold as well, what do you think about fresh buys? If somebody's really been waiting on the sidelines, waiting for the dust to settle, do you think that has really happened? What should investors who are waiting for festive season buying or fresh buying do at this point?
Broadly speaking, confused money is chasing confused market. Global economy is having diverse interest rate regime. Japan interest rate are nearly 40-year high. US is in a dilemma to hike or not to hike. So once monetary environment becomes clear and geopolitics become a little bit clear, I think we may better value somewhere around below 4,000 or 38, 39. That could be really attractive buy for gold.
Absolutely, and that's a very nice quote really coming through and something to really understand the market buy right now, confused money chasing a confused market right now. But there's one thing that is very decisive when you talk about oil prices right now, right? You do have that 80 million barrels thereabout that is going to be kicking back in terms of supply. Given all of that, what is the lowest level of prices that you're then penciling in when it comes to crude?
I would not rule out around 60, 62, which I would call reversal to mean.
No, absolutely. And thank you so much for highlighting that as well in terms of some of those levels as well. Just wanted to quickly talk about some of these other supply story fundamentals that are really playing out right now. So you do have Kuwait that has withdrawn some of its earlier force majeures. Against that backdrop, you do have ADNOC that has also asked buyers to resume crude loadings as well. So you do have supply coming in by the way of other sort of infrastructural issues that were previously sustaining because of the war. That's something that is changing very rapidly. How are you looking at that entire aspect when it comes to supply?
There are parallel oil pipelines are underway. So Hormuz is by the time Hormuz completely replaces, we may soon have parallel systems. There are already 2 pipelines are working in Gulf near Saudi.
Right now, absolutely. Just very quickly, wanted to get a word in terms of what you think about silver prices as well before we move on.
Silver is in a recovery bounce. May head towards 70, 72. There is good demand of buying from electronics, chips, AI sector.
Absolutely, and thank you so much for helping us out with all of those insights this afternoon. Thank you so much for joining in on the show as well. So there you go. That's the entire outlook coming in as far as gold is concerned, silver as well as oil. And there's actually much more downside right now. Confused money is chasing a confused market right now. When you talk about gold, that's the word coming in there. So fresh buys might wait for better levels when you talk about gold as well. That really is the headline coming in there. Moving on, talking about SpiceJet as well, that has gotten a liquidity lifeline under the government's ECLGS window. In fact, sources are telling NDTV Profit that the airline has received the first tranche of 150 crore rupees from Bank of India, with more in the pipeline right now. Sesha is joining in with some of those details as well.
Right, SpiceJet has received rupees 150 crore from Bank of India under the emergency credit line guarantee scheme. Now, this is the first tranche of the 500 crore facility being processed for the airline, with the remaining 350 crore expected to be disbursed in phases. The airline is among the early beneficiaries of the 5,000 crore credit window earmarked for the aviation sector under ECLGS 5.0. Notably, this scheme allows airlines to access government-backed loans as they grapple with elevated jet fuel prices and disruptions linked to tensions in West Asia, which have added pressure on their already stretched cash flows. Now, SpiceJet did not respond to NDTV Profit's queries on this particular development. The funding is aimed at strengthening SpiceJet's liquidity position amid the rising operating costs and operational disruptions.
No, absolutely, and thank you so much, Shesha, for getting us all of those details as well. So there you go, that's SpiceJet for you right now. Of course, the stock not doing all that much, but since we're talking stocks, let's talk about Kirloskar Oil as well. That is buzzing away with that 20% uptick coming through. There's in fact a bunch of counters that make it to Shivam's list on the back of some of those order wins that have been picked up of late, and some of those counters really buzzing away. Shivam, let's start with Kirloskar Oil Engines and talk about the entire list that you have for us right now.
Lots of stocks on the buzzing on the back of the order wins, and starting with the first stock in our list is the Kirloskar Oil Engines, which has recently secured a large data center order of around 192 megawatts from Hypernext for OptiPrime Power Systems portfolio. Now with this order, this will strengthen the presence of the company in the digital infrastructure segment. Second is the PowerMech Projects, which has received an order worth around 1,000 odd crores, which is from JSW Thermal for civil and structural works for two 800 megawatt thermal power project, and the timeline for the execution of this order is 36 months. Third stock is Bharat Forge, which has received a 425 crore defense order for supply of gas turbine generators to Indian Navy force, and this is to be done over a period of 5 years, and with this order the company has entered into a marine gas turbine segment. Next up is the Divgi Torque Transfer Systems. The company has won the all-wheel drive system order from a key original equipment manufacturer, and with this order the company will supply a drivetrain components of around 6,000 units annually for SUV models for over 5 years, and this will start from FY28. Now next stock is Good Luck India, which in which the subsidiary has secured around 255 crore defense order for supply of 155 millimeter long range shells, and this order to be executed within 10 months. And last stock is John Cockerell India, which has secured around 85 to 90 crore worth of orders for JSW GFE electrical steel for tunnel furnace package. Now this order is to be executed within 15 months.
Absolutely, and thank you so much, Shivam, for highlighting all of those counters. Let's also talk about one market that is in the spotlight right now. So you do have Chinese smartphone maker Xiaomi that is preparing to enter India's large home appliances market. Morgan Stanley is believing that this competition is really building up when it comes to some of the domestic players. Mahima joining in with all of those details there.
Right, so Shreyansi, as you rightly mentioned, Xiaomi is entering India with its home appliances expansion, and this means that they're going to expand into ACs, refrigerators, washing machine, etc. So they're moving from the strategy of smartphone-led broader consumer growth to a broader electronic growth as well. Now, what does this mean for other consumer durable companies that are already into this game, right? This will, of course, definitely heighten competition for incumbents. Appliance entry is expected to, of course, intensify competition in the mid-market prices, and Xiaomi is known historically for its aggressive pricing approach, and that's how they break markets, and it's also strengthening its localization, manufacturing and service infrastructure. So while it is negative for companies like LG, Whirlpool, Havells, Crompton, Blue Star, Voltas, etc., it turns out to be slightly positive for EMS players because, Xiaomi is actively scouting for EMS players for setting up local manufacturing. So this is a positive read-through definitely for counters like Dixon, Amber, PG Electroplast as well as EPAC Durable. Plus, they've kind of elevated India business to South Asian headquarters, and this signals that they are, they're giving it higher strategic importance, greater capital allocation, as well as faster decision making from the global headquarters. So this is the overall view of what this means for Indian listed, consumer players.
Absolutely, and thank you so much, Mahima, for joining us with all of those details. And speaking of positives, then let's talk about the IT sector. In fact, the SEBI has restored some of the open market buybacks from August 1st, benefiting cash-rich IT firms with tighter rules on timelines and promoter participation also kicking in. Jasmeet joining in with all of those details. And Jasmeet, IT right now is doing quite well for itself. Tell us about the details when it comes to the SEBI front.
Well, thank you for that. As rightly said, we see slight positive in IT after a huge sell-off we saw in the month of, on Friday. Now, what is the news about is the entire SEBI portfolio. They have come back with the overall open market buybacks. Well, this open market buybacks were barred in April 2025, but now they're again back. Now, the initially they were barred on the back of that tax issue, but now given during union budget, they have given the tax reliefs, and a change in tax rule has led to the overall restarting of the open market buyback. Now, why would this benefit Indian IT company? That's a key question. Firstly, Indian IT company is known for buybacks, and they indulge in a lot of buybacks compared to other players given the cashless nature of them and low capex nature of the Indian IT. Now, in terms of the overall buyback scheme, open market buybacks are simpler compared to the tender buyback given the duration is shorter. The SEBI has capped the duration for the open market buyback as 66 days. So roughly in odd 2 months, the company will finish the buyback and 40% of it will be completed in the first half. While the second reason is the company, instead of spending more money and time over the regular market buyback, they can tender market buyback, they can go with the open market buyback and reduce the overall hassle. So this is the key reason why IT sector remains in focus in today's trade, and we see a bit of green for IT sector as well, about 1% odd.
No, absolutely, Jasmeet, but let's also focus in on some of the brokerage commentary also coming in. Talk about another sector that is in focus on the back of that. In fact, brokerages are turning less negative when it comes to some of your OMCs after crude oil prices cooled from recent highs. We've talked about the outlook for crude oil prices going forward as well right now on the show, but when you talk about going forward, the read-through coming in for OMCs, let's talk about the brokerage note coming here, Jasmeet.
Well, rightly said, we see brokerages turning less negative and the stocks are mainly doing flat in today's trade. Now, we have quoted securities on the entire OMC space, and they have upgraded the rating for all the pack and also hike the target price. While they have upgraded to reduce from initially sell for IOCL, BPCL and HPCL, and they have also hiked the target price for IOCL to rupees 150 from earlier 120, and for BPCL to rupees 320 from earlier 245, and for HPCL to rupees 400 from earlier 275. Now, what they make a note is that overall happy days are back much sooner, which were gone because of the war, and further they also make a note that OMCs are unlikely to report any losses in FY27. That's the key takeaway from the report. While I also have JP Morgan entire OMC space, while they say that the overall petrol diesel margins are back to the pre-conflict level which were noted. Further, they also note that the losses on LPG are still elevated but should start to track on the back of the reduced oil price. While the earnings of Q1 is likely to get hurt on the back of the inventory losses, but Q2 to see the profitability again. Further, they also say that the overall valuations are impacted on the back of that increased debt which the OMCs took in the last few months on the back of that overall oil price crisis, but even that should eventually set off going ahead. Further, they also lastly make a note stating that the government might keep the overall taxes low so that the debt repayment gets easier for the OMCs. Now, in terms of the top preference by JP Morgan, we have stocks like BPCL and IOCL which they prefer.
Absolutely, and thank you so much, Jasmeet, for helping us out with that entire outlook really coming through as far as that entire space is concerned. Let's also talk about Dr. Reddy's. That's one counter that's buzzing away in trade right now. And when you talk about Nomura, they've hiked the target price as well. They're talking about some strategic pivots in the favor of brand business as well, and some of those muted street expectations that make the risk-reward favorable right now. So they're largely constructive when it comes to this one, talking about how the revenue mix change is going to be supporting growth going forward, and the re-rating of the stock's valuation, also something that they're expecting right now. When you talk about Cipla as well, that particular counter is buzzing away in trade right now. You do have Citi that's maintained a buy rating on the counter with a 26% upside. They've also initiated a 90-day positive catalyst watch, and as you can see on your screens, 4.5% uptick coming in on this particular counter. In terms of the near-term US triggers, you do have some of the approvals that make it to Citi's list, and in the near-term US triggers as well, a strong 50% share in a formulation, also something to track. The India business seems to be tracking well, and that's also something that Citi's highlighted. Lastly, when you talk about an additional catalyst, they're talking about the US FDA clearance as well. That is something that you should be keeping on your radar. If Cipla is a stock that you track, risk reward also looking quite attractive here as well, same as Nomura's stake coming in on Dr. Reddy. So both of those counters really buzzing away in trade. But moving on, let's talk about the Department of Telecommunications that has released draft rules for satellite spectrum allocation, laying down some of those eligibility criteria and spectrum charges for several legacy satellite communication services. Rishabh joining in with all of those details.
Right, absolutely. A very important set of notifications that is coming from the Department of Telecommunications. This is, of course, with regards to the administrative allocation of spectrum. And this includes the likes of BSNL, MTNL, whether these companies would like to, offer some sort of satellite phone services in the future. These rules will what will be governing those services. What we're picking up is, of course, that these rules lay out the eligibility, the spectrum charges, what conditions these companies will have to fulfill in terms of regulatory clearances. All of that has been notified in these rules. These are, of course, open for public consultation for the next 30 days or so, after which you'll have the final draft for these rules come out. What's interesting, though, is that these rules do not govern your satellite internet firms like your Starlink, as well as the GeoSatcom, also the Eutelsat OneWeb constellation that is also set to start offering services in India. So there's a lot of chatter around how much these firms will have to pay in terms of satellite spectrum charges, but that is not under the ambit of these current rules. That's what we're picking up. What we're picking up instead is that these companies are awaiting some sort of clarity over what the rules will be for this particular sector of services. So that's what we're picking up from the Department of Telecommunications.
No, absolutely, and thank you so much for joining us with all of those details as well, Rishabh. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it.
That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be rich.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today, either on the back of price or volumes. So first, let's see what's on the show today. Firstly, we'll be speaking with the management of EPAC Prefab. Now, in the last 1 month, the stock is up nearly 41%. Recently, they have announced an order win of close to 165 crore rupees. And what's the way forward is something that we'll try to discuss with the management on the show today. Apart from that, we'll be speaking about Nozzle stock. That stock is up 20% in trade. Volumes have spiked up very strongly, up around 250 times its 20-day average, while this is its highest intraday gains that we are seeing since July 2009. When it comes to Blue Cloud, they have announced an AI partnership with SpaceX International. However, we are not sure whether this is the Elon Musk-owned SpaceX or any other SpaceX company, but the stock is up nearly 20% in trade. Then there's a stock called Grand Oak Canyons. Now, if you look at the last 1 month, the share price of this counter is up around 112%. A year back, the company had changed its name to Grand Oak Canyons Distilleries, but its operations still do not suggest that they are in the alcohol industry. So what could be the potential reason behind this move is something that we'll try to decode with our fundamental guest on the show today. And lastly, when it comes to EMS, this counter has been gaining for the last 7th consecutive session. The stock is up nearly 35% in trade, and we are seeing strong momentum coming in on this counter. Any potential reason on this for this move is something that we'll try to decode on the show today. Now, if you look at the market, yet another day of strong gains, over 100 points up in trade. However, the 24,150, 160 level continues to act as a resistance, but 24,100 is acting as a strong support zone currently for the Nifty index. If you look at the sectoral indices, other than FMCG, all the other sectoral indices are trading in green. Nifty FMCG is down around 0.6% in trade, and a good day even for the Nifty small cap index. But Varsha, which are the key stocks here in the small cap space that have been buzzing?
Well, let me first talk about NIIT. Let's see what that stock is doing, because in the last 1 month, the stock is up almost 60% in trade. The stock is up today almost 11%. You have Black Rose also buzzing on the back of volumes. Volumes are trading at 9 times of its 30-day average. The stock is, surging as we talk, is up almost 14%. You also have Igarshi Motors. Again, volumes are quite strong for this counter at 8 times of its 30-day average, and the stock is buzzing. Again, 15% up in trade. You have GPT Infra. For this, if you see in the last 1 month, the stock is up almost 17%. Today, it's up almost 14%. You have Capacit Infra Projects also buzzing in trade. Beta Drugs, let's pull up that counter also. Capacit Projects Infra is up almost 10%. Beta Drugs, if you see in the last 1 month, the stock is up almost 60, 58, 59% in trade. Is also buzzing as of today. On the loser side though, let's talk about that also. You have Bazaar Style, which is sulking in trade, down about 5 to 6%. You have Reliance Infra, Som Distilleries, and Ravindra Energy, which are sulking in trade as we talk. Bazaar Style is down almost 5%. Even Reliance Infra is also down as we speak. You have Som Distilleries also is down almost 5% in trade. Ravindra Energy was down almost 3 to 4% in trade. But one stock which is in focus, and we'll talk about that, is of course Nozzle. Let's pull up that counter as well. The stock is gaining. This is after DGTR imposed anti-dumping duty. The stock is up 20% in trade. Now the anti-dumping duty has been imposed on sulfonamides, accelerates imports. Now this covers China, US and European Union. Duty is valid for a period of 5 years, and hence we are seeing that sharp move in the stock, because this is gonna positively impact NOSIL because so the product relevance, if I were to talk about, the sulfonamides are the key rubber chemical additives, and they are used in vulcanization process when it comes to rubber and tire manufacturing. And this duty will reduce import competition from global players, and it will improve the pricing power for domestic manufacturers like NOSIL. And of course, it's positive when it comes to volumes, margins and market share. And NOSIL, if you see, is seen as a strong non-Chinese or non-China supplier, global customers, diversifying their products away from China, and export opportunities been rising. That's what when NOSIL is concerned. Lastly, on the capex, when it comes to this counter, 250 crore capex has been planned at Dahej, which is in budget. Plant has entered trial production, and customer validation and product sampling is also ongoing. So overall, a big benefit to this counter, and hence we are seeing the stock is up 20% in trade. But with that, let's also invite our fundamental guest for small cap buzzers, which is Girish Sodani, Vice President of Choice India. Girish, just wanted to understand about NOSIL. Anti-dumping duty is the reason why the stock is gaining, but after this 20% move, what will you advise to investors? Should they, hold the stock, or should they book the profits?
So if we talk about NOSIL, obviously the vision is completely based not for the NOSIL as well as completely based on the chemical companies. The vision is at least for the 1 or 2 years down the line. The reason behind is what the immediate recoveries from the cheap imports from the comparatively from the anti-dumping duties. Apart from that, the EBITDA margin should be improvised by the 4 to 6% year-on-year basis. Along with that, I think the leverages takes the asset utilizations as well as the 70% capacity will be built up for the NOSIL. So the vision is completely based on that, how much time you are giving this particular counter for the looking out for the 2 to 3 years down the line. Obviously, this counters as well as the whole sector looking very, very attractive.
Girish, in the small cap space then, other than NOSIL, any other counter that looks interesting to you where the valuations are still attractive?
So come to the another counters. If we talk about the chemical industry, obviously this particular industry is looking out for the next 1.5 years. So PCBL, I think this particular counters look also very attractive in the carbon black industries. The expansion should be there as well as the both hand-in-hand the tire volumes growth as well as the numbers growth. What we are looking out for the next 15 to 20% is going to be expansion in the domestic market itself.
Right. Well, another counter that's quite interesting. Now, if you look at the market capitalization bracket of 500 to 5,000 crore rupees, this is one counter, Grand Oak Canyons, which has given the highest return in the month of June. The stock is up nearly 112%. There is no fundamental reason that I could find out which could lead to such kind of a rally in the share price of Grand Oak Canyons. But let's get in Parth for more details on what does the company do, what is their past, how the financial looks like, and if he has found any reason behind this move.
Absolutely, Somit. So you're right, this is a very unusual kind of a counter. If we talk about the company a little bit in the start, they were formerly known as Pacheli Industrial Finance, and they used to operate as an NBFC and investment company in the past. But in 2025, they were renamed to Grand Oak Canyons Distilleries, which signals an entry into that spirits and distillery space. Now, the reason why the stock is in focus, and as you have mentioned rightly as well, the stock has surged 112% in just this month so far. And it has been hitting the upper circuits for the last 6 days in a row. So a huge rally is what we are seeing in this counter at the moment. But there are some concerns that we need to address. Starting with their balance sheet, their reserves have jumped from 80 lakhs in FY 2024 to almost 330 crores in FY 26. But during the same periods, their borrowings have jumped from 1,000 crores to 2,650 crores. That's a huge jump. Yes, the reserves have jumped a little bit, but the borrowings jump has been even more. If we talk about their FY26 numbers also, their revenue in FY26 was just 25 lakhs and the profits were just 9 lakhs only. Now this is very small for a company with a market cap of 2,756 crores. Another thing to worry about is their shareholding pattern. Promoters which used to hold around 33% of the company back in 2017 now hold almost 0% equity in the business, and almost the entire 100%, 99.97% 97% in fact is held by the public shareholders. So these are the three main concerns that I found out about the company, and the key things to watch going forward will be any actual distillery project announcement which they do, and any actual revenue contribution that we can see in this from this news page which they have entered.
Great, Path. Girish, did you get the time to go through this counter Grand Oak Canyons? Obviously, I don't think you would have a coverage here, but at this point of, at such kind of moves, what should retail investors do?
So, as of now, what the front view, what we are looking out as a term of fundamentals, I don't think that this counter is completely eligible for the any fresh allocations or something. But if anyone hold this particular counter, my advice is to just exit from this counter. There are so many reasons behind this, the regulations as well as the scrutinies, what we are going out. Apart from that, the stabilities, I don't think so that this particular counter is stabilized to justify the 27 crore market cap. Up 0% of the promoter holdings. I think this is a red points what we are looking out for any single counters if we talk about for the longer period. So avoid this particular counter.
Understood. Well, moving on, Blue Cloud Soft Tech. Let's pull up that counter, please, and let's see what that stock is doing in trade, where it's up almost 20% in trade. And, you know, in last 1 month, the stock is up almost 16%. Down over 12% over the last 6 months, but the company has hit all-time high of around 127, which is down 86% since then. But they are actually exploring AI partnership also with SpaceX, if I'm not wrong. But let's call Jasmeet for more details on that, why the stock is up in trade.
Well, Varsha has rightly said the stock is buzzing on the back of the new information which we received. It's about the SpaceX international collaboration. Before we get into that, let's quickly understand what does the company do. Well, the company operates as a computer software and data processing service. It's a basic IT company altogether, which hard focus on cybersecurity. In terms of the shareholding movement, the stock is up 16% over the last 1 month, and majority of the gains are coming in from today, given the stock is up 20%. Well, over 6 months, the stock is on 12%, and over a year, the stock is down 26%. What's interesting to watch out is last year the stock hit the all-time high of rupees 120.7 and then crashed 86% since then, and currently trading at 21 odd rupees. While on the back of that heavy valuation fundamentals which we saw led to the overall crash of nearly 86%. Now, in terms of the recent news, why the stock is buzzing is on the back of their partnership which they're exploring with the SpaceX International. While the company is evaluating the AI opportunities that they can do with the SpaceX International, further they also say that this is just an information sharing zone as of now, but there's no binding deal yet signed. Well, the company also notes that the overall collaboration is planned towards assessing the feasibility of the future collaborations in the AI space. But there's something to watch out is that the overall SpaceX International we're not very sure on, unlikely that it belongs to Elon Musk, given that Elon Musk's company is called SpaceX and this is SpaceX International, but the clarity is yet expected from the management what exactly is a SpaceX International company. Now, in terms of the key financials, the FY26 revenue saw a healthy uptick of 26% and the overall company crossed the 1,000 crore benchmark in FY26. If we look at the net profit, even though saw a jump of 36%. In terms of the business segment, the company is heavily induced in cybersecurity, which nearly 46 to 47% of the revenue coming from cybersecurity. Then we have enterprise application, that's the system integrators, around 24%. Then the healthcare contributes 49%, while the overall balance comes from the IT consulting service. If we look at the management, they state that roughly 70% of the revenue is recurring in nature, while project-based is 26 to 30%, which is a key concern of the IT companies, where a lot of revenue might move towards project-based concerns. Now, in terms of the management guidance and outlook, management remains very constructive for FY27, where they guide an aspiration to reach 3,000 odd crores by the management. Further, they also note after FY27, they expect to grow at roughly 30% year-on-year basis. So that's like an uptick of 900 odd crores in the coming year as well. Now, if you look at the overall capex that management has planned for FY27 is basically into telecom and data center, and they're planning roughly 150 to 200 odd crores in this particular aspect. And the company also states that they will be going live with the first data center by Q1 of FY27, while the overall commentary remains constructive, while the fundamental also remains strong as of now. But it's a wait and watch of how does the overall relationship between the SpaceX International and management plans are going ahead, and how does the Q1 goes for the company going ahead.
All right. Well, thank you so much, Jasmeet, for all the details. But viewers, just for the benefit of viewers, I would say the AI opportunities, or the company evaluating AI opportunities with SpaceX International. We don't know whether this is the same, SpaceX which is being owned by Elon Musk. So do keep a watch on this. But Girish, coming to you on this, what's your view when it comes to this counter? Blue Cloud it's up almost 20% in trade.
So, if we talk about just put it out to the news of SpaceX Catalyst, I think this is the reason behind it that the blue clouds are giving almost a 20% hike. But come to the company's fundamentals now, the companies are completely work into the restructuring the order books and everything. But the revenue operations are still very, very good, and the EBITDA margin along with that. The order books are still there. The 1100 crores of compliance long-term contracts would be the strongly built up for the very small cap type of companies. I think if you are looking out this particular counter, then the view is completely based on the 3 to 4 years down the line. The reason behind is don't focus on the specialist catalyst itself. Just focus on that how the companies are going into the fundamental terms. The companies are still into the strong hands. The risk and reward ratios was favorable for the longer period of history.
Girish, when it comes to the AI opportunity, any other small cap IT names that stands out for you?
So for the small cap, I think the Infobeams is a strongly built up right now. As we talk about the Infobeams, the growth numbers are still there. If we talk about for the next, like looking out for the last 2 to 3 years down. Apart from that, if you are looking out for the 3 years, next 3 years, the Infobeams looking very attractive in the current valuation itself.
Another counter that remains in focus is EMS. Now that stock is up for the 7th consecutive session, and in the last 7 consecutive sessions, the stock is up nearly 35% in trade. Today it's gaining around 15%. What could be the potential reason behind this move? Let's get in Shivam to understand more.
The stock is trading at a 5-month high, and the volumes has also surged up by 7 times the average volumes. Now, the stock is seeing a strong momentum, and this strong momentum could be due to the recent order wins that the company has received. The company has received around 3 order wins since April, and the total order value for these orders has crossed over 300 crores. Now, this also provides a strong revenue visibility for the upcoming period. On the other side, if you look at the Q4 results of the company, that was weak due to the execution issues that has been faced. The revenue of the company has declined by 55%. And if we take a look at the inventories, the 100 crore increase in inventory was partially completed. If this inventory was billable in Q4, the Q4 standalone revenue could have been around 184 crores rather than just 84 crores. The other factor is the West Bengal elections, which has halted the sewer laying execution. The management was expecting around 70 to 80 crores of quarterly run rate, but in Q4, it executed only 20 crores, which implies a 50 to 60 crores of quarterly shortfall. Also, there has been some supply disruption in bitumen that was due to the Middle East war, and that has prevented billing on road execution also. If we talk about the guidance, the revenue of the company for FY27 has been targeted at 1,000 crores. Recovery is expected gradually. That means in Q1 also of FY27, we can see a slight weakness, and also the company is targeting 1,500 crores plus of new orders in FY27. In terms of PAT margin and EBITDA margin, company is targeting 15% to 25%, and full normalization of the operations may take up to 2 to 3 quarters. In terms of valuation, the company is reasonably placed among its peers, and in terms of stock performance, the company has given over 20% returns on monthly and weekly basis.
Right. Girish, any view on this counter EMS?
So for the EMS, if anyone hold this particular counter, my suggestion is to just hold it for the next 6 months or 1 year. But fresh allocation is not advisable. So looking out at least for the 2 quarters numbers, how the management is going to be allocated for the 1837 crores order books toward the top lines. So let me just check it out for the next 2 to 3 quarters post, and then I think the fresh allocation is been advisable.
Understood. Well, moving on, Som Distillery slips in trade after Excise Department rejects license application for its Bhopal unit. Earlier today, we spoke with the management to get details on this development. Let's listen into the slides of that conversation.
They gave notice, gave notice in 2023, and we gave the reply. So in 2026, they were not doing anything. In 26, they were again gave a show cause notice, and next day they have suspended the license for the clarification. We have submitted the reply, but they have rejected the reply. So we have gone to the legal, we have taken the legal remedy. The case is listed for tomorrow. this Bhopal plant has been the major plant because wherever we do not have the manufacturing facility, this plant used to fight like Delhi and most of the states like army supplies and all that. Most of the states were being supplied from here. But all those supplies from Delhi, we have shifted to our UP plant. So we will be having a double source now. So there would not be anything. So since the major sales is in the April, May, June. So the major sales have been affected in these 3 months. So in these 3 months, about 35% sales takes place. And as soon the license is restored, we will be able to recover about 10% of that. So it's still that 20-25% we will lose our top line this year.
Girish, now Excise Department has rejected license application for their Bhopal unit. Now, one thing, what's your view on this? I mean, how much impact you are expecting? And the other thing is, overall, how do you view this company?
Obviously, there's a negative view. If we talk about the downside of the top lines could be somewhere around 15 to 20%. That is the biggest done for any of the distilleries counter itself. So completely avoid this particular counters for the fresh allocations. Now come to the fundamental terms. Obviously, what the companies belonging is a little bit in the progressive manner, and this particular counters come into the news on news basis. So not for the fresh allocations is completely advisable. New, let's check it out for the next 2 to 3 quarters worst, as well as I'm looking out something to just avoid this particular counter as well as the distilleries one and shift it to the infra as well as the power type of companies. That will be more beneficial.
Well, the last counter that we'll be discussing today is EPAC Durables. The stock is up 14%, but this is largely on the back of news that has come in from Voltas, which says that they have made sales of around 1 million unit so far in the month of June. And EPAC may be a supplier to Voltas, and that is the reason why that stock is also up. But the stock has not performed well in the last 1 year. This down nearly 22%. Let's get in Puneet to get in more perspective about this stock.
Well, thank you for that. As you rightly mentioned, the Voltas has put out an exchange filing, crossed 1 million sales in 81 days of quarter 1 of FY27 compared to 88 days. So the heat wave has led to higher sales for the company in this quarter and faster compared to Q1 of FY25 as well. When you look at EPAC Durable, Voltas is one of its key customers. 20 to 30% of the volumes for EPAC Durable come from Voltas directly. So it's a direct beneficiary of growth in Voltas air conditioner unit. But, as you rightly mentioned, quarter 4 was very weak for the company. PLI income of 32 crores, which was recognized in 9 months of FY26, was completely reversed in the last quarter, and hence you saw on a full year basis also profitability being very low for the company compared to FY25. Now they have mentioned that inventory levels, which rose up to 836 crores at the end of quarter 4, has started to normalize in the month of April and May, and that will be one other thing to watch in this quarterly results. But management expecting a growth of almost 15 to 20% in quarter 1 of FY27, and hence could be a turning around quarter, but you have to watch out for the full year performance as well. Last year has been disappointing, as you mentioned.
Right. Girish, any view on EPAC Durable? Should one be too excited and go ahead and buy this counter post this 14% move, given the strong commentary that has come in from Voltas?
So obviously the commentary was very excellent once, because we talk about for the last 2 quarters itself, the margin little bit pressure into it because of the multiple reasons, the ECs as well as the completely based on student. But for the longer period, obviously the leverages and the margins could be strongly. The management is still working and the high perspective of around 30% score margins. So against, if you're having a vision of around 1.5 year or 2 years, the counters looks very attractive.
Right. Well, thank you, Girish. Thank you for joining us and giving us your perspectives on the stocks that were discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me is Mahima Vachajani, and over the next half an hour or so, we will try to solve those stock-related queries. So do start sending them on the number that is flashing on the top of your screen. You can also call us on the landline number for your stock-related queries, as well as speaking to our guests directly as well. But it's been a good day for the markets. We've seen a 100-point uptick at the start of the trading session, and that has largely sustained through the day. So you're seeing again a 24,100 on the Nifty 50. In terms of the individual names that are doing well today, you're seeing some good gains coming across in the broader markets too. But for the Nifty 50, stocks like Cipla up almost 4.6%. Citi had a tactical buy today, and probably that's one of the reasons why the stock's doing well. Dr. Reddy's, Infosys, Reliance, and Tech Mahindra are the other gainers for today. Asian Paints is actually down 2% and the biggest loser for the Nifty 50. So is Nestle and Titan. So FMCG pack largely under pressure today. The advanced decline ratio though is a story in itself, because you're seeing a larger move in the smaller names essentially. So the small cap index also continues to do well. While there has been some deceleration in terms of advances, was up almost 2,200 at one point of time. The broader breadth is very strong. So look at the advanced decline ratio as mentioned. Look at the mid cap and the small cap index too. The mid cap index was up 0.3% in the morning, and that continues to be so. Small cap has actually built on to its gains, up almost 0.8%. In terms of the large cap, large movers today, for the BSE 500 also, you're seeing stocks like NoSil continue to do well, up almost 20% now. You've also seen Kirloskar Pneumatic up 20%, Restaurant Brands Asia up 8%. IDBI has climbed through the day now, so it's almost up 7.5%. And Sheela Foam, after a good quarter four, has now yet again starting to see some moves on the upside. On the losing side though, Craftsman Automation is one that is slightly under pressure. Raised QIP worth of almost 2,000 odd crores at over 8,500 rupees per share. So maybe some money being taken off the table, but that's largely a good bread for the markets today. Let's welcome in our guest now. Vishnukant Upadhyay, AVP Research at Master Capital Services on the technical side. G. Chokalingam, founder and MD of Economics Research on the fundamental side of things. Gentlemen, both of you, thanks so much for joining in. Starting the first stock-related query now, and this one's coming in from Padma Reddy, who's writing us from Zimbabwe actually. She holds shares of VA Tech Wabag, bought at 1,380 rupees per share. So currently sitting in good profits. Asking if she should continue to hold her 200 odd shares right now. Mr. Chokalingam, valuations definitely are something to watch, but she's sitting in decent gains. Would you ask her to maybe book some profits, continue to hold the rest of the shares? Very good afternoon to you.
Yeah, good afternoon. My research view is that it's a sell on rise, because it's trading at around 34 PE, almost stock doubled in the last 1 year. So, and also if you look at the last 10-15 years of history, both the financial performance, stock price are extremely volatile. So considering all these facts, I would maintain a sell on further rise.
Okay, all right. The next one that we have is on Precall Limited. Our viewer Murthy from Vizag wants to know if this is a good time to invest into this one from the next 2 to 3 years point of view. Mr. Chokalingam, I'll stick with you again for this one. Your view?
Yeah, next 2 to 3 years one can hold, and if it declines, one can buy. In the short term, one may not be able to make money because it's already trading at around 28 PE. But definitely coming from Coimbatore, from very good management, excellent track record. In 2 to 3 years, one can make a decent return. But in short term, it may not be possible to make any significant return.
Also climbed to its highest range that it's trading today. So as a very timely question there again by a viewer. But the next question coming in now on ITC Hotels. Now Gaurav from Bengaluru actually has been holding on to this counter at 170 odd. So stocks up 4.5% today, but largely been an underperformer over the last few months that is listed. Now Vishnu, I know it's a very recent listing, so not too much historical evidence, but any view that you can offer Gaurav at this point of time?
Hi, very good afternoon. So definitely not, it's a ITC hotel, but entire tourism space is doing immensely well.
So I believe this, winning journey is likely to remain intact with a potential gain towards 200 and then 220 kind of level. So yes, it's a good buy. One can, go long at a current market rate with keeping its stop loss below 160.
The next one that we have is on Afcons Infra. Our viewer Satyan from Palakkad has been holding this since the IPO price. He says he can hold this from a long-term perspective of next 2 to 3 odd years. Mr. Oaklingam, any view on this one? Should he continue to hold?
Can hold in the short term. There is a possibility of another 5-10% return. So hold for short term. My recommendation.
Hold for short term. But some breaking news coming on the bottom of your screen. You had and we were showing those visuals on our RHS as well. UK Prime Minister Keir Starmer has resigned. You saw that that post coming in on Truth Social by President Donald Trump that and gave some indication to that, but the pressure continues on the current government, and you're seeing that impact currently on UK, on Keir Starmer, who's resigned. It's been a difficult time for the economy, a difficult time for what you've seen on the ECB as well. Inflation has been rising. You've also seen growth faltering, and that has led. And he's giving a speech. We'll of course get those flashes going as well. But definitely a big update that's coming in at this point of time. But we'll of course look at and get some more perspective also of what has been said at this point of time. But definitely breaking news coming in as well, because you also have to see the impact of what happens, because the India-UK FTA was expected to be signed by middle of July, by July 15. A lot of work has gone into that. But the new leader will be in place by September, is what Keir Starmer has put out. But definitely a big breaking also coming in at right now. And we'll continue to get you some more perspective from our reporters as well, but a big update coming in. But continue taking your stock related queries now. This one, it's coming, and the next one that's coming in now, it's on SCI. Our viewer Raja from Chennai is holding shares at around 215 odd rupees, asking if it's a good time to book profits on this one. Vishnu, would you recommend that?
Well, definitely one can book a partial profit, but still there is a more potential to extend the gain. I believe one can, book a partial and maintain a stop loss below 284. On the higher side, I'm expecting prices to extend towards 360, 370 kind of levels in days to come.
All right, okay. So that's the view coming on Shipping Corporation of India. The next one that we have is on AU Small Finance Bank. Vijay from Chennai wants to know the short-term targets that you're seeing on the charts on this one. Vishnukant?
Yes, definitely. On the higher side, I'm expecting prices basically currently drifting up very close to, it's a very stiff horizontal resistance where multiple times we have seen prices taking, taking resistance and facing resistance. But, the way prices are behaving from the lower levels, I believe this resistance will be taken out. And on the higher side, prices are all set to extend the gain towards 1120, 1130. So one can go long and one can stay long on the count.
Got that view, but let's go across and take our first caller for today, and this is dialing in from Bengaluru. Venkatan has a stock query for us. Venkatan, very good afternoon to you. Welcome to the show. What's your query?
Very good afternoon, Puneet. And this is a query, I would like to address it to Mr. Chokalingam. I would like to have his opinion. I want to enter into good pharma stocks, which I'm not holding. I don't hold anything at present. Can you suggest two good pharma stocks which I can hold it for next 2-3 years?
Next 2 to 3 years, got it. Well, Mr. Chokalingam, you heard the query. Venkatan doesn't have any exposure right now in the pharma space, wants to do so. Two picks that's on your radar?
Yeah, for conservative investor, I have been recommending, stock like IPCA and Cipla. For risk-taking investors, we recommend FDC and Indoco Remedies. These two are small cap. I believe in 2 to 3 years, they can give a very attractive return. Personally, also, we have invested in FDC and Indoco Remedies.
Okay, all right. So that's the view coming in on the pharma names. I think we've got Mohan waiting by, calling us from Mysore. Mohan, a very good afternoon to you. Go ahead, ask your question.
Good afternoon. I just bought 10 shares of Kirloskar Oil Engines at the rate of 1,560. Can I have these shares for furthermore?
What is the time period that you're looking at, Mohan?
Somewhere 1 year.
Okay, all right. I'll take this up with Mr. Oaklinga. Mr. Oaklinga, of course, today it's locked in upper circuit on the back of, getting the 192 megawatt hyperscale data center project, which is from Hypernext, and we've seen that stock locked in upper circuit throughout the day. But considering this development, would you recommend to maybe add more for Mohan?
Considering this development, I would sell from tomorrow because it is trading at already 58 PE. So tomorrow, by any chance it opens and higher, the PE will be more than 60. It's a very attractive valuation to sell.
But Mr. Chokalingam, we've seen all these data center plays also in the power equipment space that you've seen. The gains continue to be built in because market's looking for all those names. You don't feel it's a good to continue holding if you are Mohan right now?
There is a reputational risk for me. I have to accept it. But I also say that from 93 onwards, I am seeing thematic bull run in the small. I know people how they destroy their wealth by missing them. So it's better to be conservative, be content with the profits one makes.
Well,
so I agree. I may go wrong. It may run another 20%. That's why carefully I said from tomorrow, if it again opens higher, one can consider.
Got it. Well, Mohan, hopefully that answers your question. He's bought at 1560. Stocks trading close to 2400 now. So, Mohan, that's the advice coming from Mr. Chokalingam. But the next one coming in from Vijay from Chennai, he wants a view on AU Small Finance Bank in the short term. Vishnu, how do the charts look? Because you've seen, this consolidation at that 1,000 odd rupee level for this stock. Is there any uptick that you see on the charts now?
Definitely. Just a couple of minutes back, I have answered this query. I think the stock is currently drifting a very close to its very good resistance area. But the way prices are behaving and recouping from the lower levels, I'm quite sure that the resistance area of 1060 will be taken out in a very short term. And on the higher side, I believe 1140, 1160 kind of levels will be on card.
Okay, all right. The next one that we have is from Satyan, who is writing us and again asking us about two stocks, but I'm just going to take one, Satyan. Lemon Tree is the one that I'm choosing for today. From a long-term perspective, is this a good buy, Mr. Chokalingam?
One can hold. Yeah, it has corrected a lot. One can hold. It has been a growth stock. For short to medium term, I would say even buy. But for long term, medium to long term, my preference is for EIH Limited. I believe that is a great stock for medium to long term.
Got that view, Mr. Chokalingam. But let's go across to Vizag now and go across, take the caller. Mohammed is dialing for a stock query. Mohammed, very good afternoon to you. What's your query?
Good afternoon, sir. I have an amount of 2 lakhs. I want to invest in Vedanta Oil and Gas.
Okay.
Is it safe for long term?
And do you have any other counter of the demerged entity in your portfolio right now, or is this the first pick?
I have already account in my demat account.
No, do you have any other Vedantas? Have you bought Vedanta earlier? And if you have any other delisted entity, or is this the first pick, Mohammed?
Vedanta, already I have Vedanta, but I want to invest in Vedanta Oil and Gas.
Oil and Gas, got it. Mr. Chokalingam, we've seen, of course, valuations for the aluminum business, be demanding in that sense. Does oil and gas, Vedanta Oil, essentially on your favor right now?
Certainly not. I think the original name was Kane India, then merged, demerged. That is not an issue. The issue is that crude oil prices are down 33% in the last couple of months, ever since the ceasefire talk began. And I have a view that oil price will fall further badly, which will favor India, but unlikely to favor the oil producers like Vedanta Oil. So I would not buy Vedanta Oil at this juncture.
We've got, I think, Mohammed, we've already taken his caller, but okay, the next one that we have is on travel food services. Our viewer, who's not given his name, is asking about travel food services, bought 25 shares at the levels of 1050. I think my producer is saying that his name is Jitain. Okay, Jitain is asking this question and he wants to know if he can continue to hold this one or not. Vishnukant, any view on the charts for TFS?
Yes, definitely. One can go long or one can hold the existing position. Recently we have seen prices, have given a breakout from the inverse head and shoulder kind of pattern, and currently it is, decisively sustaining above that breakout point. Recently, we have seen good amount of volumes has been injected in the prices. So I am quite confident that the prices are likely to extend the gain and extend its northward journey towards a 1550 sort of level. So yes, it's a good buy. One can go long with keeping his stop loss below 1300.
Got the view, Vishnukant. But viewers as well as Mr. Chokalingam, Vishnukant, it's now time for the rapid fire round in this edition of the show. You both know the drill. Keep your answers as short as possible. The first one on Star Health. Biswajit from Kolkata is holding shares at 509. Mr. Chokalingam has been a disappointment since listing. Should he continue to hold or switch out now that it's at 579?
Still on even small rise.
The next one is on Kirloskar Bros. Dr. Lavanya from Eluru is holding 430 shares that she's bought it at the level of 2170. Vishnukant, your view on the charts, hold or sell?
Yes, definitely one can hold for the target of 2500.
A viewer bought shares of Gabriel India at 1098. Mr. Chokalingam, another auto anch that has done well for investors. Should she continue to hold?
Sell on rise.
Okay, NMDC 500 shares bought at the levels of 95. Continue to hold, exit. What should be the view, Vishnukant?
Continue to hold with the stop loss below 86.
Ramesh from Bengaluru is holding on to Trent. He's bought shares at 1784, so sitting on substantial gains. Mr. Chokalingam, is it a good time to book out?
Definitely yes, sell.
Imami, can I buy this from a long-term perspective? Joshi from Thiruvananthapuram is asking this question, Mr. Chokalingam.
Yeah, it seems to be an attractive valuation at this juncture to buy.
Got the next one's coming from Mahesh from Andhra Pradesh. He's holding on to Kala Mandir at 165. Should he still continue to hold, Mr. Chokalingam?
I haven't tracked this.
Anything on the charts, Vishnu?
In fact, the prices are still trading towards a 200-day exponential moving average, so one can avoid the count.
Okay, the next one is on PG Electroplast. Our viewers purchased 500 shares at the levels of 450 rupees. Wants to know if as to what should be the target for the end of 2026. Vishnukant?
Yeah, so I believe immediate hurdle lies around 630, which is broken decisively. 680, 690 will be on card.
Subramaniam is holding on to New India Assurance at 385. 385. Mr. Chokalingam is asking if we should use this rise to exit this counter.
Certainly, yes. Competition has intensified. Good to sell on rise.
Anant Raj, is this a good buy right now? Aarti from Bengaluru wants to know. Vishukant?
Yes, for a short term, one can go long, but the potential is very limited till 596.
On Translator also, Vishnukant, a viewer Rahul Patel from Ahmedabad is holding shares at 614. Stocks trading just a tad above 500 now. Would you recommend him to continue holding at this point of time?
Sorry, I do not have any view on this.
Okay, any view on Translate writing, Mr. Chokalingam?
Yeah, it's a good stock, quite attractive post correction to hold.
Okay, Natco Pharma is the other one. Our viewer Sai wants to know if he can continue to hold this one. He's bought at the levels of 800 and 125 shares is what he's holding. Mr. Chokalingam?
Hold.
Aegis Logistics is the other counter that Kumud Sethi from Dehradun wants to know. Mr. Chokalingam, stocks up almost 40%, 50% in the last 1 month. Should he still look at buying this counter now or wait for any decline?
Extraordinary risk-taking investors can buy at this price.
Kane's Tech, is this a good time to buy, Vishnukant, on the charts?
Yes, definitely one can go long.
Venkat from Hyderabad bought into Signed at 1620. Mr. Chokalingam, what should he do with this counter now?
We are very, very optimistic on the stock. I believe.
Would you recommend him to buy this dip? He's down 50%.
Yes, it's a good to buy at this price. That's our view.
Indian Hotels, 1 year view, and what's the target price, Vishnukant?
Okay, Indian Hotels. Well, definitely, I believe on the higher side, prices has potential to reach towards 780 sort of level. So one can go long for the target of 780, 800 sort of.
All right, okay. That brings us to the end of this rapid fire round. Vishnukant and Mr. Chokalingam, thank you so much for taking the time and helping us answer all those stock-related questions. Viewers, completely out of time on this edition of Ask Profit, but do stay tuned because India Market Close is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome. You're watching India Market Close, and it's turning out to be a pretty decent afternoon. We've held up for most of the day, Alex, off the highs, but above the 24,100 mark pretty well, and the advanced decline ratio seems robust.
It does, in fact, and that's exactly the point. The broader market's holding out as well. We've had 6 days of gains for the broader markets, and we're heading towards the 7th day of gains. So it's looking pretty good, about 0.4%, and not too far away from the high point of the day, which hit. And the small cap index, as has been the case, Tamanna, for the last 5 or 6 sessions, it's been strength throughout.
Yeah, completely. Let's pull up the Nifty heat map if we can, and just take a look at what's been working through the day. I mean, Cipla has been the star of the show, isn't it? After that Citi note coming in and enumerating a number of reasons why Cipla is looking like a strong take. Reliance Industries is up about 2%, and that strength really pulling up the index. And if you pull up the contribution charts, you'll see that Asian Paints, Titan, Nestle, a bit of a muted kind of a move on the consumption basket, or some of those stocks, even a Trent ITC not doing too well. But relatively, it's pharma, tech, and of course, a heavyweight like Reliance, which is holding up. Pull up the contributors,
as
please.
well as HDFC Bank. You'll see that
HDFC Bank as well. You're absolutely right.
And ICICI Bank about 0.5% or so. So the private banks are looking good. HDFC Bank in particular with gains of about 1%. It's these two heavyweights, Tamanna, that have not come to the forefront in the last several sessions. And if both of these are firing, then you can bet your bottom dollar that the Nifty 50 is going to be okay.
But you know what the good part about today's trade is? It's not just the Nifty. Pull up the advanced decline ratio, and you'll see that line graph through the day. It's been fairly strong. Sure. It's continued to be strong. I don't know if you'll see a last hour pop. You might, but otherwise it's been robust. Pull up the sectoral heat map and you'll see IT right up there. IT is having a good day today. Nifty Media doing well, Nifty IT, pharmaceutical stocks in focus, oil and gas, because after the first round of talks that took place in Switzerland between US and Iran, Brent is calm. It's, all of that fear that both sides have walked off, etc., that's not happening. It's FMCG, consumer durables and consumption, which is not really joining the party. But really, on a day like today, it's okay if they're left out.
It is, absolutely, and I think it's important to note some of these notes that have come through in oil marketing companies. For example, I think JP Morgan wrote about them. They weighed in. As long as you have crude oil that holds out at this level, you'll have more people believe that maybe the worst is over on the input cost side, right? And then the outlook is how quickly will that price be passed on, because then you start having conversations about volumes again and various other aspects heading into the second quarter.
True, all of the rate hikes, which fuel hikes at the pump, have not been rolled back yet. So that's at least some buffer for oil and gas companies. Well, what else is happening? The Nifty has been range bound for the last 3 hours of trade. 24,150 to 24,160 acts as the resistance level. 24,100 acts as a strong support. So bullish sentiments in broader market are also being seen. Short covering seen in IT. Select consumption names are seeing a sell-off. So for the Nifty especially, sustaining above 24,150 can drive the index towards 24,400 or even 24,500. For the Bank Nifty, immediate supports at 57,720, 57,520, immediate resistance at 57,900 and 58,000. A break above 58,100 to 58,200 can trigger a rally towards 58,600 to 59,000. But let's go across to Avinash Gorakshakar joining us this afternoon. He's founder and head research Avinash Mentor Services, and Himen Kapari of DR Choksi FinServ also joining in. Welcome to both of you. Himen, I'm going to start with you first about where are you seeing the Nifty going if we hold above 24,100 like we seem to be right now?
A very good afternoon, Tamanna. Thank you for having me on the show. It's always a pleasure. Like you mentioned, I think if we sustain about 24,150, 24,344 is within striking distance. And dare I say above that, 24,482. One needs to be slightly, I won't say cautious, but reticent that we're sitting on top of 1,100 points. So everything is hunky-dory. The VIX has come to below 13, which is great for bulls. Everything seems fine. Laws of gravity need to catch up sometime. A couple of bullish gaps, which will not remain open for too long. But as of now, the level that I mentioned and for some more upside is definitely on the path.
Okay. What about the Nifty Bank? Because if I look at the last few sessions, there's been a relative underperformance. Not too much, but for example, last week, if the Nifty 50 gained about 1.65%, Heyman, the Nifty Bank gaining about 1.5%. So what are the levels that you're looking at for the Nifty Bank?
Alex, last few weeks, 4 to 5 weeks, it's moved up by 5,000 points. That's pretty much. In terms of levels, 57,364 now needs to hold the support. As long as we're above that, everything is hunky-dory. We close above 58, we give another 700 points on the upside to 58,712. Like you mentioned, the small hiatus that the Nifty Bank is undergoing, it's consolidating, moving sideways. But if you look at the relative strength, Alex, a few bullish gaps, normally I would tell you that yes, they need to get covered up. But the stock has consolidated by posting a higher top, higher bottom in the small range. So relative strength above 58, we see more upside coming in, Alex.
Stocks that you're liking, Heyman, based on the charts?
Okay. Frankly speaking, it's like microwave popcorn. There are a few stocks popping every half an hour or so. But stocks which are looking good. Firstly, I have a buy call on Supreme Industries. Alex, looking good. Oversold, downside limited, has formed the base. Oscillators turning positive. I believe it should close over the 55-day exponential moving average, if not today, tomorrow. So buy at Supreme at 35.60, stop loss 35.10, target of 36.60. I believe we should be heading even higher towards 3800. Second stock is Astral Limited. Logic is almost the same, but the difference is this has closed up at the 55-day EMA and the 55-week EMA. So higher tops, higher bottom. Once again, oscillators looking good, positive divergence. Everything seems it's ticking all technical boxes, Alex, for a move. So one can buy Astral at 1560, stop loss 1520, target of 1640, Alex.
Microwave popcorn, huh, Heyman? You're making me hungry, and I've eaten my lunch already. Avinash, are you in the mood for some microwave popcorn? Every so often you have a few stocks popping. What are you looking for in the market as things stand right now?
No, I think Alex, as Heyman has said, I think the markets have now turned cheerful. I think at least the geopolitical situation has improved. So, things have actually improved. So definitely you're going to see a lot of activity in both the large caps as well as in the mid cap category. In fact, the broader market, offers a bigger opportunity. And specifically, we are positive on the hospital as well as the hospitality space and the auto component space, because we feel that these are stocks where definitely you could see a good traction. I think within the large cap auto space, we still believe that stocks like Ashok Leyland, Mahindra and Mahindra look pretty decent and attractive to even enter at these levels. And in the hospitality space, I think Chalet Hotels, Lemon Tree, these are smaller companies but which are growing very rapidly. So I think, wherever the theme is more of domestic theme, I think the markets are definitely looking at them positively. And with crude prices down across sectors, you're going to see raw material prices correcting at least from the quarter 2 onwards. Quarter 1 may not be all that good, but quarter 2 is something which most of the analysts and market people would definitely hear out from the commentaries from the management once the Q1 numbers are out. So I think, the mood is pretty good. I think SIP flows are also coming pretty strongly. And I think going forward, hopefully, once the geopolitical situation is finally corrected, you could see even the FIs looking at India again in a positive stance, because valuations have corrected sharply. So they cannot ignore India for a very long time. So money will come, but I think you need to have the patience to hang on for a long period.
Okay, just talking a bit about what's happening in European markets and the announcement there of Keir Starmer now stepping down as Prime Minister. This was widely expected and has happened now. So you're seeing no major movement in European markets across the board now. But, Alex, this would be the fourth British Prime Minister in 5 years for the UK. So tumultuous politics, and that announcement coming in a short while ago.
Yeah, and it's also, I think, reflected in the bond yields that you're seeing in the UK, because that it prices in that kind of risk. So if they're at a 30-year high, or the highest in this century, at least, on the long bonds, then that just tells you something about the state of that economy and the questions that investors are asking.
Yeah, I mean, it's also reflective of what is
geopolitics and all of that.
Not so much geopolitics, but UK
not in
politics.
the UK. I'm saying the war in Iran has a bearing on import, has a bearing on various other things. So it is reflected in the bond yields as well.
Oh, you're talking about the bond yields.
Yeah. But that uncertainty of politics in the UK is also a factor that plays in.
For the bond deals.
100%.
I'm speaking about what's happening in the UK and for their economy as well, and how much sometimes we don't account for political stability as a factor of how a country performs. All right, let's talk a bit about India, and the stock of the day is Kirloskar Oil. It's hit an upper circuit after a strong data center order from Hypernext. This win marks its entry into a high-growth segment and signals rising competition for some others, including Cummins. Parth joining in for more on the stock of the day. Parth, first of all, tell us about this deal with Hypernext.
Sure. So first of all, it's a really big day for the investors of Kirloskar Oil Industries. The stock has gained 20% today. Since morning, it has been logged in the upper circuit. And this is not a one-day thing. In fact, in the last 1 month, the stock has gained 40%. In the last 3 months, the stock has gained 75%. So a huge momentum is what we have seen in this counter in the recent times as well. Now, moving on to the reason why it has hit an upper circuit today is because they have won a 192 megawatt hyperscale data center genset order from Hypernext. Now, genset is basically a smaller term for generator sets. They provide critical power backup ability for data centers, and this order includes the supply of 96 units with 2500 kilovolt ampere systems. Now, this is a positive for Kirloskar Oil Industries because it marks their entry into the hyperscale data center segment. Before this, only Cummins was the leader in this segment. India's data center capacity is expected to rise very sharply with additions of up to 6 gigawatts by FY30. Axis states that this opportunity alone is worth 15,000 crores, and Kirloskar Oil was planning beforehand for this opportunity as well. They have already set up a capex of 1,400 crores to disrupt this industry. Now, if we talk about valuations, then Kirloskar is currently trading at a premium. Their 5-year average PE stands at 40.7 times versus the current of almost 60 times. On a 1-year forward basis, the stock trades at 49.2 times its PE ratio. If we talk about the brokerage view as well, JM Financial has said that the valuation discount versus Cummins should narrow on right now because majorly investors were focusing on Cummins to play this kind of themes, but with the entry of Kirloskar, that gap should narrow between the two companies. Also, the reduced technology gap will trigger a re-rating for Kirloskar, and that's what we have seen in today's move as well. Now, moving on to the other side of the coin, why this is a loss for Cummins? Well, Cummins held an 80% market share in this segment before the entry of Kirloskar Oil Industries. That's almost a kind of monopoly in the business, which now Kirloskar is entering into. And this shows that customers are considering alternatives. They are not purely dependent on Cummins. They are looking for other players as well. Now, Kirloskar offers the gensets up to 3,000 kilowatt ampere capacity, and this also was majorly in the park of Cummins, but now Kirloskar is another player as well. And as I said, that this is reducing the gap between the two companies, and that's what is triggering the re-rating for the stock.
Got it. All right. Thanks so much for that. That's the stock of the day, by the way. Kirloskar Oil at the upper circuit right now. Avinash, you heard the entire conversation, or rather the presentation that my colleague Parth has shared. And he's speaking about Cummins in the entire data center space as well. What do you make of this, and what's your view on this pair of stocks?
I think, Alex, Kirloskar Oil moving up, significantly is largely because of the data center theme. I think this is the first kind of order. Many more orders are expected, and the management commentary post the Q4 numbers was very strong. In fact, numbers have been very strong. They're sitting on a lot of orders, so all that would get completely, commissioned in the current financial year. So our sense is that, anybody who wants to take a kind of investment call here should wait for some time. I think it's better that, even if one buys here, it should be bought in a staggered manner because the stock today is up by almost 20% So, the good news has got reflected in the price. But I think to get a better alpha, I think one needs to, wait for a mild correction and then enter the stock. Definitely, the story seems very strong. Data center is a very big theme, and the company will benefit. But it's better that the investor looks at buying the stock at slightly lower levels. That would give him a better margin of safety.
Heyman, what's the possibility of those lower levels coming up imminently, and what levels specifically on the charts would you look for? At this moment, there are no sellers in the stock.
Alex, 6 years. It's moved from 76 to current levels. Frankly speaking, the laws of gravity or technicals don't apply to something like this. We're at all-time highs. We don't have any known resistance levels. So it's a clear blue sky, so to speak. But I think I totally agree with what Avinash says. If it's gone up 20% today and it's gone from 1800 to 2400 in the last 6 trading sessions, I'd stop, wait a bit, take a breather, wait for it to come off a bit, because I'm not sure if you were going to take this from a trading point of view, the stop loss would be too deep to have a favorable risk reward ratio, and it's just been simply crazy. It's been, off the chart. So I'd say wait a bit, but I don't see any negativity overbought situation yet. But yes, this huge gap that we've seen today, Alex, out of 10 times, 8 times, indices and stocks tend to cover it up. So I'd wait a bit.
The laws of gravity that you're talking about is quite something. From 76 rupees to 2,389 rupees in a gap of 6 years. Everything in that pack is up, right? Kirloskar Brothers, Kirloskar Ferrers, all group companies actually all zooming today in trade as well. So nothing like Kirloskar Oil itself. But let's go across now to Somit Sarkar, joining in with all the chatter from the dealing room this afternoon. Somit, what's on your radar?
A host of stocks that remain in focus. Firstly, it's the couple of food delivery and quick commerce company, Zomato and Swiggy. There are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter at lower levels in trade, and delivery volumes are expected to be on the higher side for both the names. For Sansera Engineering, there are buy flows on the large HNI desks. Dealers are expecting strong commentary to come in from the upcoming plant visit of Sansera Engineering. When it comes to AB Capital, there are buy flows on DI desk. Delivery volumes are expected to be on the higher side. For Craftsman Auto and Lenskart, there are sell flows on the PMS desk. Dealers are expecting block deal in both the counters very soon. So keep an eye out for both the names. And lastly, when it comes to Jindal Steel and Steel Authority of India, that is SAIL, there are multiple dealing rooms that are recommending sell call to their clients. This dealers are indicating that there is a sharp fall that they have seen in the rebar steel prices in the month of June. From around 56,000 rupees per ton, it has come down to nearly 52,000 rupees per ton, and that is the one reason why multiple dealing rooms are recommending sell calls to their clients.
Interesting, particularly on the steel names. Thanks so much, Somit, for that. The rebar prices are seeing drops. Avinash, ultimately the commodity players are going through that bit of tizzy, right? Because just a short while back, you had aluminium prices come off very sharply. That was reflected in the prices of Hindalco as well as Nalco. And now Somit pointing out that steel rebar prices are coming off. So what would you do with the metal pack as a whole? If you manage to get it early, would you take money off the table, or would you wait for the first quarter results to come through?
No, Alex, I think I would prefer to wait for the Q1 numbers, because still inherently metal prices are significantly up. And I think this price correction which has happened, I think we need to get a little more confirmation, although it's good news for the aluminum user segment, because, aluminum prices had never risen so sharply in such a short period of time. So, it gives them a relief. But for primary producers of aluminum, I think if the price is correct, I don't think it's going to be a significant dent to their profitability, because volume growth has been pretty good. The throughput has been good from user sector. So I would say that it's better to wait for Q1 numbers and then take a call on steel as well as, ferrous as well as non-ferrous kind of metals. After that, we could get a significant assessment as to how demand is actually shaping up, whether global prices are going to be turning further lower. So that would be a good time to reevaluate.
Okay, let's stay with newsmakers this afternoon, and the MSCI review may see around a $3.2 billion set of inflows. Laurus Labs and Biocon likely upgrades as well. Aether Energy and SAIL could be fresh inclusions. Somit Sarkar with us, joining in with more details. Somit.
Yes, there are early estimates that have come in related to the MSCI rejig that will be announced on August 12. Now, as per JM Financial, Laurus Labs and Biocon have the highest probability of moving into the MSCI Standard Index from the MSCI Small Cap Index, and because of that, both these counters are expected to see a high amount of inflows. For Laurus Labs specifically, JM Financial is expecting inflows of close to $496 million US, while for Biocon, the inflows are expected to be close to $295 million US. When it comes to Apar Industries and Uno Mindia, there's a medium probability of these two counters moving to standard index from the small cap index. Inflows could be anywhere between 200 to 260 million US. And when it comes to Aether Energy and SAIL, again there is a medium probability of both these counters seeing a fresh inclusion into the standard index. And if that happens, the inflows could be anywhere between 188 to 209 million US. Apart from that, there is Coforge, Max Financial, Glenmark Pharma, Thermax, Lenskart and Schaeffler India. All these counters have a low probability of either getting included in the standard index or moving from the small cap index to the standard index. And if that happens, then inflows could be anywhere between 157 to 500 million US. But do remember, these counters have a very low probability at this moment, and these are quite early estimates. But overall, analysts are expecting inflows of close to $3.2 billion US because of the MSCI reject that will be happening in August.
Okay, thank you for that, Somit. I want to just look at a whole pack of defense stocks. So news coming in that there is talks about India supplying the BrahMos to the UAE, and there talks about a BrahMos deal with Vietnam as well. So now look at some of the stocks. You're seeing a lot of those defense stocks up right now, but whether it's Bharat Dynamic, Bharat Electronics, HAL, Data Patterns, let's look at some of those as well. Solar Industries, Paras, Good Luck India, already Good Luck India in focus today, Premier Explosives, some of those also popping. Good Luck India anyway had a deal announcement, and that's talk about 4.5% up. Avinash, any of the defense play that you like, and especially Good Luck India?
No, I think Good Luck India definitely looks promising because they got a 250 crore order for their subsidiary Good Luck Aerospace. And I think this is going to be a very prominent order because, you know, they are one of the few players which makes these artillery shells. I think clearly the traction in the business has increased. You know, clearly the company makes a product which is in heavy demand, not only from domestic customers, but even overseas inquiries have been coming in. Apart from that, you know, I think the other defense companies could be Bharat Electronics or maybe an HAL, where I think the order book is very strong. Scalability over the next 1 or 2 years looks quite promising. I think BEL looks very promising. I think probably somebody who's got a 12 to 15 month kind of time frame can actually buy it at the current level. So currently, yes, defense looks interesting, but I think you need to give in at least 3-4 quarters because this is not a quarterly kind of run rate business. Sometimes numbers don't come as per our expectations on a quarter to quarter level. So next 12 to 15 months outlook for these companies definitely appears to be quite good.
Specifically on the BrahMos, because as I understand it, Avinash, Solar Industries is a key player in that ecosystem. The only point is the stock is up quite considerably. Just over the last 6 months, it's up as much as 45%. The stock is spiking in trade today, but take a look at that. 6 months, 45 odd percent. In fact, a similar gain over the last 3 months itself. It's trading at close to 100 times price to earnings on a trailing basis. Is it too steep right now to enter, Avinash?
I think, Alex, if you got a 2-year view, I think you can still look at buying this. This has been one of those stocks which is a monopoly stock, and where, you know, I think the customer centricity and the kind of products they make is quite unique. They are present not only in BrahMos basically, but also they make explosives which are, given to Coal India and many other coal fields. So clearly, I think the numbers seem to be very strong. They have a very large order book. That definitely makes them very, very strong in the domestic market. And I think it's very clear that no other player is as close to Solar Industries. In fact, Alex, just to tell you, you know, there is one company which supplies aluminum powder to this company, that is Solar Industry, which is an indirect play on solar. The company's name is MMP Industries. I think very strong numbers, very strong kind of cash flows, but I think a completely ignored stock. So I think somebody who wants to actually play on Solar Industries can even look at MMP Industries, because Solar Industries is a very large customer for MMP, and actually its track record in the last 3 to 4 years has been quite commendable.
Okay. On to an exclusive news update. Sources are telling NDTV Profit that 10 to 12 vessels carrying fertilizer stranded near the Strait of Hormuz have resumed their journey to India. This is crucial. You're seeing an impact on fertilizer stocks today as well. But Rishabh joining on with more details. Rishabh.
Absolutely, Hiral. What we're picking up from top official sources is the fact that there are a bunch of vessels, roughly 10 to 12, that were earlier stranded near the Strait of Hormuz due to the obvious tensions that are around that area. There's the constant open and shut of that very narrow, very important for commerce Strait of Hormuz. So roughly 10 to 12 of those vessels, which are a combination of Indian flagged as well as foreign flagged vessels, but all of their destination is India, is what we're picking up. All of them are now on their way to India. They're expected to arrive over the next 2 or 3 days. I also checked almost all fertilizer stocks were up and have been up for a bit. What we have also is the details of these 10 to 12 vessels. Now, roughly 8 of them are set to carry urea-based fertilizers. India is the largest consumer of those urea-based fertilizers, and roughly 4 of them are carrying DAP or related raw materials. So that's the breakdown that we have at this point in time in terms of what is entering into India. Now, remember why stocks are up is, of course, because India is the largest importer of fertilizers. The incoming Kharif season is going to be extremely important for the agriculture-based economy here in India. That is sort of what lifts up everything in terms of sentiment as well. And that's what we're picking up in terms of the sort of fertilizer stock that is set to come into India after the sort of tensions that we've seen weighing down on the entire petrochemical chain. So this is a relief for almost everyone in the sector. All farmers should be sort of happy. The government has also been able to procure these fertilizers so far, and that seems to be continuing with these vessels coming in.
Right, Rishabh, thanks so much for getting us those details. Now, 2 aspects, of course, playing through for the fertilizer space here in India. One is the supplies, which we've just spoken about. The other side is the demand side, right, Avinash? Because ultimately we've had a late onset of the southeast monsoon winds, and you have a situation where there could be a deficient monsoon. What do you think about the demand side of the picture?
No, I think, Alex, clearly, from whatever reports I have read, I think the deficit is almost 50 to 60%. So I think this time we need to cover up, for the slow progress of the monsoon. And I think if this monsoon progress does not happen, then it's going to have a significant impact on the agrochemicals as well as on the fertilizer company. So I think, it's better that we wait for the first quarter numbers, because April to June is unlikely to be a great period for most of the agrochemical companies. But fortunately or unfortunately, April to September is the peak period for agriculture inputs like agrochemicals, fertilizers. The second half is slightly more tepid. So, if the first half is lost, then I think to a large extent, fertilizer companies, agrochemical companies are going to underperform. So I think it's better to hold rather than, buying at these levels. I think the Q1 is not going to be great, at least as of now.
Okay, we're going to take a very short break, but before we thank Avinash and Hemen, I want you to give us a couple of ideas with the assumption that markets are going to continue on this strong wicket. What is on your radar for tomorrow's trade? You're on mute, Hemen.
Sorry, my bad. I think for tomorrow's trade, I think high risk, not high risk, but a dark horse would be something in the IT sector. I believe that is bottoming out despite whatever happened to Accenture last week. And I have a feeling even something like, okay, defense has moved. So cement can be something which one can play with. Not much for lows. A bounce is just on the verge, on the anvil.
Got it. Okay. So a name in the IT space as well as in the cement space. On that note, gentlemen, thanks so much for taking the time. Speak to you really soon. But we slip into a very quick break. We'll get you more strategies heading into the end of trade and, of course, ahead of tomorrow. And the question really is, do we continue to see strength in the Indian equity market? Stay tuned to find out.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome back. Looks like we'll close strong and steady as we have been all day. Markets have been on a good wicket, about 0.5% up now. So staying above the 24,100 mark. And that's really the important levels to watch out for. What's buzzing in the last few hours, or actually the last hour or so? IT stocks have been doing well. Pharma is doing well. Defense has gotten a pop after news that the BrahMos might be, now India might close a deal with the UAE on the BrahMos, and other countries are also being spoken to. So you have the entire defense sector and that index also up and about. Well, let me welcome now on the show Osho Krishan, Chief Manager, Technical and Derivative Research at Angel One. Also joined by Siddharth Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services. Welcome to both of you. Osho, just how defensible is 24,100 looking like right now?
Very good afternoon, Tamanna, and all the panelist members. Well, yes, no doubt today we have seen a positive traction, but again, on the higher end, there has been very strong stagnation. There is no major follow-up movement, specifically in the benchmark index. It has been a range-bound movement for the index, and the hurdle of 100 exponential moving average is still persisting and providing strong rejections at the higher zone. So no doubt 24,100 being the maximum pain also. So I'm expecting that this zone can be seen as a very strong and crucial juncture. But again, the view remains buy on dip. 24,000 is the support zone. So better to look for buying opportunity on the dips. On the higher end, we have resistance zone very nearby. Firstly is 24,150, 160 on the spot levels, followed by 250. So I'm not very much strongly bullish in the Nifty 50 index as of now. But again, tomorrow, if there will be any kind of follow-up movement above 24,160, then we can see a decisive up move in the coming period. But as of now, I'm expecting 24,100 to be a very strong magnetic zone for Nifty.
Zone, interesting. Osho, quickly, individual stocks that you're liking at this point? Potentially also short-term trades.
First one is PFC. PFC has given a very strong breakout in today's trading session. The counter is already 2.5% higher. That has been backed by volumes. So I'm expecting that in the coming period, there might be strong possibility for the counter to retest the zone of 458 to 460. So this will be my first bullish bet with a strict stop loss of 428. The other counter, which is looking very positive, is Tata Communication. This counter has given a very strong flat pattern breakout in today's trading session, and I'm expecting with the kind of momentum this counter is into, there is a strong possibility of a strong momentum coming in the recent period. So Tata Communication, one can look for buying opportunity at current levels, 2060. 1980 is the estimated stop loss that one should keep. And on the higher end, 2150 followed by 2180 is the immediate target for this counter.
Okay, Siddharth Khemka also joining in. Siddharth, this afternoon, are you feeling bullish on IT? Or do you think this is something that can see another seesaw over the next few sessions?
Yeah, hi, good afternoon. I think, Tamanna, if you look at our overall view on IT, remains a bit cautious, albeit what we are seeing is that there is some value buying which is helping the sector right now. But if you go back just last week itself, Accenture with its lower guidance that had impacted the sector. So what we believe is that in the near term, the pain and the deceleration because of AI, that will continue and could impact Q1, Q2 numbers. So we are seeing very soft outlook, at least in the near term. In the long term, there would be some companies which will emerge as beneficiaries from the AI adoption, plus the margin savings, which are right now getting kind of consumed because of the pricing pressure. Selectively, some mid caps which are showing kind of strong growth in the business, something like a Coforge, which has consistently seen strong order inflows, plus now valuations being comfortable. But overall, we would remain underweight on IT.
You know, as much as IT has been a theme that has spiraled downwards, there are other themes that have worked pretty well, and the broader energy space has been something to watch here in India. Power stocks have rallied sharply, but even in that pack, there's one stock that has not done well, which is NTPC, at least relatively speaking. What are the reasons for that underperformance? Varsha has a few to tell you about. And Varsha, what are you picking up?
Well, you know, on that note, NTPC has actually seen a decline of 2% in the last 3 months, whereas if you see all the power stocks have seen a sharp rally in the last 3 months. Let's see what are the key reasons why investors are questioning that what is the reason behind, you know, lag that we have seen in NTPC. Let's see, if you see the BSE Power Index is up almost 20% in trade. Adani Green, BHEL, Adani Power, Hitachi Energy, Thermax and Suzlon all are up from ranging from, you know, 30 to 50%, except NTPC, which has seen a downward rally, I would say, of almost 2% in the last 3 months. Let's see what are the key reasons. Reason number one is, of course, the management uncertainty, wherein Gurdeep Singh is seen as a key to execution and policy influence, but his term has been ending in July 2026, so no clarity on extension, number one. Number two, the fundraising. If you see, many power companies are actually raising equity after energy security focus has been increased, which includes your NHPC, Coal India, JSW Energy, Acme, which have raised equity, and NTPC is used by FIIs to, it's an easiest stock to sell, and hence we are seeing a lot of selling pressure when it comes to this counter. Reason number three is, of course, if you see, the power sector has seen a strong rally due to summer demand, energy crisis and data push, which has aided sector. Now some rotation is being seen as these triggers may ease, and hence investors are shifting their money to other sectors or cheaper stocks, and NTPC hence has taken a biggest hit over here. Reason number four, of course, the competition. Earlier states used to prefer NTPC for thermal power, but now states are tendering new coal plants like Adani Power, JSW Energy are gaining strong share, and NTPC is, of course, losing market share for some of these new projects. Last reason is, of course, there are no near-term triggers, no big capacity addition is seen in the next 2 to 3 years, and of course there's no immediate catalyst to drive stock upside. So these are 5 key reasons why NTPC has lagged. But no, long-term story, if I were to talk about, still intact, because it's one of the largest players in thermal pipeline, then part of total 76 gigawatt pipeline, still leading player, and the stock is seen reasonably valued as versus global and Indian peers. Just to give a context on valuation, NTPC is trading at around 13x, while if you see JSW Energy, Acme and NHPC has kind of premium valuation over here. Lastly, on to the analyst recommendation, where there are 26 analysts recommending buy, 1 hold and 1 sell with an upside potential of 20%. So overall, we have seen 5 key reasons why NTPC has lagged, but yes, long-term story remains intact.
If it diversifies beyond just thermal power and moves into nuclear as well, certainly something to watch out for. Siddharth, what's the opinion? And I think Varsha highlighted the reasons why the stock has lagged quite well. Do you agree with them? And what do you think about the prospects?
So definitely, I think a lot of things going in favor for NTPC, like the power demand, which has spiked up. NTPC green energy generation grew almost more than 100% in FY26. However, at the same time, a lot of concerns are there, key monitorables that we believe. For example, the coal PLF has come down to 72% from 77% in FY26. The management has lowered the thermal capacity addition targets for FY27 and 28. So for FY27, from about 1600 megawatt addition, they are now targeting about 1070 odd. So that clearly shows there is some execution risk plus slower growth going forward in terms of capacity addition. So right now we have a neutral rating on NTPC, but looking at the correction, I think there is some room for improvement here given the long-term structure, plus valuations have become very comfortable. So net, while we are having a neutral rating, our target price at 390 definitely gives a 10% room for upside in NTPC.
Okay, NTPC in focus. Osho, I don't know if you have a view on NTPC on charts.
See, again, NTPC has given a breakdown from the zone of 390, and from there onwards, there has been a strong sell-off the whole month. But again, in the last 3 to 4 trading sessions, there has been a technical rebound in the counter from the 200-day simple moving average, and that too from the oversold terrain. So this is just a technical pullback. I'm expecting that on the higher end, till the time 370 does not get reclaimed, till that time we can see some kind of consolidation around the same zone, 360 on the lower end or 358 on the lower end to 372 on the higher end is the consolidation zone for NTPC in the very short term period. But if there will be any kind of bounce above 372, then there can be a bounce or there can be a continuation towards the zone of 390-95 in the coming period.
Okay, so that's the view on the charts on NTPC, but let's talk about Cipla. No confusion on Cipla at all. It's the clear top nifty gainer in trade today. And one of the reasons is possibly what Citi's stake is. They've maintained a tactical buy on the stock. Varsha joining in for key highlights of why Citi is so bullish on Cipla, and the street seems to be agreeing, Varsha.
Yes, absolutely. 26% upside is what Citi has been highlighting, and hence they have rated buy with target price of around 1700. They have put Cipla on a 90-day positive catalyst watch, meaning next 3 months could see stock moving triggers. Now Citi is betting on 3 major launches when it comes to Cipla for their US business, and these are critical because US revenue was of course weak, and these launches can drive the US recovery in US sales. And for the India business, well, the domestic business is already doing well, and the growth has been supported by the respiratory portfolio that the Cipla has, and of course the recovery in that segment. The Indore plant US FDA re-inspection is expected anytime, and if that clears, this becomes a big positive trigger for the stock. Now geopolitical pressure is always easing, which is likely to reduce cost risk, which will support better margins going forward according to Citi. And the impact of Revlimid decline is largely behind. The risk reward looks attractive, and Cipla is seen as a strong India-focused play, especially when India-heavy pharma peers are expensive according to Citi. So overall, Citi is bullish, and next 3 months could be a good re-rating for stock.
Okay, as of yesterday, at least it had a 26% upside. Some of that has gotten taken out with today's 5% up move. Siddharth, what is the kind of potential upside that you anticipate for Cipla? And would this be one of the top picks for you in the pharmaceutical space, or would you prefer something else?
So, Alex, I think here we are again, and we have a neutral rating as well as a neutral view on Cipla. Q4, we saw sharp underperformance in EBITDA margins. While the North America business is yet to pick up, we expect Q1 to be again softer, and only growth in US to pick up from second half of FY27 onwards. So overall, I think there are the ongoing regulatory issues with regards to its product Lanreotide in US, plus the adverse impact of geopolitical tensions in emerging markets, the enhanced marketing and promotional spend, plus valuations little bit kind of on the higher side. So we have a neutral rating and 1400 kind of target price. Our top pick within the healthcare pharma space, I think two segments. One, CDMO is one space that we like, and the other is the hospitals, largely the domestic story. I think these are the two segments within the healthcare space that we like right now.
Okay, I think defense will possibly make it to the list. We'll ask Siddharth about it, but first let's take a look at what's been happening with defense stocks. India and UAE are in fast-moving early-stage talks for BrahMos missile and Akash Tir air defense exports as per reports. This is reflecting Abu Dhabi's push to diversify beyond US suppliers. Hiral joining in with more details. Hiral, which are the companies that have a role to play in the BrahMos system?
Thank you so much for that. This is going to be interesting because BrahMos, we are just talking about UAE right now. In fact, last week, there were media reports also indicating that the deal with Vietnam for BrahMos is something which is nearing early stages in terms of closure. So both these aspects will be the ones which will be positive. Now, if you talk about individual counters, there are multiple components to this. If you talk about the core component and subsystem suppliers, you have names like Data Patterns, Solar Industries, Premier Explosives, as well as Good Luck India and PTC Industries. These are the ones which land to benefit on this aspect. Apart from that, if you talk about the electronics and integration partners as well, you have names like BEL, HAL and Bharat Dynamics, the bigger names that actually come to the foray as well, who get to benefit in terms of BrahMos. And very lastly, if you have to look at the structural material and the heavy engineering providers, you have names like Paras Defense as well as Jindal Stainless. These are the names that tend to benefit out of the BrahMos deal. Now, to add to this, you have Akshatveer also, which is coming in. Now, a similar set of companies that will benefit on that deal as well. But interestingly, it's two deals that you're talking about right now, Tamanna. One is Vietnam, which was announced last week, which is nearing closure. And today, you're talking about UAE as well. So I think defense stocks are set to fire on the back of the orders that could be coming in.
Okay. Thank you for that. And defense stocks are firing to some extent already. You're seeing that entire index up about 1.5%. Siddharth, is there more room to grow for some of these defense companies? Garden Reach was already in focus, for example, because of the Navratna status, and now this news as well. The fact is, I'm just going to add to this, the fact that the UAE is looking at alternatives to the US cover after everything that's happened in the Middle East also opens up export potential for private companies in the defense space in India, doesn't it?
Yeah, Taman, I think definitely defense is one space that we believe is a multi-year structural story. And while the domestic demand continues to see strong growth, what we also like is that the fact that the government has opened up the space for a lot of private players within the domestic defense procurement, which is adding to the capabilities, plus the Make in India program for the last several years that has added to the technology transfer plus manufacturing capabilities. And given this current global geopolitical scenario, I think the exports opportunities have just begun to open up. And I think, again, a lot of these technologies which have been tested recently in some of the warlike situations, I think that is helping India be a big supplier to the global markets. What also helps is that geopolitically, India is kind of in a neutral state. There are a lot of friendly countries to whom we can supply these equipment. So I think again, defense system is witnessing a strong momentum. FY26, the defense procurement in India reached a record 1.78 lakh crore, and going forward, the defense exports also for last year saw record sales. So I think this is a space which one needs to look at from the next 4 to 5 year perspective. It's a structurally long-term story. Stocks that we like, Bharat Electronics is the market leader there. Bharat Forge is emerging a big way in the defense segment, and it's the key growth area for Bharat Forge there. Some of the other companies like Data Patterns, Astra Microwave, I think this is a basket that we continue to like a lot.
Okay, interesting. We started off with Voltas as a stock, and I'm shifting gears now to talk about Voltas. We started off with gains of about 4%. It's cooled off from that point. In fact, trading at close to the low point of the day. But there's good reason for interest in this particular counter because they've highlighted that they crossed the 1 million mark in the first quarter in 81 days compared with 88 days in the year ago period, and that just showcases what the summer has done, this extended summer. It's good news though for EPAC Durable, which is a supplier to Voltas that's seeing strong demand. But what are the prospects looking like for this particular counter? We've got both a bull view as well as a bear view. Let me bring in Puneet to give you both the bull and bear scenarios. Puneet?
Well, thank you for that. As you rightly mentioned, the Voltas is a key trigger for this counter. Almost 1 million units sold in the 81 days, as you mentioned. But, for EPAC Durables, 20 to 30% sales comes from Voltas. So, any direct beneficiary to Voltas in terms of sales growth is clearly visible to EPAC Durables numbers as well. For FY26 though, it was a very weak year for the company. Profits fell 94%. That was led by reversal of PLI income for FY26 because they failed to meet the revenue targets, and hence it was a washout year for EPAC Durable. You saw the stock collapse post Q4 earnings as well. And as I mentioned, 20 to 30% volumes from one single customer, that's Voltas, that's the largest AC maker in the country, and hence you're seeing that reaction more on EPAC numbers and on the stock price compared to Voltas right now. Raw material prices though continue to be volatile in this particular time frame, and hence despite the growth in volumes, how does that translate to margins will be something to watch for EPAC Durable in Q1 FY27. When you also look at what the management expects, they had guided for a 15 to 20% growth in this quarter before when they last spoke to us as well, and hence the growth momentum was visible at that time in the middle of May. That should translate into numbers hopefully for its shareholders as well. But the overall utilization as well as asset turns were very weak at the end of Q4. So management has guided for going back to those higher levels in terms of utilization as well as asset turn. How much of that materializes will depend on Q1 and Q4 AC season as well. And finally, what we've seen as Hisense as a key manufacturing plant they've set up that has come on stream in the month of March end. Those will be an additional kicker to numbers in FY27, which wasn't visible last year. But brokerages, are seeing, the EPS impact of the company because FY26 was a washout. But FY27 also, brokerages like ICICI still see that EPS won't be touching FY25 levels as well. So while today is, of course, given a good stock reaction, you have to look at the performance in the next 1 to 2 quarters because the last 3 to 4 quarters have been a clear disappointment for the company.
Okay, this time though, something seems to have switched. EPAC Durables in focus. Siddharth Khemka, this whole room air conditioner story, and you're seeing Voltas, LG, Blue Star, all of them will be in focus. Of course, the pick and shovels, the back end of it also, which is why you're seeing EPAC Durables also racing today. Do you think there's more legs to this story?
So, Tamanna, I think definitely there are. So again, you have to look at it in 2 parts. A, the short-term view, because these are seasonal driven sector, and with the extended monsoon, they've got a leg up, which could see a good numbers in Q1, and hence I think there is little more room for upside. But again, from a long-term perspective, this is again a sector which we believe will do well with the global warming and the irritant weather, which is kind of increasing the demand for room ACs. On its part, I think Q4 numbers were pretty weak for Voltas itself, and margin pressure for the industry because of the raw material prices. And I think with the strong demand now, the industry will be able to take on the price hikes to mitigate that margin risk. And hence, I think in the near term, there is definitely some room for upside. After that, again, with the advent of monsoon, maybe we can see some profit booking. And again, around the Q3 season, when again the October heat kind of situation starts, is a good time to start accumulating these kind of stocks again.
Got it. Okay, anything on the charts, Osho, for EPAC Durable? It's certainly come off the high point of the day, but it's still trading with gains of about 9%.
See, overall, this is the first day where we are witnessing a very strong volume-based buying in the counter, and historically, there has been a follow-up movement in the counter, especially after such kind of volume-based movement. So I'm expecting that in the coming day, there might be a higher possibility of this counter to test the zone of nearly 275 to 290 odd levels on the higher end. So one should definitely, if someone is already holding a position, then the advice will be to stay hold in the counter. 275 followed by 290 is the target that one can expect in this counter from a short term or maybe kind of BTST or 2 to 3 trading days in this counter.
You know, we've got a show in the morning at 11:30. This is Know Your Company, and often we see an impact because it provides investors an opportunity to take a look at the company and to take a look at the numbers behind what you're seeing in the results, right? And today's story was about Zota Healthcare. Sharad Dubey, who anchors the show, is joining in to give you the key takeaways. The stock is up as much as 5% in trade today. What did the management say to you, Sharad?
Well, it's a pretty interesting take. The company has not achieved its profitability, but the management had stated the way they are expanding, they are going to get that EBITDA profitability at least 1 year beforehand. And of course, there's a lot of bullishness also coming in the recent analyst meet as well. I asked the management about the other expansion plans, and they have stated that for the next 2 quarters, they will try to control their expansion, and this is because of improving their return ratios. Also, that Coco Store expansion, Coco Store means company-owned, company-operated stores. These stores are targeting an EBITDA margin of 20 to 25%, and the mature stores will improve the unit economics as well. And because of that, the markets are taking it quite positively.
Thank you for that, Sharad. Zota Healthcare doing well. That's the KYC impact, and you can catch that show every day at 11:30 a.m. All right, just a few minutes left to go before we wrap up for the day. Siddharth, Osho, want to thank you for joining in on this Monday afternoon. It's turning out to be a good day. We have slipped below the 24,100 mark, and that was an important level to mark, Alex. Pull up the intraday. The reason is because if you were steady above 24,100, you could look at levels of up to 24,400 next. But no, you have slid, not massively, but let's pull up the Nifty contributors. I want to see where that pressure is coming from, at least from the key index.
It's the heavyweights. So if you pull up, for example, if you pull up...
Asian Paints was already
No, I'm saying
down.
these two
have lost steam.
Yeah, so pull up the intraday charts for both Reliance Industries as well as HDFC Bank, one after the other perhaps, and then you'll see what I'm talking about. For Reliance Industries, okay, this is the HDFC Bank, just a little bit of a cool off, but for Reliance Industries, it'll be more visible. So that actually will tell you why we've come off the high point of the day.
Yeah, just pull up the Nifty heat map for us, and you look at how pharmaceuticals are going strong. I mean, nothing moving. Cipla there, Tech Mahindra is actually zoomed. Dr. Reddy is coming in, Bajaj Auto, Sun Pharma. Some of the tech pack has also slid. The Nifty IT, when we pull up the sectoral heat map, will show that story. Bharat Electronics zooming to the top. But the number of red on the screen, or the amount of red on the screen, has increased. It's a consumption play here. Nestle, Tata, Titan, Asian Paints, Shriram Finance, Trent. This is telling us about the concerns with a poor monsoon more than anything else, Alex, and that's perhaps what you're seeing over here. The broader markets, though, are possibly closing slightly better off their highs as well, but the Nifty mid-cap 150 also 0.37% up, and Alex, even the small cap
index. In fact, that's going to be the story really. I think if you look back over the last several weeks, you've seen a significant amount of resilience and a lot of fund managers talking very favorably about stocks in the broader markets. I wonder when that action will move to the large caps. Ultimately, it's going to be determined by the earnings season, which kickstarts not too far from now.
Just a sectoral heat map before we close for the afternoon, and India Defence, they're right on top. followed by pharmaceutical stocks and media healthcare coming in close. But Nifty IT seems to have fallen from the highs of the day. But that's all the time we have on India Market Close. From Alex and the team that put the show together, thank you so much for watching. Stay tuned. All the action continues on NDTV Profit.
Welcome to NDTV Profit. You are tuned in to the Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. First up, let's get you the expert insights. Bitcoin range-bound trade persists for this. Argentina eases crypto taxes. El Salvador stacks Bitcoin. SEC Commissioner calls for self-protective crypto rules. And Japan Pension Fund eyes 1% crypto allocation. Those were the top crypto headlines at this hour. How should you actually navigate the digital assets, manage them, and also the risk and spotting the next big trend? Let's hear it from the crypto expert on the new playbook for investing. Here's a slice of conversation I had with Dilip Shenoy. He's the chairperson at Bharat Web3 Association on the need of deep technical knowledge to begin crypto investing.
I think that's a myth, as you said, is a myth buster. You do not need to be a blockchain engineer or a coder to understand the basics of virtual digital assets. Just as if you look at when you're using the internet, you need not be knowing what TCP or the IP works. And I think here, just like in the stock exchange, you need not know how to use an exchange. You just need to learn the fundamentals of the investment class that you are actually investing in this case, virtual digital assets, without deep technical expertise. What is essential is understanding the risks, doing proper research, investing only in what you can start small, and as you understand the sector, you grow. But it's a myth that you need to be having immense technical knowledge or something to invest in this sector. You need to use regulated and reputable platforms, preferably members of BWA. Financial literacy is far more important than technical literacy for a beginner.
So that's an interesting myth buster, but also listen into what he had to say on the type of knowledge one should start with.
So the first thing you've got to actually understand the sector, and when you start investing in, let's say, in the stock market, you choose a few trustworthy shares that you want to go. And then similarly in the virtual digital assets, and then you use a good stockbroker, you do it through a reputed exchange, etc. Similarly in the virtual digital assets, use a trusted exchange, trusted by broker if you wish, but the exchange performs the same function, and invest in the basic understanding of the basic virtual digital assets that you are that you would like to invest in. It's not you should not look at people who promise you unbelievable returns or virtual digital assets that people tell you to invest in. But you should do your own research and be cautious and invest in this asset class very cautiously.
Right, and as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Good evening, you're watching Market Express with me, Shreyanshi Singh. Let's start by getting straight into the show, and we're going to get you a roundup in terms of markets as well as the top news and updates from within the country and across the globe. First things first, let's talk about Dalal Street that ended in a narrow range but managed to really hold firm. The Nifty closed above the 24,000 mark while the Sensex also gained over 200 points. You do have select buying in heavyweights that was helping benchmark indices finish in the positive territory. Let's move on and talk about the market breadth that remained positive with most sectors ending in the green. Pharma and oil and gas stocks led the gains, while you did have FMCG as well as consumption names really underperforming the lot, ending the session on the back foot. But on the flip side, let's also talk about one counter that was up and away in trade, as you can see on your screens with that 20% gain coming in. India's data center boom is creating new growth engines for industrial companies. Kirloskar Oil Engines is backed a large 192 megawatt order coming in from Hypernext with 96 OptiPrime power systems. And this order, in fact, marks a significant win for the company and further deepens its presence when it comes to digital infrastructure. It's a segment that is seeing strong demand as India's data storage and AI capabilities continue to expand. Let's also move on and talk about Citi that is turning increasingly positive on Cipla. The brokerage has maintained its buy rating with a target price of close to 1,700 rupees, implying upside of about 26% thereabout. And you can see that being reflected in the stock price as well, with that 4.8% upside coming in on the day for this particular counter. Now, you do have Citi that has placed the stock on a 90-day positive catalyst watch as well, and Citi is also believing that there are multiple triggers to the growth story. So something like key US product approvals, launches to recovery when it comes to the domestic respiratory business, that's something that makes it to their radar. And add to that potential US FDA clearance as well for the Indore plant that could really support the next leg of growth in terms of this particular counter. Let's move on and talk about the word coming in from brokerages, but this time let's also talk about Dr. Reddy's that was up and away in trade with that 1.5% uptick coming in. Nomura, in fact, is growing increasingly bullish when it comes to this particular counter. The brokerage has maintained its buy rating, raised the target price as well to somewhere close to 1,740 rupees from 1,600 rupees previously. And Nomura, in fact, is believing that the company's strategic shift towards branded businesses could really lift margins and support more sustainable earnings growth and also drive a re-rating in terms of the valuations as well. So that's something that they're talking about. Also talking about potential upside from the possible launch of biosimilar, which could really materially boost earnings estimates. Let's move on and talk about India's air conditioner market that is heating up like never before. So you do have Voltas that has crossed the 1 million air conditioner sales milestone. And the stock was buzzing away in trade, gave up some of its gains towards the fag end of the session. But when you talk about this particular milestone, it was delivered in record time, driven by some of those strong consumer demand trends as well, a refreshed product portfolio and a wider distribution network. Now, in terms of what the milestone represents, it talks about the strengthening position in terms of India's largest AC brand as well for Voltas. And it's not just Voltas. You did have LG Electronics also beating the 1 million sales mark. Just for a bit of background, earlier this year, highlighting the rapid growth of India's cooling story, and Voltas, the one pick that is joining this particular list right now. Let's also move on and talk about delivery that is back in focus. And that's after shares climbed more than 3%, ended the session with about 4.5%, almost 5% uptick, in fact, coming in trade. The trigger was a Motilal Oswal note that reiterated its buy rating, but also the target price here was 580 rupees, which is very upwards of whatever the current market price reflecting on your screen. So there about 480 rupees is implying an upside of about 26% for context. So now the brokerage is also betting on strong execution, with express parcel volumes really jumping 73% on a year-on-year basis, supported by the e-com express acquisition. But add to that healthy consumption demand, tight cost controls that are really driving margin improvement as well. Let's move on and talk about Garden Reach Shipbuilders and Engineers that is in the spotlight, up about 2.5% after the government granted the Defence PSU Navratna status. And the development also sent shares to an over 1 month high, gives the company greater financial and operational autonomy, and the new status is expected to provide more flexibility when it comes to investment decisions. Now, it also strengthens execution capabilities, supports the company's long-term growth ambitions in India's defense manufacturing space as well. Let's move on and talk about NOSL. In terms of the shares really racing ahead with that 20% upsurge really coming in after the government imposed anti-dumping duties on imports of select chemicals from China and the US and the EU also for a period of about 5 years. Now, this particular move is seen as a major positive for domestic rubber chemical manufacturers, as it could improve pricing power and open up market share opportunities as well for them. And that's something that you can see reflected in the price as well. When you talk about this particular company, it's India's largest rubber chemicals maker, and the decision could really provide a significant boost to its core tire industry businesses as well. Let's move on and talk about Som Distilleries that was in focus after the Excise Department in fact rejected the FY27 license for its Bhopal plant, and the company said that it has submitted detailed replies and supporting documents in response to the show cause notice. For now, the street is going to be closely watching the regulatory process. About a 5% knock coming in when you talk about this particular counter. So any further clarity really on the status of operations at this particular unit is something to watch out for. Let's also move on and talk about Sun Pharma that is expanding its distribution footprint. The company is going to be acquiring 100% of Mumbai-based Innocare Life Sciences, and that's on a deal valued at about 271 crore rupees. The entire transaction will be funded through cash consideration, expected to close on or before July 31st. So that's the date that you're marking on your calendars. The acquisition is set to strengthen the company's presence when it comes to pharma distribution, but also the branded portfolio segment. Let's move on and talk about John Cockerill that has secured a major order win as well. The company has bagged an 85 to 90 crore contract coming in from a particular company for a tunnel furnace package under its CRGO project. The order is scheduled to be executed over the next 15 months. Also further strengthens the company's order book amid continued investments in steel capacity and industrial infrastructure. Let's also move on and talk about Pace Digitech that is entering an aggressive expansion phase. The company plans to set up a research center in Pune as well and has approved the acquisition of its arm and announced a 7.5 gigawatt hour capacity addition. To support these plans, the company is going to be investing about 200 crore in capex, underscoring its growing ambitions when it comes to the energy storage and advanced manufacturing space. Let's move on and talk about Power Mech Projects that has secured a major order win coming in from JSW Thermal. The company has bagged somewhere close to 1,000 crore contract for civil and structural works for a 2 into 800 megawatt thermal power project, and the order is going to be executed over the next 36 months. So that's really what you're marking on your calendars. The stock was buzzing away in trade, about 2% uptick coming in on something that really further strengthens the company's order book, underscores the continued momentum in India's power generation capex cycle. Let's move on and talk about order wins galore in terms of Bharat Forge as well. That has also secured a significant defense order, bagging a 425 crore contract to really supply gas turbine generators to the Indian Navy over the next 5 years. This particular win is particularly notable as it marks the company's entry into the marine gas turbine segment. So that's really opening up a new growth avenue and further strengthening the company's presence when it comes to India's defense manufacturing ecosystem. Let's move on and talk about Good Luck India that has secured a major defense order win as well, and the company's subsidiary has bagged an order to the tune of about 255 crore rupees thereabout for the supply of 155mm long-range shells. The contract is scheduled to be executed over the next 10 months, further strengthens the company's presence in the defense manufacturing space while adding to revenue visibility going forward. Moving on, then let's talk about RVNL that has bagged another big ticket order. The company has secured somewhere close to the 2,900 crore rupee contract, and this is from NMDC for setting up buffer stockpiles and a blending yard with a handling capacity of close to 10 million tons per annum at Visakhapatnam. When you talk about this particular order, it's strengthening the company's execution pipeline, building on its robust order book of somewhere close to 99,000 crore rupees at the end of FY26, underscoring sustained momentum really coming through in its infrastructure business. Let's move on and talk about Tex Macro Rail that is strengthening its order momentum as well, with fresh wins coming in to the tune of about 265 crore rupees. The company has bagged a 253 crore rupee order from JSW South Rail Logistics for the supply of railway rakes and wagons as well, along with somewhere close to 11 crores transmission project as well from Odisha Power Transmission Corporation. And the latest orders really add to the company's 5,400 crore order book and support its strategy of expanding beyond Indian Railways into private sector and non-rail businesses as well. Let's also move on and talk about Advait Jewels' upcoming IPO that is drawing strong grey market interest as well, even before the issue opens for subscription, with the grey market premium reportedly surging to somewhere close to 46% as well. The strong GMP, in fact, is indicating robust investor appetite when it comes to this particular SME offering, and also points to expectations of a healthy listing gain as well. However, market experts continue to really advise investors to evaluate the company's fundamentals, valuation, and growth prospects rather than relying solely on grey market trends. Let's move on and talk to you about some business news. India is in preliminary discussions with the United Arab Emirates for a potential defense deal involving the export of the BrahMos supersonic cruise missile and the Akash Tir air defense system. Now, the talks come as the UAE looks to strengthen its military capabilities amid heightened regional security concerns. If finalized, this particular deal is going to be marking another major boost for India's growing defense export ambitions. Let's also move on and get to some national news then. The Kerala government is set to deploy artificial intelligence-powered systems, drones, and predictive crowd management. And this is at Sabrimala ahead of the upcoming pilgrimage season. This particular initiative, in fact, is aiming to improve crowd control, enhance pilgrim safety, and enable real-time monitoring across the temple complex, surrounding areas as well. And those are the routes that are going to be monitored as well. Authorities are saying that this particular technology is going to be helping manage the massive influx of devotees more efficiently during peak periods. And on to some unfortunate news then. A major industrial tragedy has struck Tamil Nadu's Tiruvallur district as well. 7 women migrant workers lost their lives and more than 60 others were affected after an ammonia gas leak at a private seafood processing and export unit near Periyapalayam as well. And most of the workers were migrants from Assam, Odisha and Jharkhand, were staying inside the factory premises. The government has ordered an inquiry while police have arrested the owner of the company as well. Moving on then, let's talk about Delhi that prepares for the monsoon. The Municipal Corporation of Delhi has in fact intensified its anti-encroachment action. The MCD is carrying out a demolition drive in West Delhi's Tilak Nagar, removing illegal structures allegedly built over a drainage channel. Officials are saying that the exercise is part of flood preparedness efforts that are aimed at improving drainage, ensuring smoother water flow and reducing the risk of waterlogging during the monsoon season. Moving on then, let's talk about Delhi taking a performance-first approach when it comes to public infrastructure. And I'm talking about the 473 crore project that covers about 96,000 streetlights across PWD roads that are going to be upgraded to smart LED systems with real-time monitoring as well. But there's a catch here. Contractors will be paid only if the lights continue to perform as promised. The no performance, no payment model links monthly payouts to service standards, aiming to improve accountability, maintenance and reliability of the city's streetlight network. And on to some international news now. Big political update coming in from the UK. Keir Starmer has announced that he's going to be stepping down as Prime Minister. And Labour leader admitting his party no longer believes that he's the right person to lead them into the next general election. With this, he becomes the 6th Prime Minister to exit in just 10 years, calling the role the proudest moment of his life. He's reflecting on rebuilding a party that he once described as politically and financially broken. He said that he had heard the answer from colleagues and accepts it. With some good grace also coming in, Starmer has confirmed that he's informed the king and promised a smooth transition as well, pledging full support to his successor as he steps back to focus on his family in terms of the update coming in here. Let's also move on and talk about Europe grappling with an intense heat wave emergency. In France, 3 people have died due to heat-related health issues, while nearly 2,700 schools are set to close or modify timetables. Temperatures in Bordeaux are expected to exceed 42 degrees Celsius, with 49 regions, as many as 49 regions under the highest red heat alert, as authorities really are warning of dangerous conditions across large parts of Europe. Let's move on and talk about fresh signs of cautious normalization in the Strait of Hormuz. 4 Qatari-controlled LNG tankers have entered the waterway using the Iranian route for the first time. And this is for the first time since the US-Israeli war with Iran began. The moves also are coming in despite Iran's claim that it had again closed the strait over the weekend, suggesting that energy shippers are gradually testing the waters as hopes of de-escalation grow. And on to some sports updates now. Egypt secured their first ever FIFA World Cup 2026 victory with a convincing 3-1 win over New Zealand, boosting their hopes of reaching the knockout stage. Meanwhile, tournament surprise package Cape Verde continued their impressive run by holding Uruguay to a draw in the Group H as well. The results have added to a fresh twist really coming into the qualification race as underdogs continue to challenge football's traditional powerhouses. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
market ends higher as Nifty continues to be in a range ending just below 24,100 levels. Broader market outperforms the benchmarks today as Nifty Bank closes at 3.5-month high. Cipla and Bajaj Auto top the charts. Rupee slips against the greenback to end above 94.5 against the US dollar mark. The currency remained in range as investors digested fresh geopolitical developments and also Brent prices trading around $80 per barrel. Iran and the United States have reported progress in high-level talks held in Switzerland, with mediators Qatar and Pakistan announcing a 60-day roadmap towards a broader agreement. Technical negotiations will continue this week with discussions focused on regional tensions. NDTV Profit exclusive fertilizer supply lines to India are back in motion. Around 10 to 12 vessels earlier stranded near the Strait of Hormuz amid rising tensions have now resumed their journey. Sources tell that these vessels are expected to dock in India over the next 2 to 3 days. US Trade Representative Jamison Greer is in India today to hold high-level talks with focus on ironing out the final differences in the proposed interim pact. The visit comes after weeks of intense negotiations. India seeks tariff edge before rolling out. Reports suggest that India is in talks to sell indigenous supersonic missile BrahMos and air defense control system Akash Tir to UAE. This comes after deal with Vietnam is in final stage. Keir Starmer resigns as UK Prime Minister and leader of the Labour Party after sustained pressure from the party. He's the 6th PM to quit in 10 years. Andy Burnham emerges as the front-runner for the top job. Bengal government announces its first budget. Women welfare gets big push with 36,000 crore rupee Annapurna scheme, 20% hike for DA hike for employees and 1 lakh jobs announced. Hello and welcome viewers, this is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. Viewers, let's first have a look at how the Indian markets have ended today. The Lal Street has ended in a narrow range but managed to hold firm. The Nifty has closed above the 24,000 mark, while the Sensex has gained over 200 points as select buying in heavyweights has really helped the benchmark indices finish in positive territory. Now let's go over to my colleague Parth Goyal for a roundup.
Nifty has closed in green, up almost 0.4% today. And this was led by Cipla and Tech Mahindra, both of which were the top gainers in the index, with Cipla gaining over 4.7% and Tech Mahindra gaining over 1.8% for the day. The broader market today has outperformed the benchmark, with Nifty Midcap 150 gaining over 0.5%, led by Mankind Pharma and New India Assurance, both of which gained over 5% today. On the other side, Nifty Small Cap 250 also saw a gain of almost 0.8% today, led by Kirloskar Oil Engines and Triveni Turbine. Kirloskar Oil Engines was up over 20% today, led by the order win which the company saw from Hypernext, and Triveni Turbine also saw an uptick of 10% today. Now moving on to the sectoral side, all of the sectors ended in green except Nifty FMCG. Nifty Pharma was the top gaining sector of the day, up over 1.2%, led by Mankind Pharma and Cipla, both of which saw an uptick of over 5% today. Nifty FMCG on the other hand was the top losing sector, down by almost 0.5%, led by Varun Beverages and Emami, both of which were the top losers in the index. Varun Beverages seeing a downtick of 3.5% and Emami seeing a downtick of 1.5% today. Now on the sectoral side as well, Nifty FMCG has closed in red for the second consecutive day, while Nifty Metal has gained for the second day in a row. Also Nifty IT and Nifty Oil and Gas have snapped their 2-day losing streak, while Nifty Pharma ended in green for the third day in a row.
Thank you so much, Parth, for that market roundup. And we also spoke to Harish Krishnan, CFA CIO at AB Slam, on whether it's time to to bet big on the banks and also the sectors he finds most attractive. He also shares his investment playbook and also discusses whether caution is returning to the market despite recovery. Let's listen in.
banking space. I genuinely do think that the larger banks have a significant advantage, be it on technology, be it on customer acquisition cost, over these smaller banks, and therefore our preference is for the larger banks out there, which are primarily in Nifty, so to speak. If I look at, say, the metal pack, again, it's the big boys playbook out there, not so many as far as the mid cap, the small cap is concerned. If I look at sectors like insurance, which has not really set the stage on fire over the course of the last 5 years or so. Again, the larger names are consolidating in the industry and gaining market share compared to the smaller ones. So again, our preference over there is for the larger names.
Meanwhile, viewers, the rupee has closed at 94.68 against the US dollar and weakening by nearly 35 paise compared to Friday's close. And the domestic currency has remained under pressure through the session and even settled near the day's low amid a stronger dollar and even heightened demand for the greenback. And rising crude oil prices and also a cautious global risk sentiment also weighed on the rupee as investors have tracked the developments in the Middle East and their implications for energy markets. And market participants, well, they will continue to monitor oil prices, foreign fund flows, and even global currency trends for further cues. Now, to an NDTV Profit exclusive, viewers, the Reserve Bank of India is likely to issue the updated list of upper layer NBFCs very soon. Sources tell NDTV Profit, and my colleague Piyush Shukla brings us more details on this exclusive story.
The RBI is likely to come out with the updated list of upper layer NBFC very, very soon. The list is likely to remain unchanged, and the RBI is yet to take a decision on Tata Sons deregistration plea, so it will likely remain in the upper layer list. And the RBI could also add certain government-backed NBFCs in the upper layer list. We are aware earlier this year the RBI had come out with classification norms for upper layer NBFC, and there they had said explicitly mentioned that NBFCs with over 1 lakh crore AUM and those who are backed by the government can also now enter the upper layer list. So the list is likely to remain unchanged, and we can see government-backed NBFCs coming in the upper layer list soon. And just a bit of context, Tata Sons had applied for a deregistration as a CIC with the RBI in March 2024. The RBI is yet to take a final call on this, and hence they will likely remain in the upper layer list.
Viewers, the first round of US-Iran negotiations to end the war has concluded with what mediators Qatar and Pakistan are calling encouraging progress. So a joint statement is saying that both sides have agreed on a roadmap to reach a final deal within 60 days. And talks in Switzerland were described as positive and constructive, with agreement on continued technical discussions and even political oversight through a high-level committee. And Iran is saying that major progress has also been made on ending the Lebanon conflict, and the deal also includes reopening of the Strait of Hormuz, which is also easing the oil export restrictions and also restoring safe passage for commercial shipping. And what did J.D. Vance say about the deal, and how did Israeli president react? Let's listen in.
Never before has the Iranian and American leadership met at such a high level. What the president has asked us to do is turn over a new leaf, to transform our relationship with the people of Iran and to extend an outstretched hand that says to the people of Iran that if your leadership is willing to give up being a driver of regional instability, if they are willing to give up nuclear weapons ambitions for the long term, then the United States is willing to fundamentally transform our relationship with that country.
We prevented Iran from carrying out a plan to annihilate us, and today they would have had a nuclear weapon, an atomic bomb to do so. We prevented that from happening. We removed an existential danger. And had we not acted in Operation Rising Line and then in Operation Roaring Line, Iran would have had atomic bombs, and let me tell you something, they would have used them. That's what we prevented.
Viewers, let's look at the crude prices. So they have cooled off sharply, with Brent slipping below the $80 per barrel mark, with also WTI hovering near $77 per barrel range. And the decline comes after mediators Qatar and Pakistan have said that the US and Iran have agreed on a roadmap which is aimed at reaching a final agreement within the next 60 days, also easing concerns over the supply disruptions from the Middle East. And the latest development has raised hopes of smoother oil flows and even a gradual return of Iranian crude to global markets, which is prompting, the traders to unwind some of the geopolitical risk premium that had built into prices. And however, markets remain cautious as the agreement is still an interim framework, and also its durability will depend on progress in negotiations over the coming weeks. Let's also listen in to what William Lee, who is the chief economist, Global Economic Advisors, has to say on the crude prices.
The oil markets are showing that there's a lot of bluster, but in fact things are improving. But let's remember, Brent was over 100 not too long ago, and the fact that it's come down and has stayed down despite the statements by President Trump and the posturing by the walkout of the Iranian negotiators, I think the oil markets are saying this is just a lot of talk and posturing for TV, and also for Iran's internal audience. And in fact, what we really are probably going to be seeing going forward is some resolution to the blockade and some resolution to the oil supplies.
Viewers, let's look at an exclusive news update that's coming in. Sources tell NDTV Profit that 10 to 12 fertilizer vessels have stranded near the Strait of Hormuz, have resumed the journey to India. We have my colleague Rishabh joining us with more details on this development.
What we're picking up from top official sources is the fact that there are a bunch of vessels, roughly 10 to 12, that were earlier stranded near the Strait of Hormuz due to the obvious tensions that are around that area. There's the constant open and shut of that very narrow, very important for commerce Strait of Hormuz. So roughly 10 to 12 of those vessels, which are a combination of Indian flag as well as foreign flag vessels, but all of their destination is India, is what we're picking up. All of them are now on their way to India. They're expected to arrive over the next 2 or 3 days. I also checked almost all fertilizer stocks were up and have been up for a bit. What we have also is the details of these 10 to 12 vessels. Now, roughly 8 of them are set to carry urea-based fertilizers. India is the largest consumer of those urea-based fertilizers, and roughly 4 of them are carrying DAP or related raw materials. So that's the breakdown that we have at this point in time in terms of what is entering into India. Now, remember why stocks are up is, of course, because India is the largest importer of fertilizers. The incoming Kharif season is going to be extremely important for the agriculture-based economy here in India. That is sort of what lifts up everything in terms of sentiment as well. And that's what we're picking up in terms of the sort of fertilizer stock that is set to come into India after the sort of tensions that we've seen weighing down on the entire petrochemical chain. So this is a relief for almost everyone in the sector. All farmers should be sort of happy. The government has also been able to procure these fertilizers so far, and that seems to be continuing with these vessels coming in.
Right. Thank you so much, Rishabh, for that. In fact, we are switching gears now. India and UAE are in fast-moving early-stage talks for BrahMos missile and Akash Tir air defense exports. This is reflecting Abu Dhabi's push to diversify beyond the US suppliers. And my colleague Hira is here with more details.
This is going to be interesting because BrahMos, we are just talking about UAE right now. In fact, last week, there were media reports also indicating that the deal with Vietnam for BrahMos is something which is nearing early stages in terms of closure. So both of these aspects will be the ones which will be positive. Now, if you talk about individual counters, there are multiple components to this. If you talk about the core component and subsystem suppliers, you have names like Data Patterns, Solar Industries, Premier Explosives, as well as Good Luck India and PTC Industries. These are the ones which stand to benefit on this aspect. Apart from that, if you talk about the electronics and integration partners as well, you have names like BEL, HAL and Bharat Dynamics, the bigger names that actually come to the foray as well, who get to benefit in terms of BrahMos. And very lastly, if you have to look at the structural material and the heavy engineering providers, you have names like Paras Defense as well as Jindal Stainless. These are the names that tend to benefit out of the BrahMos deal. Now, to add to this, you have Akshatveer also, which is coming in. Now, a similar set of companies that will benefit on that deal as well. But interestingly, it's two deals that you're talking about right now, Tamanna. One is Vietnam, which was announced last week, which is nearing closure. And today, you're talking about UAE as well. So I think defense stocks are set to fire on the back of the orders that could be coming in.
Right. Thank you so much, Hiral, for that. In fact, U.S. Trade Representative Jamieson Greer is set to visit New Delhi for talks aimed at giving the final touches to an interim India-U.S. trade deal. And Greer will hold discussions with Commerce and Industry Minister Piyush Goyal as both the sides work to resolve pending issues and even advance the first phase of the proposed BTA. Let's now watch a quick report on what this visit means.
The India-US trade deal is now entering its most crucial phase yet. A top American trade official is heading to New Delhi this week as both sides race to seal an interim agreement that could reshape one of the world's most important economic partnerships. US Trade Representative Jamieson Greer is expected to hold high-level talks with Commerce Minister Piyush Goyal with the focus on ironing out the final differences in the proposed interim pact. The visit comes after weeks of intense negotiations and follows a push from PM Modi and US President Donald Trump to fast-track a broader bilateral trade agreement. At stake is far more than just trade. The deal could open new markets, lower tariffs, boost exports and give Indian goods a crucial edge in the American market. Both countries have already reported significant progress, with top officials saying they're now working to close the remaining gaps. And the clock is ticking. Commerce Minister Piyush Goyal has said the first phase of the agreement could be ready as early as mid-July. If that happens, it could mark a major breakthrough in the India-US economic ties and set the stage for a much bigger trade deal in the months ahead. For now, all eyes are on New Delhi, where the next few days could help decide the future of a trade relationship worth hundreds of billions of dollars.
And in fact, a big political update from the UK. Keir Starmer has announced that he will step down as Prime Minister and Labour leader, admitting his party no longer believes that he is the right person to lead them into the next general election. Now, with this, Starmer becomes the 6th Prime Minister to exit in 10 years, calling the role the proudest moment of his life, and Starmer has reflected on rebuilding a party he once described as politically and financially broken. He said that he had heard the answer from colleagues and, accepts it with good grace. Starmer confirmed that he has informed the King and promised a smooth transition, pledging full support to his successor as he steps back to focus on his family. And let's listen in to what he had to say in his exit speech.
When I leave the biggest job in the country, I shall spend more time on the most important job, being the best husband I can to my fantastic wife Vic, who has been a rock by my side through good times and bad, and being the best dad I can to my beautiful children, who are my pride and my joy.
Viewers, days after Pentagon blacklisted Chinese firms with linkages to the Chinese military, China is hitting back with its own set of sweeping measures. And in the latest, China has barred 46 American companies from its government procurement market and even slapped an export control on 10 others. So the restrictions prohibit the Chinese exporters from supplying dual-use items to the affected firms, and rare earth mining companies like MP Materials, USA Rare Earth, and defense giants like Lockheed Martin and Boeing Defense are amongst those targeted. So the latest Chinese measures come after Washington's decision to expand its list of blacklisted Chinese companies alleged to have ties to China's military. In fact, the separatement of telecommunications has released draft rules for allocating spectrum to satellite communication companies, taking another step towards rolling out satellite-based internet services in India. So the proposed framework spells out who can get the satellite spectrum, the charges they may have to pay, and also the conditions that they will need to meet. So the draft rules, however, do not cover entities such as BSNL and MTNL. The move is expected to bring greater clarity to the satellite communications sector and as India prepares for wider adoption of space-based connectivity services. In fact, as Chinese smartphone maker Xiaomi is preparing to enter India's large home appliances market, Morgan Stanley believes that the competition is building up for domestic players. And my colleague Mahima is here with more details.
Xiaomi is entering India with its home appliances expansion, and this means that they're going to expand into ACs, refrigerators, washing machine, etc. So they're moving from the strategy of smartphone-led broader consumer growth to a broader electronic growth as well. Now, what does this mean for other consumer durable companies that are already into this game, right? This will, of course, definitely heighten competition for incumbents. Appliance entry is expected to, of course, intensify competition in the mid-market prices, and Xiaomi is known historically for its aggressive pricing approach, and that's how they break markets. And it's also strengthening its localization, manufacturing, and service infrastructure. So while it is negative for companies like LG, Whirlpool, Havells, Crompton, Blue Star, Voltas, etc., it turns out to be slightly positive for EMS players because Xiaomi is actively scouting for EMS players for setting up local manufacturing. So this is a positive read-through definitely for counters like Dixon, Amber, PG Electroplast, as well as EPAC Durable. Plus, they've kind of elevated India business to South Asian headquarter, and this signals that they are, they're giving it higher strategic importance, greater capital allocation, as well as faster decision making from the global headquarters. So this is the overall view of what this means for Indian listed, consumer players.
Thank you so much, Mahima, for that. In fact, viewers, West Bengal's newly elected BJP government has presented its full budget since coming to power, laying out an ambitious roadmap focused on welfare, job creation, industrial growth, and infrastructure development. Presenting the budget in the Assembly, Finance Minister Swapan Das Gupta has positioned it as a blueprint for Bengal's economic revival. Now, with a mega development push, the government has allocated 40,000 crore rupees for new initiatives, industrial policy, and even renewed efforts to attract private investment. My colleague Shreyashi is breaking down the budget announcements.
The West Bengal government budget under the BJP is a sharp shift in priorities with focus on governance, welfare and development with big ticket announcements. Of course, the focus being on women welfare and strengthening of their rights. From one hand, we have seen around 36,000 crores being allotted for the women welfare scheme, along with 33% reservation in government jobs for women. Apart from that, 1 lakh vacancies in government posts will be filled through recruitment process in a transparent manner that has been announced in this budget. Apart from that, of course, industry being a big focus for this government to restore the credibility of the state as well as the growth trajectory of West Bengal that had seen a sharp hit after the Trinamool Congress government took charge of this state. Apart from that, of course, the fiscal deficit is being kept under 3% GDSP here in West Bengal by the finance minister. Other than that, the state government has also proposed the creation of at least 5 new districts for proper governance and administrative reforms, as well as land records now that will be digitized and linked to Aadhaar directly to ensure that all the land that is being allotted for government and non-government work is kept in a proper manner. Of course, with the BJP government now taking charge and with just about 8 months left of this fiscal year, the DA announcement for government employees has come as a big relief for those who have been waiting for this announcement. From the 18% from the previous government, it has now been hiked to 20%.
Viewers, looking at another story that's coming in. A fire has broke out at a 3-story commercial building in Lucknow, triggering a major emergency response. The incident has occurred at a coaching center in the Aliganj area, with reports of rescue and relief operations being carried out at its site. And Uttar Pradesh Chief Minister Yogi Adityanath has taken cognizance of the situation and even directed the officials to rush to the spot immediately. And he has ordered the acceleration of rescue efforts, ensured proper medical treatment for the injured, and asked the administration to maintain strict vigilance while continuously monitoring relief operations. And viewers, an explosion has been reported at a facility in Qatar's Ras Laffan industrial city, which is one of the world's largest energy and LNG hubs. Now, Qatar Energy has described the event as an operational incident that occurred during the startup phase of operations, triggering a fire at the facility. Now, emergency response teams were deployed immediately, and authorities are saying that the blaze has now been brought under control. And Ras Laffan plays a critical role in Qatar's natural gas and LNG exports, making it a strategically important energy complex. With that, viewers, it's a wrap on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, as we decode new companies which come on the horizon, be it small cap, mid cap, and today also I've got you a very interesting company. But guess करने का कोशिश करिए. And it's a very interesting company. I have studied this. Surat-based pharma company छे. Interesting, but there are some more hints to it. It's the owner of the brand Dava India. I must have seen it across the stores in cities and towns as well. And another hint I would like to give you is it's backed by 3P India and Singularity Fund. That is Madhu Kela and Prashant Jain, astute investors of the market. They have backed this company. The stock has also gone up 25% from March lows. Guess करने का कोशिश करिए कंपनी का नाम क्या है. The company in focus, Surat-based pharma company, is Zota Healthcare. This is the company which we are going to talk about. But why are we talking about this company? That's the big question. The questions, answers, we'll try to get it from the management. The first question is, they have achieved EBITDA positivity in FY26. पहले इन्होंने कहा था कि FY27 में करेंगे. तो एग्जीक्यूशन अच्छा हुआ तो एक साल पहले ही they have received the EBITDA positivity. But of course the company has come out with a cautionary statement also in the fourth quarter. They have stated that the company is slowing down expansion over the next 2 quarters. Why? We need to understand that. Also, the Coco stores, they are achieving break even in 15 months versus 18 to 24 months. Coco is a very interesting story. Coco is of course company owned, company operated stores. We'll get to that. But also another question is Dava India. What are the expansion plans? 2500 से ज़्यादा stores already जो है, we have seen that for the company. We'll try to understand a little bit more. And the question remains is margin outlook now versus the future. Remember, ये single digit वाला margin का play वाला business है. So we'll try to understand, does it change? Also the business outlook over the next 3 years, how things pan out. So we need to see things at a longer perspective for our analysis for this company, and these are the important questions which we'll be asking the management. Himanshu Muktilal Zota, he's of course one of the promoters in the company at Zota Healthcare. तो ये तो आज शो में क्या क्या होगा उस पर हम फोकस करेंगे, बट कंपनी क्या करती है, दैट्स द मोस्ट इंपॉर्टेंट क्वेश्चन, और कंपनी में फायदा कहाँ बनेगा. दैट्स व्हाई आई एम हियर एट KYC टू गिव यू दैट क्लैरिटी. It's a Surat-based pharma company and it was incorporated in the year 2000. If you look at more details, it's into pharma, Ayurveda, nutraceutical and OTC products. What's the product distribution? I'll get back to you on that in a while. Now, of course, the company sources directly from the manufacturers and sells straight to the consumers. यानी कि बड़ा retailer नहीं है, there is no big distributor. So this is where the company's dhanda business model is there. Interestingly, two large astute investors are there. 3P India's Prashant Jain has invested in the company, and Madhu Kela, promoted at NTT, which is Singularity Fund, they are backing this company. Interesting, right? Also, the marketing, export and the retail pharmacy chain, these are the main division. Of course, Dawa India is the brand. If you are, on a daily basis, if you deal with this company, it's a generic pharma chain and it has roughly 2600 stores. Generic मतलब जो सस्ते दवाई होते हैं, of course for the masses, so they cater to the masses, and of course इसमें margin जो है छोटा रहता है. Also they've started getting the brand ambassadors. जब हम masses की बात करते हैं, so look at that, Akshay Kumar, Sunil Shetty and now MS Dhoni, all of them are there. So that's pretty interesting for a 4500 crore market cap company as well. But let's move on to the other side of the story. What are the terms to know? जब आप ये सब companies को एनालाइज करते हैं तो कोको मीन्स व्हाट. कोको इज कंपनी ओन्ड, कंपनी ऑपरेटेड. नोट डाउन कर लीजिए अगर आप फर्स्ट टाइम एनालिस्ट हैं. लेट्स लुक एट द अदर एब्रीविएशन फोको. इट इज फ्रेंचाइज ओन्ड, कंपनी ऑपरेटेड. ये थोड़ा सा एसेट लाइट रहता है. सो दिस इज ऑल्सो प्रिटी मच देयर, बट देयर इज अ मिक्स ऑफ बोथ ऑफ दीज टाइप ऑफ स्टोर्स व्हेन यू एनालाइज अ कंपनी लाइक Zota Healthcare. What are the store additions? This is very much important. Coco Fofo, we have given you both the definitions, so bar I won't repeat. Around 804 store additions came in FY26. Totally 1000 of them has come. So the company is expanding a lot, and when the company expands, there will be a little bit of pressure on the return ratios. But how does the revenue breakup look like? 77% of the revenue comes from Dawa India, but if you break it down, there are other segments also which you should be tracking. The domestic segment is roughly 13%. Exports is quite less, it's around 3%. Everyday herbal group, that's where they're trying to develop more, is just 3%, and other segments comes in at 1%. Also the product portfolio, how things happen here. This is the chronic product. The chronic product portfolio is something where the customer stickiness is very much there, and it's a repeat customer बहुत आते हैं. तो ये धंधे में repeat customer बहुत आपको दिखने मिलेगा. OTC is nothing but over the counter products होते हैं, largely generic में रहते हैं, so उतना subscription नहीं लगता है. This is how I simplify it for you for a technical company like Zota Healthcare. But what may work for the company? There are some points which I have analyzed and I have sorted it for you. Faster than anticipated path to profitability. And this is where the market is trying to give a premium to this company. It's backed by strong, astute investors. कोई बड़े FIs नहीं है, but they also have increased their stake, so that's pretty much interesting. Also, they're improving their store level economics. SSG growth हुआ या mature stores आ रहे हैं, and when this starts happening, the numbers start showing well. Margins, path to profitability, and look at that average wallet spend. जो generic pharmacy का धंधा है, that average wallet spend per customer, that is going. And that is where a customer stickiness is also coming in. So a lot of engines are firing very positively for the company. What may not work? There is the other side of the coin also, which we get you for the company in KYC, the pressure on return ratios amidst this expansion. तो अगर expand बड़ा कर रहे हैं तो कभी कभी balance sheet में pressure आता है, working capital ratios में pressure आता है. That's where a little bit of concern comes in. But remember, it's a low margin business at the end of the day. Company needs to show higher volumes. That is how you analyze companies like this. But to get in more perspective, we have our KYC ratings also, like income statement, balance sheet, cash flow. All these are the necessary parameters where we judge a company in KYC. This of course includes return ratio, shareholding pattern, what has moved, what hasn't, how much money has the company made for the investors. Valuations, we'll try to get it from its historical number, how things actually pan out for this company, and also the outlook. We'll try to figure out what the overall outlook suggests for the company. But let's go for the first rating, what's happening here, and that is the income statement. In our income statement, largely the top line growth is something you should be watching out for. I'll come back. on the EBITDA and the profitability front. 3-year CAGR is 100%. So the growth is looking a J curve hockey stick. But if you look at it, the path to profitability, that's the big question coming in. But company had stated that they have achieved the EBITDA profitability 1 year before the expectations. So both sides is pretty interesting to look at. Also, apart from the income statement, if you look at how the things have moved, that's been largely neutral, but balance sheet is strong. The borrowing levels, it's largely debt-free. And remember, the working capital, that's very high. And because of that, they recently did a QIP also of 350 crore rupees. Usse kya hua? Promoter ka stake dilute hua. But overall, working capital issues, that gets sorted. So right now, the balance sheet management is strong. 96 crore is in the cash balance also. And they haven't deployed everything yet. And that's why they are lowering their expansion plans, at least for the next 2 quarters. It's a strong thumbs up for the balance sheet. Let's talk about the cash flow. What happens here? Cash flow largely is, we could say, is pretty decent. There's a little bit of pressure coming in because of the expansion. That's why, there are mixed cues coming in our analysis. There seems to be a good cash flow in FY26. And remember, QIP proceeds also come in. So it's better not to judge the company right now, because I feel it's still a work in progress in the change in the model and the way its path to profitability is coming in. So it's a neutral rating when it comes to the cash flow segment. Let's talk about the shareholding. What's happening here? And largely we see the shareholding that has seen a dip here. This is of course coming in because of the fundraisers which were happening. FIs, DIs were 0% in March 2024. But look at the exposure coming in. 3P India, Singularity Fund, all the large players, astute investors leading these entities have taken stakes. 8% for FIs, DIs it's 6%. So this is where we see the institutional participation coming in, giving a validation to the company's story. So it's a thumbs up when it comes to the shareholding segment. Also, apart from the shareholding, let's talk about the other key criteria. If you could get in the return ratios, which I had pointed out, that was a little bit of problem. We'll get to that as well. But from March lows, the stock is up 25%. From 2025 highs, it's still down 23%. But for 1 year, stock has given 40% return. Last 5 years, it is 7x. So of course, congratulations if you are a long-term investor, and I have given this a strong thumbs up as well. Okay, so let's talk about the return ratios. I had mentioned you earlier about the return ratios, also how things actually pan out. But return ratios, look at that. FY22 it was 15, but the company started expanding. And when the company expands, higher working capital comes, and you see all of them giving a pressure. But company जिस तरह EBITDA profitability लाएगी, जिस तरह PAT profitability आएगा, then these reverse also. And during bad times, smart money also comes. So I'm going to give this on the past data a thumbs down when it comes to the ROC numbers. Valuations, let's have a look at it, what things pan out. Nirmal Bang tracks this. They are getting very bullish on this counter as well. The EV EBITDA multiple, of course, these numbers are pretty high because the company is going for that EBITDA profitability. But look at that. It's around coming at around FY28 numbers at 23 times. That is where I feel like, on a forward basis, the stock is quite cheap. That's why I'm going to give this valuations a thumbs up. But apart from valuations, what does the outlook suggest? And that is where, we try to understand the long-term vision of reaching 5,000 Dawa India stores by FY29. That's the first outlook coming in. PAT level profitability, it can come by the end of FY27, or it can be pushed to the first quarter of FY28 as well. And the mature store growth, when that starts coming in, then your unit economics of your stores start increasing. Payback period bhi jo hai, अब कह सकते हैं कि कम हो गया है. They are moderating the pace of expansion for the next 2 quarters because there has been, a good expansion already, and there might be a little bit of pressure on the books, and that is why a conservative approach is coming in from the promoters and the company. But net, the outlook looks very strong. So I've given this a thumbs up. But let's give you the entire picture of this company, the KYC ratings for Zota Healthcare. It's a very interesting company. And let's see what has happened. Income statement has been neutral. My concern remains for the return ratio because they're expanding very heavily. Balance sheet has been managed very nicely. The long-term debt is not there so much. There was a QIP fundraise also. Let's pull out the other ratings also to give you what the picture is all about. Shareholding of good astute investors, FIs, DIs coming in. It has all made 7x returns to the investor the last 5 years. Valuations, the FY28, they look compelling, and the outlook also shows a good strength. So let's give in the entire picture for Zota Healthcare, and it comes in at 6 out of 8. One of the higher numbers of the average KYC show ratings we give for this company. So it's a pretty interesting story, but we need to understand what else is there which fuels the company, or is there any drag also in the short term. And let's get in the speakers. His Himanshu Muktilal Zota is the promoter and whole-time director. An interesting tidbit about Himanshu as well. He has been associated since the inception of the company. He has a diploma in pharmacy from Board of Technical Examinations, and also I'd like to point out almost a 3-decade experience is coming in at play. So we'll try to understand the entire story about it and how, you know, the management has moved their business models from the inception till now. And joining us, we have Himanshu Muktilal Zota. Is the promoter and whole-time director at Zota Healthcare. Good afternoon, Himanshu bhai. It's always a pleasure to have you at NDTV Profit. And there's a lot of bullishness coming in your counter. I just wanted to understand, आपकी जो profitability थी FY27 में ही आ गई, बात थी कि FY27 में आने थी, FY26 में EBITDA profitability आ गई. कैसे हुआ ये?
ये रिस्पॉन्स सिंस लास्ट 2 साल से जेनरिक अवेयरनेस काफी चेंज हुई है. हमारे माननीय प्रधानमंत्री नरेंद्र मोदी जी भी काफी मेहनत कर रहे हैं जेनरिक अवेयरनेस के लिए, और सिंस लास्ट 2 साल में जो जेनरिक का ट्रेंड बढ़ा है, लोगों को एक्सेप्टेंस और जेनरिक के लिए जो एक्सेप्टेंस बढ़ा है, उसके कारण हम जो थॉट प्रोसेस था हमारे दिमाग में कि 27 तक ये प्रॉफिटेबली आएगी, वो अर्ली आ गई. मतलब सेल्स अच्छा आ रहा है, एक्सेप्टेंस अच्छा है जेनरिक का, फुटफॉल अच्छा आ रहा है, और इसी की वजह से ये चेंजेस हुए.
राइट. हिमांशु भाई, अपार्ट फ्रॉम दिस, व्हाट्स द ग्रोथ आउटलुक लुकिंग लाइक, यू नो, फॉर FY27? मार्जिन पे आपका धंधा सिंगल डिजिट मार्जिन पे चलता है, ये कैसे चेंज होगा, या ऐसा ही धंधा रहेगा, आप वॉल्यूम पे ज्यादा फोकस करेंगे? वी जस्ट वांट टू अंडरस्टैंड द एंटायर FY27 आउटलुक. ये साल अब क्या होगा?
एज सच ये साल में हम फॉर एग्जांपल लास्ट ईयर हम रफली कैश नेगेटिव पे थे. मतलब रफली 45 करोड़ समथिंग कंसोल लेवल पे कैश नेगेटिव पे थे हम. तो करंट ईयर में वी आर एक्सपेक्टिंग कि ये ऑलमोस्ट ये कैश नेगेटिव ऑलमोस्ट 0 हो जाएगा पीबीटी लेवल पे. और अगले 2-3 साल में जैसे जैसे हमारा बिजनेस बढ़ता जा रहा है, क्योंकि हमारा जो SSG है, सेम स्टोर ग्रोथ, आपने देखा होगा कि सेम स्टोर ग्रोथ काफी अच्छा है. मतलब अगर मैं मैच्योर स्टोर की बात करूं, जो 3 से 4 साल पुराना स्टोर है, वहां पे भी 20 से 25% के बीच में SSG आ रहा है. तो 2 इयर्स वाले स्टोर है, वहां पे तो 40-50% का सेम स्टोर ग्रोथ आ रहा है. सो ये प्रॉफिटेबिलिटी यहाँ से ही आई है, और ये कंटिन्यूसली ग्रोथ अगले 2-3 साल में ये काफी चेंज ओवर होगा और काफी टर्न अराउंड होगा.
ओके, ये तो हम समझ में आ गया. लेकिन हिमांशु भाई, आपसे सवाल पूछना है कि 4th क्वार्टर में आपने एक बहुत इंपॉर्टेंट बात कही थी कि हमारी जो एक्सपेंशन है, आप एक्सपेंशन तो बहुत स्ट्रॉन्ग करें, लेकिन अगले 2 क्वार्टर अपनी एक्सपेंशन को आप थोड़ा सा कम करेंगे. ऐसा क्यों करेंगे, और इससे कुछ फायदा आएगा क्या रिटर्न रेशियो में? क्योंकि रिटर्न रेशियोज में बहुत दबाव है, आपके ROC थोड़े नेगेटिव है, क्योंकि आप बहुत ज़्यादा एक्सपेंड शायद जल्दी कर रहे हैं. तो क्यों आप कर रहे हैं अगले 2 क्वार्टर पे, हल्का क्यों रहेंगे एक्सपेंशन पे? व्हाट्स द रीजन फॉर इट सर?
या सो मेजरली हमारा जो 2 क्वार्टर थोड़ा सा स्लो डाउन, हमको बंद नहीं करना था, थोड़ा सा स्लो डाउन करना था. और स्लो डाउन करने का थोड़ा सा ये रीजन था कि हम कंटिन्यूसली लास्ट 8 क्वार्टर से हम कंटिन्यूसली ग्रोथ कर रहे हैं, क्योंकि लास्ट ईयर भी हमने 800 स्टोर खोले और उसके अगले साल भी हमने 600 स्टोर खोले. तो ये 1400-1500 स्टोर हमने लास्ट 2 साल में खोले. समवेयर अबाउट 200 स्टोर का हम 1650 कोको स्टोर पे पहुंच गए. मतलब ऑलमोस्ट 10x स्टोर हमने बढ़ाया सिंस लास्ट 2 साल में. तो हम ये चाहते थे कि 1 या 2 क्वार्टर थोड़ा सा स्लो डाउन करें, हम बैकएंड को पूरा स्ट्रॉन्ग करें, और अगले जो माइलस्टोन है, अगला जो हमारा जो ग्रोथ स्टोरी है, उसको अगेंस्ट बैकएंड पूरा स्ट्रॉन्ग कर दे, ताकि हमारा जो भी इन प्रोसेस स्टोर था वो 0 हो जाए, थोड़ा सा प्रॉफिटेबिलिटी बिल्ड हो. क्योंकि 1 या 2 क्वार्टर में अगर स्लो डाउन कर लूंगा तो मेरा प्रॉफिटेबिलिटी बिल्ड होगा. मतलब तो 2-3 रीजन था. एक तो मेरा बैकएंड थोड़ा सा स्ट्रॉन्ग करना था मुझे, क्योंकि मुझे सप्लाई चेन, हमने जैसे अभी सूरत में है, एक सेकंड सप्लाई चेन हमने दिल्ली में, हरियाणा में अभी रिसेंट में स्टार्ट किया. तो ये सब स्ट्रीमलाइन करने के लिए और बैकएंड को स्ट्रॉन्ग करने के लिए हम थोड़ा सा स्लो डाउन कर रहे हैं. हालांकि हम इस साल में नंबर ऑफ स्टोर तो उतना ही खोल रहे जो हमारा टारगेट था। हम क्या कर रहे हैं, पहले क्वार्टर में और थर्ड और फोर्थ क्वार्टर में खोल रहे हैं, सेकंड क्वार्टर थोड़ा सा स्लो डाउन कर रहे हैं, लेकिन जो पूरे साल का जो हमारा टारगेट था समवेयर अबाउट 600 to 700 स्टोर, वो इंटैक्ट है, मतलब वो हम खोल ही देंगे इस साल।
जी बिल्कुल, तो पूरे साल का जो ग्रोथ स्टोरी है वो इंटैक्ट है, लेकिन अभी 1-2 क्वार्टर में जो है थोड़ी सी जो है स्ट्रैटेजी आप चेंज कर रहे हैं। लेकिन 350 करोड़ का एक QIP फंड रेज भी किए थे, उसका एप्लीकेशन आप कहाँ कर रहे हैं? एक्सपेंशन में ही कर रहे हैं, वर्किंग कैपिटल में कर रहे हैं, या कुछ एक्विजिशन भी सोच रहे हैं, कुछ लोकल ब्रांड खरीदें?
नहीं, ये प्योरली मेजरली इसमें से 90% जो फंड है वो एलोकेशन होगा सिर्फ और सिर्फ दवा इंडिया में, जिससे हम नया स्टोर भी खोल रहे हैं और एग्जिस्टिंग स्टोर में जो वर्किंग कैपिटल चाहिए दोनों यहाँ से फुलफिल कर रहे हैं। तो ये 350 करोड़ से रफली 1300 से 1500 स्टोर खुल जाएंगे अगले 2 साल में, करंट ईयर और नेक्स्ट फाइनेंशियल ईयर। और ये हम कंफर्टेबली करंट ईयर और नेक्स्ट फाइनेंशियल ईयर में 1300 से 1500 कोको स्टोर हम खोल देंगे।
तो 1300 से 1500 स्टोर्स जो है कोको स्टोर वो खोलेंगे। दर्शकों को बता दूं कि कोको मींस कंपनी ओन्ड, कंपनी ऑपरेटेड। लेकिन एक बार हमारे दर्शकों को आप बताइए कि कोको और फोको में क्या फ़र्क होता है, और एसेट लाइट मॉडल कौन सा रहता है, और आपकी कंपनी की स्ट्रैटेजी क्या रहेगी कोको और फोको के कहेंगे कोको और फोको की एक्सपेंशन को लेके?
हमने इनिशियल फर्स्ट 2017 में जब हमने दवा इंडिया स्टार्ट किया था, तो फर्स्ट 3 से 4 साल हमने सिर्फ फ्रेंचाइजी स्टोर ही खोले थे, फोफो स्टोर ही खोले थे, जो कि कंप्लीटली एसेट लाइट मॉडल है, क्योंकि फोफो में हमारा इन्वेस्टमेंट कुछ भी नहीं है, जो फ्रेंचाइजी ओनर है वही इन्वेस्ट करता है पूरा का पूरा, और हम सिर्फ सप्लाई करते हैं। और कोको स्टोर है, वहां पे पूरा कैपेक्स हमारा लगता है, इवन ऑपरेटिंग एक्सपेंसेस, रेंट वगैरह या मैन पावर कॉस्ट भी हमारी लगती है। लेकिन दोनों में डिफरेंस ये कि कोको में कंट्रोल अच्छा रहता है, हमारे कस्टमर को जो मिलना चाहिए प्रोडक्ट वो प्रॉपरली मिलती है, और प्रॉफिटेबिलिटी कोको में काफी अच्छी है। सिंस हमने 2-3 साल में देखा है कि कोको में हमारा जो ग्रॉस प्रॉफिट मार्जिन इज मोर देन 65%, जो कि फ्रेंचाइजी स्टोर में हमारा अवर मार्जिन विल बी समवेयर अबाउट 40%। और हमारा फोकस भी यही है कि हम नेक्स्ट 3 इयर्स में हम 80% कोको ही करेंगे और 20-25% हम सिर्फ फोफो करेंगे।
ठीक है,
80 और करने का भी एक रीजन था कि फोफो में कंट्रोलिंग नहीं है, वो बाहर की प्रोडक्ट लाके बेच सकता है, वो और कोई प्रोडक्ट लाके बेच सकता है जहां मेरा ब्रांड डैमेज होता है। और ये सब देखने के बाद हमने कोको पे ही ज्यादा फोकस किया, और हमारा फोकस भी इसलिए कोको ही है।
जी बिल्कुल, तो ये फोकस तो आपने बता दिया कि अपने ब्रांड को डाइल्यूट नहीं करेंगे, लेकिन दोनों को जोड़ देते हैं, मार्जिन का क्या आउटलुक रहेगा? सवाल सब बोलते हैं कि अरे ये तो 5% से नीचे का मार्जिन का धंधा है, इस धंधे में हम एक्चुअल मार्जिन का बेनिफिट कब देखेंगे? 2-3 साल में देखेंगे, और अगर देखते हैं तो सोचिए 3 साल बाद आपकी कंपनी की मार्जिन क्या 9-10% की होगी? कैसा रहेगा ये धंधा?
अगर मैं मार्जिन की बात करूं तो जो हमारे कोको स्टोर है, फॉर एग्जांपल जो भी हमारे 4 साल पुराने कोको स्टोर है, वो स्टोर लेवल एबिटा विल बी मोर देन 35%, मतलब तो ये 4-5% का गेम ही नहीं है। लेकिन इसको मैच्योर होने में जो भी 3 से 5 साल लगता है, नॉर्मली स्टोर को मैच्योर होने में 3 to 5 years लगते हैं कंप्लीट मैच्योर होने में। तो ये मैच्योर होने के बाद फॉर एग्जांपल अगर आज 27 में खड़े हैं और मैं अगर 30 और 31 की बात करूं, तो मैच्योर लेवल पे एट सारे स्टोर हमारे जब उस लेवल पे पहुंच जाएंगे, तब ये EBITDA मार्जिन विल समवेयर अबाउट मोर देन 20-25%।
बिल्कुल, एंड ऑफ कोर्स कोको का ब्रेक इवन भी आप देखें तो 15 महीना में हो रहा है, और आप पहले 24 महीना था, तो धंधा भी इवॉल्व हो रहा है, मार्जिन्स भी इवॉल्व हो रहा है, और कंपनी भी देखें तो एक इवॉल्व हो रही है कंपनी, एंड ऑफ कोर्स मार्केट विल स्लोली ट्राई टू अंडरस्टैंड दैट एज वेल। बट हिमांशु भाई, बहुत अच्छा लगा आपसे बात करके, और आपने पूरा बिजनेस मॉडल समझाया, आगे क्या होगी कंपनी में उस पर भी आपने जो है बहुत विशेष टिप्पणी दी। धन्यवाद, एंड बेस्ट ऑफ लक फॉर द फ्यूचर सर।
Thank you so much.
So that's the management speaking about the growth, the way the business model is changing, margins are there, and interestingly, smart money is already invested. Of course, the stock has given multi-bagger returns, but the valuations, the brokerages feel is still cheap right now. Interesting story, right? So for more of this, stay tuned to KYC, and yes, keep watching NDTV Profit.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Presented by Suzlon. Good energies that work.
Welcome to Your Money Matters. Of course, you're watching NDTV Profit, and this is a show where we talk about personal finance and what matters for your money. Today, we are going to talk about two very, very different topics, but very interesting ones. First one is that, how much money should you generally have in your bank accounts? And the second one that we're going to touch upon is the two new recent small cap mutual funds that have come in. One is, of course, Helio small cap, and the second one is Abacus. What is the difference between the strategies? Which one should you probably look forward to, because they are fairly recently new? All of those things we're going to talk about in the next segment. But the first one, as to how much money should you genuinely hold in your bank account to make sure that there's a balance between having money enough in your bank account during emergencies, but at the same time to make sure that it's not lying idle in your bank account and you are making money off it as well. So to take this conversation ahead, we're joined by Vishal Dhawan, who's the founder and CEO of Plan Ahead Wealth Advisors, joining us now. Vishal, thank you so much for taking out the time. I think I'll start by asking you with regards to if there is a thumb rule what should be the amount of cash that one should keep in their savings account. If there's a thumb rule, what does it look like?
So I think it's a place where I think a lot of customization needs to happen, and I think there are 2 or 3 different variables that people need to keep in mind. Number one is, how many bank accounts do they actually have? Because what we invariably find is that people tend to have more bank accounts than they actually need. A lot of people who are salaried, for example, tend to open salary accounts which keep changing as they move across employers. But the bank accounts don't actually close. So what ends up happening is they have a primary bank account that tends to get the salary credit. And then they have these other bank accounts which tend to have some balances lying around for different reasons. So that's number one. Number two is, how many members in the family are actually earning and therefore supporting expenses for the family. So what you will typically find is that in double income families, there may be incomes coming in both from husband and wife.
Correct.
And each of them is maintaining a certain type of balances in their account. And it's not necessary that the two are in sync with each other, because sometimes their finances itself are not integrated, or even if they're integrated, each of them likes to see a certain amount of money, which gives them psychological comfort, always showing up in their bank. The third element which we need to keep in mind is that, there is a lot of risk in leaving money lying in banks unattended today, simply because of the fact that there is a lot of challenges around security of OTPs and a lot of other things that also come into play.
Yeah.
And we read about this every single day, where someone is losing money because they ended up doing a wrong UPI transaction or did something which was not supposed to be done. So I would say that, a lot of these factors will come into play, but fundamentally a good thumb rule to use is to say that about 30 days of my expenses, which means roughly about a month of my expenses, I can leave in my savings account, even though that may not be equal to my emergency fund or my contingency fund, which needs to be much larger. Of my entire requirement, roughly about a month of it lies in my savings account, so that any expense needs, which are normal expense needs, my ECS payments, my UPI payments, etc., can happen comfortably without me feeling constrained.
Perfect. And you very aptly put, the 4 different pointers that you did, Vishal, and we'll talk about each one of them individually as well. But sticking to the part where you said that, this is irrespective of the emergency fund. A lot of people, even today, do not realize that emergency fund of 3 to 6 months that we've generally talked about need not be in your savings account, right? It could be a part of, a short-term duration fund that you put in, or a very liquid fund that you can put your money in, so that it's not just lying idle in your bank account, but it also grows at the same time. So that's the one part of my question, that firstly, to make people aware as to how they should bifurcate these two terms. And the second one, do you think the 3 to 6 months rule now in India is outdated, considering that we've seen so much inflation, plus like you said, now there are families where there are 2 income earners. So do you think that there is a change in that 3 to 6 months rule?
So I think I'll take the second one first. So I think it's very important to understand, the design of income flows for families. So let's say if there's an entrepreneur, a lot of times his or her income flow itself may be a little uncertain, or as the economy sees more and more gig sort of assignments and consulting assignments come into play, the way that inflows itself happen may not end up being at a fixed level every month. Now, for a lot of these types of individuals, the amount of money that they may need in a contingency or emergency fund mode may end up being closer to 12 months rather than 3 to 6 months, because of this variability in income itself. The second is that there is a very large number of such people who are either salaried or who run businesses, who also have loans that they have taken. And what ends up happening is their ability to service a loan is something that they need to keep top of mind when they're making this decision around emergency provisioning, because if there is a delay in salaries coming in for some reason, or some cash flows which get mismatched, you still have no flexibility on your payment for your EMIs. And therefore, I would say that for anyone who's got an EMI going, by default, if let us say they were planning to keep a 3-month buffer as an emergency fund, they may need to keep a 3-month buffer plus a 6-month of EMI buffer that they are calculating. If they were going to keep a 6-month buffer, they may want to keep a 6-month buffer plus a 12-month EMI that is coming through. So it's very important to understand the sources of income that you get.
Correct.
How predictable are they? And obviously, if there are 2 incomes coming in, then it helps. Because what may happen is, even if one income stops for some reason, the second income will hopefully continue. So I think those families can afford to be a little bit more flexible with their contingency and emergency needs as compared to other families. One important other parameter to keep in mind here is what is the kind of health insurance that you already have access to, and if there are dependencies of people who are, for example, senior citizens who may need to be supported in case there is a medical emergency, because in that case, the contingency fund requirement may also be larger, because you may need to draw down on this contingency fund in case there is some medical situation. Now, coming to the options in terms of how to build this emergency fund, the critical thing for people to keep in mind, and you pointed out to high inflation, which is the reality, is that in a savings account, normally you will earn anywhere between 2.5% to 4% per annum. Inflation itself is a higher number than that. And therefore, as you keep your money liquid in a savings account, you actually end up losing the real value of money on an ongoing basis. So what tends to be a good set of things to look at for individuals is, number one, they can look at what are called sweep fixed deposit accounts or flexi fixed deposit accounts, where the money can automatically sweep into a fixed deposit above a certain threshold. And if there is a requirement of money, it automatically sweeps back.
Correct.
The advantage of that is that it's very easy to use. The disadvantage is that it may end up meaning that people end up spending more than they actually should be spending because there is no control on that flow of money. In contrast, they might decide to go to a liquid fund or a money market fund or a arbitrage fund, depending on their tax bracket, and look to keep the balance amount of money there. Because in case there is a requirement of money there, it's still available within a 1 day working day or a 2 working day basis. But you get a rate of return which at least matches or beats inflation to a small extent. And therefore, you're protected against inflation as well the moment you do that.
This reminds me of the fact that people also a lot of times don't understand, because you did mention, right, that if you change your job, you probably open a new account and you forget that there's some balance lying in your previous account as well. And a lot of times, people end up having multiple bank accounts. But in my opinion, and you can correct me here, is that ideally anybody should have 3 types of bank account. 3 bank account. One, which is of course where your salary comes in. Second account is where you, as soon as your salary gets credited, you send that particular amount that you want to invest in the next bank account. And third, if you are married, there has to be a joint account from which you make these joint expenditures. This is what my understanding is. How would you put this into perspective? How many bank accounts should one hold?
So I think it's a good idea to have 3 of them.
Yeah.
In the case of certain families, they may decide to just have 2 instead of having 3. But in any case, our belief is that between 2 and 3 is the maximum that's needed. Beyond that is not necessary. I think one of the good ideas to do is to distribute those bank accounts, if you're having 2 or 3, into different banks so that anything which sort of causes a challenge with one particular bank or your login in one particular bank or any of that does not mean that your cash flow gets completely hindered because all your access goes away at the same time. So I think there are 2 levels of control. One is the number of bank accounts. The second is the number of banks itself. And trying to distribute to more than one bank, these 2 or 3 bank accounts works well.
Fair. Okay, Vishal, thank you so much for taking on the time and helping us decode this entire topic. I'm sure our viewers have a good takeaway and understanding of what they should do now with their bank account. So thank you so much for taking on the time.
Thank you so much for having me over.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
So we spoke about how to manage your bank accounts and how much money should you actually have in your savings account and what should you do with the surplus. But the next one is also a very interesting one. We're going to try to compare the 2 new recent small cap mutual funds. One is Abacus and the other one is Helios. And, to take this conversation ahead and to understand what the different strategies are for both of these and what is the enthusiasm around for both of these, we're now joined by Santosh Joseph, who's the founder founder of Germinate Investor Services, joining us now. Santosh, always a pleasure speaking with you, and thank you so much for taking out the time. I'll start by asking you the first question. The starking difference for me was that both of these have a very different approach when it comes to their cash levels. While one is, invested with most of its money, the other one is almost sitting on a 13% of cash. Just want to get a sense of, as to what is the different strategies for both of these funds, because a lot of investors right now are, enthused about both of these new small cap names on the street.
Yes, I think it's an interesting mix of comparing these two names.
Yeah.
From a hindsight perspective, both of them are newer AMCs. Both of them have launched their small cap fund in the recent past. In fact, Abacus is a lot more newer than even Helios is. Helios was in November of 2025 and Abacus started in March of 2026. Now, both the fund sizes are also very similar, but that's where the similarity ends and the dispersion of both of them being unique begins. So in this comparative study, I don't think we should figure out what are the challenges, but we should figure out what are the great opportunities that investors can look out for. To begin with, Abacus is a slightly concentrated portfolio compared to Helios. Helios is a little more broad-based. I mean, Abacus has got a little over 60 stocks, whereas Helios has got over 80 stocks. Now, clearly shows that Abacus is going for the concentrated bet, cash holding, and interestingly, a small percentage even in large cap. Whereas in Helios, you've got a broad list of securities, a little more broader expression in weight, and no large cap exposure. So clearly, you're seeing that Helios is going active elimination, which is largely their style, and Abacus is going for active selection and conviction, which is also their unique style.
Got it. Interesting. So one is more aggressive than the other is how you can put it. Both of these funds, like you mentioned, right, are at a very early stage, right? And they've not seen a full market cycle. So if somebody is kind of evaluating getting into one of these funds, what should be the approach?
So the good thing is both the funds are slightly over 1,000 crores, extremely great to start off in these small cap funds at small sizes, because we know specifically in small cap funds, the size does have an impact on the future performance. Not necessarily that they guarantee you performance, but the ability and the potential to generate a slightly better alpha than the small cap index in itself. Number one. Number two, both the portfolios, rather than being comparative, the complementary sense is that none of the top 10 holdings of these two portfolios are unique. That means in both the portfolios, the top 10 stocks are extremely different and diversified. Now, for an investor looking at small cap per se, when you look at these two portfolios, ideally, you shouldn't worry about picking one over another. If it permits, you are better off by selecting both, because even when I did a complete portfolio level, just about 10% of the portfolio is common, both in terms of percentage and even in terms of stock exposure. So for an investor, you are actually spoiled for choice. You have two great funds with different ideologies and strategies, and the spot is sweet with 1,000 crore plus AUM. I think you should go for both of it.
Interesting. That was going to be my next question, because like you mentioned, right, the top 10 holdings do not have anything in common, plus there's just a 10% overlap. So would you really recommend investing in both of these? And if yes, what should be the proportion that one should consider?
Yeah, so apart from top 10 holding, I'd also like to highlight even in terms of sectoral view.
Okay.
For example, Abacus has bet largely on financials, whereas the guys at Helios have gone for industrial and capital goods. The only two common in the top 5 sectors are, I think, healthcare and financials. Again, there the weights are different. So what it tells you is both from a top up and bottom down view, there is a uniqueness. Now, remember, this doesn't happen much in large cap, and even in mid cap, there's an overlap. But in a small cap, you clearly have the benefit for an investor to choose from both. Now, the simplest way is split it half and half. But I think depending on the nature of risk appetite the client is, if you're really aggressive, then maybe you'll give a slightly higher overweight on Abacus. But then if you broad-based play, which is, if you look at the way Helios is, they got a much wider variety of exposure to the small cap universe. That's why if someone is really confused, going 50-50 is the simplest answer.
Okay, because you mentioned sectors, right, Santosh? Like you said, right, Helios is more leaning towards manufacturing defense, whereas there's Abacus which is more tilted towards financial, healthcare, etc. Do you think that this is genuinely, from a conviction strategy point of view, or do you think that it's just valuations at play that both of these are viewing differently? I mean, just want to understand the ideology behind picking completely going heavyweight on completely different sectors.
See, typically in a small cap portfolio, they try as much as possible to be bottom up in terms of stock picking.
Correct.
Now, when you bottom up stock picking, that's when your sectors fall into play, and then you actually put guardrails around not being overexposed or underexposed. And that's where the organizational or the fund manager style of which sector that you want to bet on. Not to forget, it begins bottom up and then you kind of trim it to the sectoral exposure that you want. Now, in terms of valuations, when you look at it, the weightages that you have to the particular stock or the sector tells you what you're betting on. Now, both of them clearly seem to have found some valuation opportunity in the financials. And beyond that, if you look at Helios, it's got auto, and he's also got slightly equivalent or higher exposure than Abacus in healthcare. Whereas in Abacus, you also have consumer discretionary, which is not then Helios going for you. So even in terms of valuations, I think it's the perspective that the fund manager brings in. Not to forget, don't get carried away by just the sectoral valuations. It's also the stock valuations that matter, even within the sector.
For the cash position, what does it tell you about the strategy of both of these, right? Because you're seeing one at almost a 2% cash levels versus one at a 13% of cash levels, where we're seeing volatility in markets right now. But at the same time, in the past 2-3 odd months, we've seen small cap pick up pace. What does this suggest about the approach of both of these funds?
So to begin with, clearly the last 2-3 months, and especially the common point being since the time Abacus launched in the month of March, cash has become a drag simply because after the kind of correction we had in the month of March, April was a very good month for small cap and mid cap. So holding cash is a drag. But not to forget, Abacus was launched in the month of March and they were conveniently building the portfolio over that 2-3 month period. Now, we'll only come to know whether they're going to deploy cash sooner or they're going to hold cash as a strategy. Now, when you cash as a strategy, in extremely short, fast bull runs, you will have a drag on the portfolio performance. Whereas someone like Helios would have caught up a lot of the upside in a month like April. Now, clearly, Helios has got no cash left and they're fully invested. Abacus, at the moment of pulling out this data, has got a decent amount of cash in the portfolio. I think in a typical small cap portfolio, cash time and again will be used to overcome concerns on valuation, to overcome concerns on keeping the powder dry, to seize opportunities.
Okay, got it. You did mention this part, right? That both of these have almost an identical AUM right now. It's around 1,000 odd crores. Now, because we've always talked about this, we've always known that when it comes to small cap names, liquidity is an issue. At what given point of time do you think, or at what AUM, do you think does the small cap strategy start to face this liquidity issue? Because at one side there is Abacus, which also has a large cap exposure, but Helios doesn't have that. So how do you view that aspect?
Well, that's an interesting point you make, because in small caps, today at 1,000 crore, both seem attractive, both in terms of the portfolio and the size. But as the size grows, we'll also have to keep this size in respect to the market in itself. Over the last 5 years in particular, even the average size of what constituted a small cap has changed. What used to be 500 crore, 1,000 crore, or 2,000 crore small cap, today an average small cap is in the range of 10,000 crore. So when you look at that, today, up to 10, 15, 20,000, I'm sure the portfolio manager will find it comfortable. Not to forget, today you have small caps in most AMCs becoming the largest fund. In fact, you have a few small caps which are in excess of 40, 50,000 crores of AUM as a scheme. So what it tells you is that this 1,000 crore has got a huge runway, even if it becomes 10 or 20,000 crores in size. I think the portfolio manager will find it comfortable, and relative to the market opportunity out there for the existing and older small caps, if an investor is looking specifically from a size constraint, this is a sweet spot to enter into a small cap with smaller size, because they can buy meaningful allocation to the stocks they want to buy into.
Got it. And just out of curiosity, if somebody is looking at the entire small cap universe, these two funds as compared to the already established funds that are there that are tracking the small cap space, how would you kind of differentiate them, and what advantage does these two have apart from what you just mentioned?
See, largely these two funds should not be compared to any of the funds that are already present in the past, because they all have something called track record and a history of managing market cycles. Now, some of the small cap funds have 10-year, 15-year history, and they have shown what they can do in good times and in bad times. Now, these two funds, we do not have data, even though the fund managers, even the fund house has got great reputation and credentials to back choosing their portfolio. We do not have data. So, for an investor who's starting out today, for them, you're basically betting on the portfolio manager and the fund house in terms of navigating this style and this category of funds. So clearly from a data perspective, we are at a little bit of a disadvantage, but this is where you stick in your neck and say, I'd like to bet in on the fund house style and the credibility that the portfolio manager brings into the table for this category. In fact, that's one of the reasons why even they would have come out with a small cap fund, is because they feel they can add value to this segment. And there's another angle which makes this considered as a part of the portfolio, is that if you are looking at a small cap fund, and when you look at the older funds, even though they have a track record, but you may be a little wary due to the size. So brings in advantage to them. The older funds have the track record advantage.
Okay, got it. Santosh, just one last question from my end, and this is a broad end question that I want to ask. That if you just take the data of the last 3 odd years, right? 3 or 4 odd years, we've seen a significant rally in small cap names, and we've seen a significant correction as well. Now what we're seeing is that they've bottomed out and they've started to pick up. Considering that, there's always volatility attached to small cap names, or there's more risk, in fact, not volatility, I should put it this way, that there's always more risk attached to small cap names. Is it fair to say that somebody who's trying to or is okay in taking that particular risk should only go ahead and invest in both of these names? And if yes, what are the metrics that he or she should be definitely tracking while investing in these small cap mutual fund names?
I think you said it well. Generally, the small cap index and small cap investing is a slightly more aggressive roller coaster ride. In good times, you hit the ball outside the park, you make almost 50-100% greater alpha than the index. And in bad times, similar to what we experienced in the last year and a half, you've seen a complete depression and compression of the prices in small cap stocks, and therefore the NAVs will go down. Now, we know that from a stretch perspective, that when you make your investment horizon 3 years or 5 years or maybe even a 7 to 10 year period, clearly there's a massive amount of value that is accrued by investing in small cap funds. India generally is a very, very sweet spot for small cap stock picking. And therefore, if you come into a good fund which has got the ability to pick stocks, you will be favorable in terms of your outcome. Now, both these fund houses, Helios and Abacus, come from a very strong pedigreed fundamental investing background. Right. Mr. Sunil and Samir Arora and Dinsha Irani from Helios. Yes. Names. In fact, they are the oldest names in professional investing that we have in India. So if you notice that both these fund houses have a great track record of the portfolio managers and the CIOs and CEOs having seen market from multiple cycles and multiple decades. If you're a new investor, considering that you have a lack of track record of the particular scheme, but then if you believe the portfolio managers have the mettle and have the pedigree to deliver, you are in for, I think, a good outcome, because sweet spot in entry, sweet spot in AUM. And if you believe that these portfolio managers are right to manage your small cap, you have a winners. Both of them are winners on hand.
Okay, Santosh, thank you so much for explaining this in so much detail and wonderfully, and of course taking out the time and speaking with us at NDTV Profit.
Thank you.
All right, viewers, with that, we're completely out of time on this edition of Your Money Matters, but do stay tuned for more news and updates on the other side.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
R.S. Rajagopal Sastry is with us on the show. He is Group Chief Financial Officer, Endurance Technologies. Mr. Sastry, thank you so much for joining in. I'm hoping I'm getting the pronunciation correct. So exciting things happening for the company. Tell us about this foray into the two-wheeler battery packs, the commencement of production. What is the client base looking like? Is it your largest client?
This is not our largest client. This definitely is a very important client in the industry for us, and we have been growing with that client rapidly in the past 3-4 years. And when you talk about foray into the battery packs, we did start it quite some time ago when we acquired Maxwell, and the battery management systems which we used to supply was already in the battery area. Now we have started as a forward integration. We now make the battery packs using the Maxwell's battery management system and some patented technologies which we have put into the battery packs, and that's how we are now in the battery pack area.
It's not your biggest client, so it's not Bajaj Auto.
We will be coming out with a name very soon, and you will know exactly.
No, because you said it's not our biggest client, but a client that we've been growing with. But it's one client. What is the space and scope looking like? Because it is also a bit of a crowded area, isn't it?
So when it comes to battery pack management, battery pack assemblies, quite a lot of OEMs do it themselves today. And this, because this is more like an initial setup and it is in its nascent stages. And as we see that the industry matures, we will look for specializations in the battery pack assemblies because it calls for a lot of technology. There is a bit of battery management systems in it, and there is the way you put your battery packs, the cells together to make intelligent batteries, and also the overall supply chain management, the quality standards, maintaining the warranty of it. All this becomes, they become differentiators. So it is pretty big space, and where we are today, this has got a potential to grow to 600 crores per annum business. This one order, one variant, which we have just started with, that's a two-wheeler sales.
So it has potential to get to 600 crore. That was exactly what I was going to come to, which is that 17th of June is when you commissioned the facility. I understand that you want to take it up to 70% utilization by October, which means that you're ramping up very quickly. And in the July to September quarter itself, you'll have a sizable contribution. What can that per quarter contribution look like?
In terms of contribution, we will be reaching at least 50% of our aspired 600 crore run rate for this model within the first quarter, because the demand is huge and we have done, because we made the first announcement in 2025 June, if you remember. So there have been a lot of preparatory work which went in to get all the certifications from all the relevant agencies, get the design right, get our testing right, so that we can supply. So we are well poised to get at least half of that peak rate in the first quarter itself.
Talking about 600 crore annualized, right? So I'll have to apportion that. Okay. And when you're talking about the four-wheeler battery packs, for which you're making an investment right now, what are the timelines and what is the kind of contribution that you anticipate from that?
So the actual numbers in terms of contribution, we will disclose soon, but we are in discussions with at least 2 OEMs. Because the moment they could see that there is a proof of concept in the two-wheelers, there's a lot of interest in the four-wheeler manufacturers too. So it needs a different kind of batteries, like these are lithium-ion LFP cylindrical batteries for two-wheelers, and for four-wheelers and the battery energy storage systems, we need prismatic. So we are just starting the investments, and we are working towards getting these nominations and also start off business for the other businesses. So that would be, we should give ourselves at least 2 or 3 quarters before they become mature, and we are able to supply them full time, because there's also this certification and homologation in between.
When one goes through what you said in the con call, like there are various line items on which you are doing capacity expansions, right? I would love to know, as FY27 moves ahead, when do some of these capacities, or FY27 or 28, when do capacities come on stream, and do any new capacity additions add meaningfully to your ability to have top line or EBITDA growth?
Yeah, 4 prominent expansions which we did. One is the alloy wheel for two-wheelers that will see peak production, that is 600 crores per annum in October. The run rate will start in October of peak production. And the other one is the battery pack, which we just announced, that this also will reach its peak production, let us say in Q3, Q4. It will reach its peak production capacity. And of course, the additionals, but there is no roof as to how much we can grow, because there's a lot of business which we are working on, and that would grow much more. And next one was our plant in Shendra, Aurangabad, which would cater for specialist aluminum die casting for the four-wheeler electric vehicles and for the export market. That we are anticipating in the coming quarter. We should see a start of production. And there too, at least in the first year, we see 250 to 300 crores of revenue, and following which we have a lot of ramp up in those businesses too. And the fourth foray is into the battery, braking systems plant, which we are having in Chennai. And that will see its peak start of production in October. So this is how we have the phase.
So then 2 questions really. For FY27-28, seems from what you've told me, a lot of this will have a meaningful impact in FY28, I presume. And in your con call, you had mentioned that while Q1 might have some volatility due to all that's happening in geopolitics, if everything normalizes, Q2 onwards, things will be good. It seems that things are normalizing. Are we expecting a tough Q1 and a good Q2 performance Q2 onwards? And does FY28 see a meaningful bump up in revenues because of all these capacities coming on stream?
Definitely, yes. We are very positive. All kinds of modeling which we have done and the calculations of the past orders won, new RFQs which we have, we are seeing a very strong revenue growth. And from a profitability perspective, yes, we are right. The Q1 is a tough quarter with all the commodities going in. Aluminum went up by 120 rupees per kilo. So we will have some catch up to do there, either in the form of a lag in terms of getting our pass-throughs, or the percentage in terms of EBITDA percentage looking bad initially optically. But going forward, we see that a lot of stability coming in, and all the initiatives which are taking in multiple areas will aid our top line and also the bottom line and growth across multiple sectors. It's a very balanced approach we have right now.
Would you qualify that with some numbers? I know that PAT growth was impacted due to those accounting issues, accounting standard changes. But are there some numbers that you're giving for FY27-28, revenue, EBITDA growth?
Generally, we do not give the numbers, but I can definitely say it's very strong.
Okay, just one question, Mr. Shastri. When you're talking about battery packs and growing into that space, two-wheelers and of course four-wheelers as well, versus the other EV ancillary business that you do, what